Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello!
We made it.
We did make it, didn't we?
Yeah.
It's hard doing a 5-day bid after you had time off for good behavior last week.
It was true. That was a long 4-day week. I mean, it seemed like it was long. I don't know. This week,
Yeah, you had to take a bathroom break on Tuesday. That was a huge change. I was like, "Whoa, is everything all right?"
What? How's your prostate, bro?
1 day off.
It's called age. It's called age. Now, what's your excuse?
I have none. Too much coffee.
Yeah,
Too
his excuse is that he drinks like 2 liters of iced coffee a day.
It's the same as the 2 liters of hot that my dad is drinking.
Yeah,
I mean,
the apple doesn't fall far from the tree.
Yeah.
The genetics are geneticking.
How do you think we got this beautiful gray hair? I mean, come on. It's not low cortisol levels.
I will tell you this though, Nikki. I talked to my parents, and my parents watched the show, and my mom was like, Nikki is so smart. He really knows a lot about trading. And so my mom was very
like I said, the apple doesn't fall far from the tree.
Thank you, Mama V. Appreciate you. Yeah, my mother was really, really smart. She was, college grad, really, I learned a lot from her.
You get it all from Gina.
Yeah.
They go low, you go high. How was your night last night?
Mine?
Yes.
I'm back in the pickleball scene.
Wow.
I know. I feel kind of, I don't know. It's gotten a bad rap and it's kind of lost its momentum, in general.
Really? You think so?
A little bit. But I'm back. And the people I used to play against.
How many paddles do you have? I've never played pickleball in my life. I'm not against it.
Great game, Vanetta. You should try it. I mean,
I just have one, my main paddle, and then I have another one that I used to play with. That was like my beginner paddle. I still have that just in case I play with somebody. But the thing was, I ran into a lot of the people that I was playing with couple months ago, like in the middle of winter. Well, more than a couple months, probably been like 5 months. Okay, so it's been a long time. So I ran into them and they were like, "Where you been?" And I was like, just pretty lazy. Just
you're like, lazy. Aspen. You're like, I've been at my place in Aspen.
That I didn't think of that. I just thought more of like, I have no excuse. I've been mostly just sitting on my couch after work. That's really been my MO. So I was like, yeah, I think it just got to a point where I needed some physical activity. So I'm back.
That's good. So do you need to know like how to play tennis, or that it doesn't matter with pickleball?
No, it's like ping pong on a bigger table. It was human sized.
Not necessarily the rules, but just being able to hit the shot kind of thing. But it's a great sport. I mean, it takes more movement than you think, more like quick twitching movement than you think.
I mean, all the foot and ankle doctors I see on TikTok are like, stop playing pickleball, y'all.
Yeah. You wouldn't think it would be a Batista type sport because it's more
because you're bottom heavy.
Quick and finesse is kind of like, the two things that you really need here. And, Batistas were more like bash into the wall type thing. So
that's fair so far.
Yeah. At least, me and Gina.
Do you play with your girlfriend? Do you do like a mixed doubles?
We're working on that.
Aww.
We haven't worked on it yet, but it's something to work on.
It's in the plans. It's in the plans.
Good. She's asked me before, can we play? Blah blah blah. The thing is, I'm a snobby athlete. Okay, I don't like to, I got to be I got to play at the higher level.
At your peak performance that you're capable of.
I cannot believe that you just fixed your mouth to say that.
I'm just being honest. If I'm playing a sport, I gotta be competing to win. I don't want to be,
Yeah, you get into a couples one or a mixed double.
Yeah. We'll work on it.
And you just take it for what it's worth,
Yes. Yeah. Totally.
Yeah.
Well, if she finds out,
definitely end the relationship. That's all.
For sure.
Yeah, if she finds out that you said that, you're gonna just have to start playing handball then.
Oh, she's here. She could probably hear it.
22 years for me. 21 married, which by the way was my anniversary when I was away. So thank you very much.
Congrats.
Yeah.
Very shocking that it lasted so long.
39 years total under incarceration.
Yeah, good job out of you.
Quite an accomplishment.
Wow.
But we've never played a sport together, ever.
Why not?
She knows her limitations, and I'm a lot like you.
You never got invited to the Scott Sheridan Invitational because didn't Scott, before he moved, didn't he have his own pickleball court at his house?
Yes.
Yeah, with Beth. Yeah, it was Beth and Scott. I never got that invite either. It was really sad.
Well, you were second tier then. You're first tier now.
Yeah, that's true.
Yeah, no, we never did the double. We never did the double thing at the Sheridan Invitational. Speaking of that, you been watching any of this golf?
I watched a little bit of it. I mean, all the live guys are just absolutely horrible. I mean,
I heard Freddie Couples was just lighting it up, and I'm like, Freddie Couples.
I think he's 66 years old. I think he has 32 made cuts at the Masters, which is incredible. It's something like that. It's 30 something. I mean, his swing is just as pure and beautiful as it gets.
Just real fast, do you want to hear a funny story? I was listening to Jim Nance on the New Heights podcast because it's my best friend's husband. And Jim Nance, I guess he went to school in Houston and he played on the golf team. And there's a group of guys in the room and they're like, okay, what do you want to be when you grow up? And he's like, well, I'm Jim Nance and I want to grow up and I want to, be the announcer for the Masters. And then his teammate next to him was like, I'm Freddie Couples. I want to play in the Masters.
That's amazing.
And it came true for both of them.
That's incredible. That's
great.
incredible.
I didn't know they went to school together. I didn't know. I was like, that's wild.
Yeah, that's a pretty cool coincidence. Wow. Yeah. I guess not even a coincidence. That was earned.
Yes, that was.
They made that a thing. They didn't happen upon it.
Nikki, what do you think? 2 hours of the Masters available only on Amazon Prime today. What?
Really? At what time? I didn't know about this.
Yeah, Thursday and Friday. So 2 hours of exclusive Masters content available only on Amazon Prime.
Is it put live
I don't know. I just read an article. I don't know.
Yeah, I don't think they do it live because the Masters, they hold the keys on basically everything. I mean, all the merch is only sold there. There's no online merch. Obviously no cell phones on the facility. So you can't front run anything or tweet anything out. I'm sure there's people that get through with it somehow. But I'm surprised that because the content wise, they stream basically the whole thing on their website. So anybody can watch it. I'm surprised that they made some sort of deal with Amazon.
Yeah, it's only the fourth media partner with the Masters, although it is fun to walk around the office and all the dudes, they just have it in the corner of their screen.
Of course. You have to. Come on. It's golf. It's not like you have to pay attention the whole time, but you glance over and you see, somebody make a 80-foot putt. It's pretty sweet.
Yeah, you can tune in, tune out. It is really built for that. I agree with you.
Yeah.
So are you guys going to lock in and just watch the Masters this weekend?
I won't.
I'll probably do a little bit of that. We'll see what happens. I kind of want to golf. I mean, Sunday is supposed to be mid-70s, so might try and get something on the books.
Well, we almost hit 70 yesterday. We may have hit 70. I know we're going to possibly hit 50 today. Maybe 70 on Saturday again. The market up, down kind of thing, but not yet.
Out of control. Bat, how was your evening? What'd you get up to?
My evening was good, but I actually thought all last night about a mission that I'm going to send Nick on.
Oh, great.
Yes.
Like in the
And what is
Mormon
this?
sense or like the Artemis 2 sense?
Yeah.
No, in the true search for some of the best pizza in Chicago. Search Pizza Dada, Dada.
Oh, from Portnoy?
Yeah,
I saw it.
Best New York pizza in Chicago.
Yeah.
Oh, I didn't see this. Where is it?
It's in the South Loop, 125 South Clark.
Oh, that's by me.
Yeah, it's 2 miles from the office.
It's gonna. I mean, like when he posts those, it's going to be lines across the outside the door. It's going to be around the corner for the next.
That's why I'm sending you
weeks. Oh, that's great. Yeah, I'll do. You know what? I have a perfect idea. I'll go pick up the cash that we won.
Now you're thinking. Keep going.
Yeah, and then I'll go get the pizza. I'll pick up the pizza, and I'll just drive the pizza out to Glenview as well.
You see, but you're not thinking, son. First, get the pizza. It's all, and then you go to the house because it's going north again. Then you go to.
That's true, but I was thinking.
But it's going to be cold, and then you won't get a good feel for if the pizza was good or not.
Yeah, and the pizza might get a little cold, and I can get on right at Ohio and take the expressway.
That's right.
So I should do the cash pick. I'll do the cash pickup first, the pizza the second, because then the pizza will stay warmer, and I can hit the expressway, so I get to you even quicker. What do you want for drinks? Should I pick some I got Coke Zero up on the way or something like that?
I got the drinks. Don't worry about a thing.
Okay. All right. I got it. Coming your way.
I like how you guys are operating like gas is still $2.50. I don't drive anywhere. I'm not driving again until Monday.
Oh.
No, I'm just kidding.
No.
Too funny.
All right. Well.
Anyway, does that mean you're not going for me?
No. We can exchange for a Barnaby's. I could do that. Like you bring a bar bake.
Yeah.
Try and get you one of those.
We can do that. We can do that.
Well, you missed the shenanigans yesterday, Tony. We were supposed to have pizza for lunch in the office. And then there was another option of like a salad, but we were like waiting for the pizza. We were going to get it from a place called Pat's, but then they had to call Tori. Their ovens broke. She had to call an audible, call Lou Malnati's. She's like, look, I got a bunch of hungry traders.
Yeah, I got 100 dudes here and they're starving.
Well, but we didn't get lunch until like noon.
No way, noon?
Well, we normally eat at 10:30. Nikki was so bad, right? It was bad.
I didn't even notice because I was in and out of recordings the entire time, so I didn't even know. But that sounds horrible.
That was warm.
Yeah.
Yeah. It was no bueno for the kids. So, but now I want pizza. Darn it. Anyway, we got a great show for you today. Fantastic Friday. Hope you read enough books to get a pizza party today on Tasty Live. Remember that? Oh my God, it was so good.
It was great. I never was much of a help in those in that grouping.
Dude, I straight dominated.
Oh, I'm sure. I appreciate the pizza party that your kind would provide for me.
It's like I'm gonna crush it.
Yeah.
So many books. Anyway, we got a great show for you today. It is a fantastic Friday here on Tasty Live. A lot of really good content headed your way at the top of the 8 o'clock hour. We got Jamal in the house. The week in stocks. What a week it's been. Earnings season kicked off. There was a ceasefire that was announced. We got PCE, CPI, GDP. You know me. Jamal's going to recap all of that at 8 o'clock. And then at 8:40, we have Fast Market. It is #FanFriday. So viewers submit their trade ideas to the bats. It's going to be interesting to see what the viewers came up with because there's been a lot of movement in the markets and some opportunities. So Fast Market headed your way at 8:40. Then 9 o'clock for market measures. Management mechanics for 0 DTE expected move spreads. Nikki, break it down.
Yeah, it should be a good one. So it's just looking at put spreads again, and we're going to look at the money options with various wings. So we'll go like 10, 20, and $30 wide on those put spreads. And then we're going to look at like kind of a more selective management. So we're going to talk about we're going to look at 25 percent of profit and then closing the losing trades at noon. We're going to look at 50 and then closing them at noon. We're going to look at taking those same profit targets and holding them until expiration. So it's kind of a more, we've done a lot on these put spreads that have been amazing for the last couple of years. This year kind of you've given a little bit up, but just kind of expanding on different management there for those trades.
So what I'm hearing is I could be done trading by noon every day.
That is the deal. That's the ideal situation. Yes.
Love this. I love this. Great. And then, of course, this just makes me laugh. At 9:20, it just says Jason Chow.
He needs no other what am I trying to say?
No other description or introduction.
Yeah.
There you go. So Jason is going to be in the house from the Tasty Trade side of things. Always fun when Jason comes in with his bubbly personality. So good for that. Absolutely. And Liz at 10 o'clock. Liz will be joined by TP today. So we are really making TP work the most he's ever had to work in his life.
Yeah, his interview with Mark Faber the other day, a classic Tasty event. As Mark lit up a cigarette and drank a beer the entire time. It was pretty awesome.
I was like, what year is this? It
was awesome. The two of them, and they're just like big perma bears, and they're just like doom posting, just like talking about, it's just great. It's great. We love it.
I mean, nothing says volatility like a Marlboro Red, I guess.
Yes.
Too funny. But yes, you can also catch our content if you did miss that interview with TP. Check us out on YouTube. Hit that like and subscribe and that bell notification so you never miss any tasty content. We're doing big things on our YouTube channel, so give us a follow. Thank you very much. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It is April the 10th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Like I said, you're going to get CPI today, and that number is expected to come out in about like 13 minutes, and it's going to come in hot. So, batten.
Or it might come in cold because the expectation is hot.
Okay.
Or it might come in hot and the wording is cold.
No, the wording would be hot and it comes in hot, and therefore the tradability and the expectation of it comes in cold.
Well, right now you have a completely unchanged market. Bonds are zero movement. Even the S&Ps are up $1.
Well, getting to my first headline, has the ceasefire rally pushed stocks too fast, too furious? We saw massive up moves as we see the inklings of a start to maybe a wind down of the tense geopolitical situation in Iran. The U.S. stock market closed higher yesterday on optimism that a temporary ceasefire might hold. The Dow Jones was up 3.5%. The S&P, NASDAQ, and Russell all extended their gains for a seventh straight session. Was this too fast? Too much? Too soon?
I think I even said it to Nick when he bought NASDAQ futures when they were down, I don't know, maybe 50, 60, something like that. Mm-hmm. And I said, that's probably the hardest pull right now. Volatility was kind of staying bid at the time. We had just rallied 150 handles the day before on the S&Ps. We were down like 10 or 15 on the S&Ps. It looked like volatility was staying bid. And I even said to him, I said, that's the hardest pull. It's probably going to be the right one. I couldn't make it. I thought it was a great trade by him. He ended up taking 30 handles on it or something like that.
80.
80?
Oh, excuse me.
Yeah. I mean, it short me every time. I mean, my God.
But
I closed the other one a little bit higher than that too.
Awesome. But the rest of the day yesterday, and I think was the most surprising thing. That's what the market always does. It always kind of surprises you. We just caught a bid and we just upticked well into we were up 50 handles yesterday. I think we closed up 35 or something like that. But we were up around 50 handles. I think it was a very surprising move on time, myself included, surprised by it, the strength of the market. And volatility, and then volatility just collapsed.
Yeah, totally. With Mikey yesterday, I was talking about how it felt a little FOMO-y. Like you had all last week, nobody, even my very own, my lovable, to steal from the Chicago Bulls here, Chris Vecchio, my always bullish guy, was not, nobody wanted to buy last week.
Yeah.
And so
nobody except maybe one or two people here.
Yeah, sure. I'm saying public-wise, nobody wanted to buy. We were crashing. You have this face ripper of an upside move. You get the kind of headline that everybody, that the people that were hoping for more downside were afraid to see, of like this like ceasefire, whatever we want to call it. Obviously, like it doesn't really seem like anything has really changed all that much.
Yeah.
But the headline itself and the kind of just capitulation of markets. So you get this huge move. And then everybody says, oh, shoot, I should have bought them last week. I missed out. I'm not going to miss the rest of this. We're going to, it's going to be a V bottom. And it felt kind of like it was like the everybody that missed out on the 10% that we rallied in the last like 8 trading days were like, okay, I have to get some of this. And you saw these like outsized moves, like, SMH was hitting new highs yesterday. Like it not only reversed the entire move, but went to new highs in a down market, which is like, is a bullish sign. Like that's a good thing.
It wasn't a bearish one.
No, but it felt like it was a little bit of a catch up, a little bit of a FOMO, a little bit, a little bit not good. Yes.
Yeah, every headline I read on the way down was how, hedge funds and even some retail, taking profits, getting out of the market and everything else like that. Now you'll hear all the other headlines going the other way soon.
Yeah.
Two quick questions. One, what's the expected move for today? And two, what, if anything, are you doing heading into the weekend?
Even the S&P's expected move, which is an excellent question, is around 33-ish, about the same as yesterday, a little bit lighter than yesterday. I think yesterday was around 35 or 38. That's on the 0-day options I'm looking at on ES. Yeah. I don't know. I don't think it's anything different today. There are still some stocks. Microsoft comes to my mind, and I'm out of Microsoft. I had to roll and got bailed out yesterday the day before on that move higher. I think Microsoft is really interesting here, has not participated with the market at all. It's got extremely high IV rank of 92. It's got earnings coming April 20th. I know you have positions in there already, Nick. But that would be an interesting diagonal type trade, I think, with some upside, an upside play. That would be the one I'd be looking at.
Yeah, I think this is the first time, other than like in the beginning of the year where I was scalping on both sides, but I actually am basically flat to slightly short delta. I actually got long volatility into the close yesterday. I just bought shares of UVXY. I don't know if CPI is the thing that pumps volatility into this market, but I just don't see volatility coming in much more at this point. And I think, we kind of reversed the trend of Monday highs into Friday lows last week. And so I think kind of this week, you're going to get a little bit of like, back to that move, that trend of like Friday, a little bit of risk off just because the weekend has been so uncertain. And I don't really think anything has changed all that much.
Shifting gears to oil, Iran attacks a crucial Saudi pipeline and production facilities slash the kingdom's oil output. Saudi Arabia's key pipeline to reroute oil away from the Strait of Hormuz, which is still closed, came under attack by Iran recently. Just want to talk about crude oil as we finish the week.
It looks like it's baked in. Crude oil is actually down 30 cents, 97.5, got back up to 100 last night, down to right around here. It's near its lows for the session overnight and right now. It looks like it's baked into the market. Volatility. Let's take a look at that if we can. What is it? OVX.
Well, OVX. It won't open it. Like you won't see any.
Right, but we can see where it closed yesterday, can't we? CG?
Yes, yeah. It's at like 81.
Yeah.
It's the lowest we've had since kind of popping off of this situation.
Yeah, so I mean, listen, you can place your bets now in oil, bull or bear right now. I mean, because you've got a good IV rank of 63. Again, it's not in the 80s, 90s, and hundreds where it was, but the price isn't 120 or 110 either. So I don't know. Oil's going to still be in play. It's going to be subject to the news, but right now, market's digesting everything, which might make it for the bulls, might make them an opportunity to grab something.
Yeah, it's definitely killed all bullish and bearish like strong narratives because Thursday you had oil near highs. It was at like 105 into the close. You had markets basically flat into a long weekend where there was tons of uncertainty. You had the deadline looming, all this sort of stuff. If you had like, I don't know, if you've been trying to be very one-sided in this market, you've gotten chopped to bits.
Oh no!
It's been a hard trade.
Don't forget those oil futures are going to roll soon. There's only 6 days left to them being the front month. I'm talking about the /CLK contract, and then we'll be going to the M contract, which is trading about $7-8 lower, around $88-89 versus 97 and change.
Yeah.
In an interesting partnership, I guess, U.S. Treasury Secretary Scott Bessent and Fed Reserve Chair Jerome Powell convened an urgent meeting with bank CEOs to warn of the cyber risks posed by Anthropic's latest AI model. Anthropic launched Mythos earlier this week, but stopped short of a broad release, citing concerns that it could expose previously unknown cyber vulnerabilities. The two said the meeting held at the Treasury Department was aimed at ensuring banks are aware of the potential risks posed by Mythos and similar models. I believe banks set to kick off earnings next week.
I actually think Goldman Sachs, I'm glad you mentioned, I think Goldman Sachs comes out in the morning on Monday for those.
Oh, wow.
Okay.
That's what I looked at. That's what I found. I can do some more research to find out for sure, but that's what I saw. Yeah, banks. I don't know. Not the sexiest of places to go, but they do have earnings starting next week. You're 100% correct. Bank of America is around $52 or so. Its expected move is about $1.50 or so. Not it's not. You got to have some conviction here. Banks have caught a little bit of a bid like the rest of the market.
Yeah, these headlines have gotten, I mean, I get it. The AI is going to be a part of everything, but to every single day or at least once a week, we're getting a new sector in this market that's just getting destroyed by AI. I find it hard to believe that it's going to be that widespread that like things are just gonna be controlled by an AI platform. I don't know.
Buy cybersecurity stocks if you
have that
sky is falling kind of group.
Last week you had that kind of rally back, or even earlier this week, like in CrowdStrike was at like 430. It's now at 400 again because like that narrative has switched a little bit. There's a lot of trigger happy moves in this market. you got like this headline move, and I think it's paid to kind of fade a lot of these. I mean, some of the service stocks like ServiceNow, CRM, Adobe, I think those are like really on the cusp of where the bigger effect is going to be. Like a cybersecurity stock, I think it's a little bit overstated because you're going to need something to police the new police, which doesn't walk and talk and have a brain. It's just a freaking algorithm behind the scenes. So you're going to have something to police that. But it's been very narrative driven. So you gotta be on your toes.
Since you mentioned Crowd, I'll put it up. I'll tell you what it's doing. It closed around 395 after trading up to 420-ish and change on the opening. It looks around 400 right now, up around $6. You're gonna have your number come out here in a minute. Even the S&Ps are up 6. Nasdaq's up 45. Volatility's up by 3 cents. The Dow is unchanged, and bonds are down 1.
Yeah, volatility will be the interesting part here.
Yep. Totally agree.
I just pause before we get like stuck in between stuff. So how's it going?
We got 6 seconds. It'll be the longest 6 seconds until it comes out, but we'll see.
Well, even the S&P, like I said, up 6 or 7, just went up around 2021. Now they're up 16. Fade the first move, son? That's what I'm curious to know.
I mean, I'm positioned for it. I'm short MES and the Russell and long some volatility here into the weekend. So I'm hoping to get out of some of it because I feel like the weekend risk has mostly been upside risk. But the
velocity seems to have been that way. Like we talked about how we were kind of stepping down. It was like I said, it felt like the complete opposite of my old market. Where you usually fall out of bed and step higher. We were stepping down and zooming higher. I agree with you. I think some of that upside tail risk is off the table right now, in my opinion.
I do appreciate how this war has been very 9 to 5, Monday through Friday. I love we can just clock in, clock out.
Well, not really.
Accommodating. Thank you.
That's not true at all. I mean,
no. Sunday nights have been big movements.
I know.
Trump waits till the markets are closed. He doesn't do anything during the day. He's had a handful of pressers, but most of it is Friday at 3:30 Central or 4 Central. Sundays, before the market opens. I guess that one's a little bit
having a good time.
But, yeah.
Hey, in other tech news,
oil is down 30 cents. Just to mention that.
Thank you. Hey, in other tech news, Amazon CEO Andy Jassy released the annual shareholder letter where he once again made the case for huge investments in AI. He's like, look, losers, we're doing $200 billion on CapEx. Deal with it. Yeah. He said that AI revenue in the cloud computing segment has hit a $15 billion annual run rate. Amazon also said that their SpaceX competitor, Leo, will be looking also to launch in the second half of this year. Amazon up small this morning.
Amazon's been the strongest of the group. I mean, it's up $20-ish after kind of just chopping in the 200 to 205 range for the better part of this year, and really hasn't gone anywhere in multiple years. I had some long delta there. I took it off. It again, I think a lot of these moves, like Amazon, Meta is back at 600. Nvidia is like at 185, kind of middle of its range. Google is back, above 300. It was at like 315 yesterday. The Mag 7s have basically caught back up to where they were, into the bottom of the down move. And so, it's been a very violent up move. And again, it felt like kind of FOMO yesterday. Felt like it was like everybody that missed the first 20 points needed to catch the next 3 points. Like that was what the trade felt like.
Well, in other tech news, Meta is deepening its CoreWeave partnership with a fresh $21 billion deal for additional cloud computing capacity as it rushes to catch up with rivals in the high-stakes AI race. Meta up big midweek on the announcement of their new AI model, and then now CoreWeave. I don't think CoreWeave was up quite as much yesterday, but not sure what Meta and CoreWeave are doing this morning.
Meta strong again today, 632, up around, let's call it $4.5. So Meta doing good. Even the S&P's up 10, volatility unchanged. Oil is down 30 cents. So far, no movement. I won't quote them again until something moves.
Yeah.
How about for you, Nikki, and Meta or CoreWeave?
No, I mean, Meta's been great. I'm leaning very long Meta, and the move was as good as I could have ever thought I would get in about a week. I'm still leaning long. I think it has some catch up. I think when you look at like an Amazon and you see it back to, $5 or $10 off of all-time highs in 3 or 4 sessions, I don't think that's out of the realm of possibility for Meta. So I have remained long in Meta.
Nvidia stock has awakened from its slumber, clocking its 7th consecutive day of gains. Nvidia is up 11.4% over that stretch. It's the longest winning streak since November of 2023. It's still trading below its 52-week high, and one analyst says that means it could see sustained gains if the AI trade comes back alive. Cap or no cap?
It's been weird. I mean, I think we talked about this into earnings too for Nvidia. And even in some regards to like SpaceX / OpenAPI IPOs, it feels like it's a hard bet for Nvidia to be 6 trillion by the end of the year. Like 5 trillion is a lot. It's a big company. Like, I feel like it's an easier thing to say, you know what, Meta might get to 2 trillion. And that's back to, all-time highs. Or Amazon might get to 3 trillion. Like, those are bets that make a little bit more sense to me. Nvidia is just such a big company already. And I know the price of sales, price of earnings, year over year revenue change is astronomical and amazing. But it feels like it's been kind of perfectly priced for the last, almost year here between 185 and 195, like just under 200. That's just kind of the value of it. It feels like I'm at least for now.
How about for you, Bat? Any insight into Nvidia?
Man, Nvidia has been the slowest moving fast stock of the 7, meaning it's been in just a wide kind of channel here. I think bulls and bears have been able to make money. The only problem with Nvidia is its IV rank has been relatively low throughout this whole move. It never caught any kind of volatility to the upside or the downside. So you have to be directional on here.
Yeah.
So Nvidia, I haven't traded too much of. I'm leaning a little bit long in Nvidia, but I'm long right here, maybe a couple points lower after being wrong on the move down. So,
well, something that you did trade this week is Palantir. Big short investor Michael Burry has long been a contrarian, and he's still got a bone to pick with Palantir. The stock dropped yesterday after a characteristically blunt post on X where Burry claimed that the AI startup Anthropic was effectively eating Palantir's lunch. What are you doing in Palantir? What is Palantir doing in you?
Michael Berry's winning against the bat right now in Palantir. It looks like it's down about $1.50 this morning on lows. Yeah, you are correct here. This is about as low as it's been in all of 2026. And I think if you go back further than that, really into like the summer of last year, or pretty close to the summer of last year, they've taken Palantir out to the woodshed, and that's why I had a little bit of a omnidirectional bullish trade in Palantir. Great IV rank of 45, about as high as it's been. It does have earnings coming on May 4th. I love these headlines. Usually these headlines signal the stop to a move one way or the other. So that's what I'm playing.
Yeah. And I did a video on his like trade that, or at least speculation on what the trade was. And, you have to keep in mind also that the things you hear from people, like it's sometimes it's talking your book, and sometimes it's just stirring up interest. It's not necessarily the case that he has the same position or full position or different position. I mean, these guys report quarterly, so like there's not there's a lot of gray area here. So I would just be careful with everything. But I agree. I think with high volatility, I think it got caught up in kind of the war stuff too, because it's kind of been looped into like national security stocks of sort. And so I just think it's, it's just a volatile stock. Like the thing was $15 a year ago. Like it's down to 130. It's not like, this is a crash.
Well, speaking of not a crash, Marvell Technology stock rose again yesterday following positive analyst remarks. By the close of trading, Marvell's stock price was up nearly 5%, but that doesn't tell the whole story. If you just go back to last week, the stock was trading at like $100. Now it's up over $120. What you doing?
Yeah, Marvell up another $4, and good for them. Marvell's taken me out to the woodshed way too many times, so I'm actually rooting for them to become a Max 7 stock at this point. I mean, they deserve it. Yeah, this stock has gone from, I don't know, you want to call it, the 80s, 90s, about a week and a half ago, never sold off with the rest of the market, and now is flirting with 125, 124 right now.
Wild.
Yep, it is wild.
Yeah, it's not one that I trade all that frequently. I mean, these things, some of these semi stocks, when you talk about, I know Marvell is kind of a different case, but even some of the memory stuff, the optical stocks, these are, you got to gamble with these, like week to week. Play the upside, play the downside, because the volatility in these, I'm looking at light. The implied volatility is in the front expiration, which expires this week. The weekly expiration is 190%. The stock's up $50 today. It was up $100 yesterday and closed basically unched down a handful. I mean, these things are, SanDisk is the same way, Micron. You gotta just, I would say the best way to trade them is to, when they go down one day, buy calls, because the next day they're back up, or vice versa. When they go up, the next day they're down. They're nuts, these things.
Yeah.
I'm skipping a story here, Laura. The Department of Justice is launching a probe into the NFL over media rights packages and antitrust concerns. The investigation stems from concerns about the affordability of watching games for consumers now that the NFL is offered across various broadcast, cable TV, and streaming platforms. Awesome. Great. Good. Yeah. I don't want to have 15 different services.
Yeah.
Yeah, this is probably a good thing. It's annoying.
Yeah. I mean, last year there were some really questionable in some tight games. And I know it's a conspiracy, and I know Dave Portnoy kind of, puts it out there on social media and makes you think, and sometimes you see things that aren't there. But there were some really questionable calls at the end of some games. Going for field goals, like, when you're down by, 18 with 4 seconds left to go in the game, or whatever the case may be. I mean, it was really questionable. So they're not going to find anything, even if they do find anything. But it's nice to know that they have a headline that says they're trying.
Yeah.
Yeah. And then
there's no way they're going to kill the golden goose, even if they do find something. There's just no way.
No.
Finally today, this story just brought so much joy and a big smile to my face. The world's most famous White Sox fan will be honored with a specialty giveaway at Chicago's Rate Field on August 11th against the Reds. The White Sox will be giving away a limited number of Pope hats with a special ticket package. It is shaped like the Pope's mitre with the White Sox logo to fans lucky enough to receive them. Pope Leo is, of course, the world's most famous Sox fan, but August 11th, if you buy your tickets, you can get your own White Sox Pope hat. Love this.
Shout out to that marketing team.
Yeah.
Agreed. I was thinking the same thing. They need to sell that in the store. That would be awesome to see a full stadium. Well, seeing a full stadium at a Sox game would be awesome.
But isn't that like sort of like sacrilege too? Because like you're not are you allowed to do like an imitation of the Pope?
To wear religious vestments? I don't know.
Yeah, I don't know. Like, but that
come on, guys, let's not turn this direction here. It's a great marketing. It's awesome.
I'm not saying it would apply to me. My place in hell is predestined.
Secured.
It's secured. I'm just saying, in general, isn't that kind of frowned upon?
Well, speaking of awesome baseball hats, in my edition today of Trader Taste Test, I went back to a baseball stadium and look at what they're doing down in Texas. I'm not mad at this. Watch this.
One that's going to get the most attention is probably going to be the ninth inning rally sombrero. We developed that as the next line of our Texas-sized shareable items that we've been known for over a decade now. So it's our 2-foot tortilla that we used for the burrito in 2025, and we've deep fried that and put it into a very unique sombrero vessel where we load it with a 9-layer dip, and then we put chips in the middle. It is a full-size sombrero. So while I don't want to say it's a wearable, it is definitely wearable. So we're really excited about that. The one that's going to get the most attention is probably going to be the ninth
If you've
inning.
ever watched that episode of The Simpsons where Homer is like, nacho hat, and he has a nacho. That's my dream. I want a nacho hat.
That is about as American as it gets.
It's disgusting, but yes, I agree with you.
Yeah, just like pour some like of that plasticky nacho cheese on top of there, and that is just America. That is.
So
great.
would you guys eat this? Yes or no?
I don't like. I'm not a big fake nacho cheese fan.
So I get
kind
that from your father. Your mother, she can eat those nachos.
Oh, I love it. Give it to me.
Yeah, I don't know if I think. Yeah, no, it wouldn't be my
You can blame
flavor.
me for that. I don't like the sauce, the cheese sauce. We never had them.
Okay, way to hate America. Hey,
I
what's coming up next?
We're going to take a quick 90-second break. We've got oil down about 45, even the S&P's up 10. We'll talk about the market a lot more and a look back at yesterday. We'll be back in 90 seconds. It's Tasty Live. Thank you.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a little bit of a look back at yesterday. Let's do it, my son.
Sure. Interesting little market we got here starting. A nothing day, kind of amazing. But yesterday was not a nothing day. It was a small upside move. You had about a 0.5% move to the upside here across the market. Felt FOMO-y to me. I don't know if it felt that way to you, but felt like it was kind of a, I missed the boat. I got to get in. I got to catch this last 0.5% because I missed the 10 prior to it.
Yeah.
So we'll see how that plays out today into the weekend. But it was a strong day across the board. Volatility crush has been probably the bigger story of the group, just given that you've got oil near highs. You've seen some whippiness in bonds. I mean, bonds have gone 115 back to 114. They've kind of closed right at 114 the last two sessions. Been kind of a weird shoot from the hip kind of move. It's felt like in bonds. Gold and silver, not really buying it. I mean, they've had a nice bounce, but you're not seeing like that move in gold and silver as like kind of a risk on component that it has been in the last.
I've seen the meme stock moves of yesteryear in gold.
Yeah.
And the gold silver ratio has been staying steady too, right around 63-ish and change. Hasn't really moved much.
For sure. I guess Bitcoin has kind of been a story as a risk on story. You've had headlines, around Iran taking either yuan or cryptocurrency as payment for the toll for the strait. I don't know if that's kind of part of that move, but it's been a weird market overall yesterday and then into today. It'll be interesting to see how we finish this week.
Yeah, I totally agree with you. And I mean, even the S&Ps, they're 6870. That 6850 number was always where we stopped on the way down from around 7,000, and now we're there from lower numbers. It's an interesting place. I thought we'd have a lot more volatility, or not so much volatility. I thought we'd have a lot more two-sided action in this area than we've had over the last, I guess, almost 48 hours. I guess maybe we don't have enough time. Maybe I'm speaking too soon. For sure. Yesterday was a big day for some of the Mag 7s. Amazon has been just a face ripper to the upside. I caught some of that. I wish I had more, but that was a big move. Meta as well. I mean, Meta was getting talked about how it was dead, and it felt very Google-esque from like a year ago, where everybody was like, "Oh, AI is gonna just totally destroy Google," and then it ripped everybody's face off to, be the biggest, if not second biggest company in the world. Meta had a huge bounce back to the 600 area after being like, I think it got down to like 525-ish, was kind of near the lower end of where it was trading. Huge move there. Nvidia as well. I mean, it's been kind of headline driven there, but it's back to 180 and change. Tesla has looked awful. Tesla, Microsoft have been the two where, on a 3 or 4% update in the market, those two ended the day close to zero, or if not lower. They just cannot get out of their own way. Those two, were relatively strong yesterday at points, but finished basically unchanged. They're really not finishing strong. I mean, it's not how you start the race; it's how you finish it. And these two have not been finishing the race well at all. No, they've looked awful. So, Apple, Google, had a big move on our kind of face ripper the other day. Apple has kind of been choppy. There's been some news-driven headlines there of the foldable iPhone isn't working or isn't in production or whatever, and then it was maybe that was fake news. We don't totally know. It's very news-driven on all fronts here, and you're seeing that in some of the Mag 7s. But overall, obviously a strong day yesterday from that group. Yeah, overall, just a strong day across the board. And I think a surprisingly strong one. Started the day a little bit weaker. Yeah. I mean, I think we traded down to 6,800. We're 75 handles above that right now. I just told you expect the moves around 30, 35 handles. So we've had a decent rally last day and a half. For sure. On the sector front, the top of the list is going to be our semiconductors. I mean, these stocks, as we were just kind of discussing, they have been, 5-10% moves in either direction from some of the, like secondary and tertiary stocks in that grouping. Not really the Nvidias or AVGOs, which have had nice bounces back, but not the velocity that you're seeing in some of the memory names, some of the optical names, the fiber optic cable makers, the glass makers, the GLWs, the Cornings, that sort of stuff. I mean, some of these stocks are making new highs in what has been a pretty weak tape. So those have been super interesting. You got kind of biotech in focus. There's been some takeovers in that space. We don't really trade those names all that much, but they've been whippy. You have utility. Well, it's not about the names themselves. It's more the option markets are non-existent, right? I mean, they're usually
it's impossible.
They're untradeable.
Yeah, you can't trade those. Financials have been relatively strong. I think the other story is kind of energy names. Those have been getting whacked despite oil staying near highs. Again, kind of just choppiness in the market as a whole. So you can see here on the upside, it's a lot of the high flying tech names, semiconductor names. You have SanDisk in there. You have LRCX. Intel has been making new highs day after day. It's been a crazy move there. You have some of the data center stuff like ETN in there. Amazon was super, super strong, and then kind of a mix of the rest there. Lulu, very random to see that on the list, but some big moves to the upside. On the downside, another mixed bag here, but a lot of the stuff that Anthropic is going after, basically the software as a service stocks. ServiceNow was in a 90 handle yesterday. It's probably lower today just because that's been the MO of this market. It's been kind of one way in either direction. ServiceNow is actually down another $1 this morning, 100% or 100 IV ranks, so super high volatility there. CrowdStrike, Palantir, Intuit, Datadog, these are all kind of names in that grouping, and as well as some of the fertilizer stocks like CF, kind of taking it on the chin with the energy names as kind of the secondary Iran war issue sector. Mm-hmm. As a whole, though, strong day in the market. I mean, you can see from our heat map here, it's a green day across the board. Energy, kind of the weakest of the group, and then those pockets of software names just getting myrtleized.
Yeah, it's a good little heat map here. You look here, and I'm looking for the financials, and you can see them there. They look like they're quite green, but there's some. It's a little picky, right? We just saw the financials.
Yeah.
Go ahead after. It's kind of like the big boys, right? The MasterCard, the Goldman Sachs, kind of things that haven't performed as well as you would think. Goldman Sachs' earnings on Monday.
Very good.
Let's take a quick 90-second break and come back. We've got more Tasty Live. Nothing's really changed. Oil up maybe 30 cents from the last time I quoted it, basically unchanged, down 10 cents. Even the S&Ps are up 9. No movement as of yet. CPI, PPI, CUPI,
you got to watch volatility today. I think that's going to tell you everything you need to know about this weekend.
And it's unchanged right now. And remember, volatility will next week expiration for volatility and the market. Well, and the front month markets. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with a little bit of confirm and send. Let's take a look at what the market is doing. Been quoted all morning, but I really haven't quoted any changes. Even the S&Ps are up around 7. NASDAQ is up around 48. You can see the even S&P had a fairly tight range of around, let's round up and say 40 handles. Russell up 2, Dow down 16. It's basically unchanged across the board here. Volatility is unchanged at 2120. As you can see here, quite low. We got through that 24-ish number, and then volatility has just kind of collapsed from there. Interesting that with the market here at around 68.50, you've got volatility lower than where it's been in recent movement. Interesting. We'll see what happens to volatility today. I think on a Friday, even on a complacent day like today, today would be the least surprising day if volatility stayed bid. Let me put it to you that way.
That's why I got long volatility yesterday. I looked at volatility at 21. The VIX is below 20. And I was like, I don't see how volatility could be this low into the weekend, into everything that's going on, even into a move that we've had to the upside here. Like, I feel like maybe it's not a big downside day or a big upside day, but I feel like volatility has to stay.
It took a long time to get paid on short volatility. You agree? I mean,
for sure.
Didn't get paid until yesterday. I mean, the day before, volatility came in on that big, huge move up in the market, but not as much as you would have thought. Now, yesterday, volatility came in significantly more than you would have thought on a 35-handle move on the S&Ps.
Yeah, you had to have a little bit of a delta component to your position to get paid on it. Like, if you were just short puts, it took until yesterday to get paid on those despite the move that you had in the market because volatility remained high. You really needed that kind of vol crush, but you finally got it. I mean, yeah, that was exactly what you needed.
Bonds 114. Place your bets. We really haven't, as you talk, we've been kind of meandering around here.
I mean, look at the candles for the last 2 sessions in bonds. Yeah. Like, they have closed exactly where they've opened, and they've had a full point range. Like,
that's $1,000. It's not $100 like a stock. So yeah, you are correct there. Bitcoin hanging in at 72.4. Bitcoin has had anything but that same kind of candle, same day kind of candle. It's actually had some decent movement. Hasn't been holding on to the rallies, although we are near our highs now of around 73 recent highs. But it seems like it opens. Over the last couple of days, it opens up 2,000, closes up 1,000. Opens up 800, closes unchanged. Opens up 3,000, closes up 1,000. Stair stepping higher, but really no velocity. I think Ryan came in and had a nice little chart on how volatility has contracted in Bitcoin, and I think that's going to be the same for today. Ethereum up $2.50, small move there. Oil, I'm just seeing it for the first time since I've been up by about 6:30 this morning, about an hour and a half ago. It's up about 7 cents to just under 98. Good IV rank of 61 in there. What do you think about oil here?
I think it's weird that it has stayed this high, and thus that's why I have some short delta and long volatility.
Very good. Gold down $24. Gold has caught a bid, you can see here, but it too has been stair-stepping higher. The velocity really hasn't been there. You can look at those candles as Nick was looking at a moment ago, and we basically close where we open, maybe a little bit higher in gold. Silver down 41, doing the same thing there. Nat gas first small uptick in nat gas. Let me zoom out here. It doesn't tell you the whole story. Nat gas has been doing nothing but going lower. Corn, wheat, and soybeans are basically unchanged. The euro's up small, which means the dollar is basically going to be unchanged too. Goldman Sachs, I believe, has earnings on Monday before the market opens. Remember, these zero-day options will not be affected by that. They're going to close today. It'll be the April 17th options if you're looking to do something in Goldman Sachs. IV rank of 49, $40 expected move. You do not have great markets to trade in Goldman Sachs on the option side.
Very good. Let's do it. Confirm and send.
Let's do it. Confirm and send. Friday, April 10th. I haven't heard much talk about crypto until yesterday when Liz and Shelly on her show. Yeah, Shelly from Tasty Trade Crypto World was on with Liz. It was a nice little show there. Are you not trading in it much? And if so, why not? I guess I'd be talking like an IBIT or something like that.
Yeah, I'm long IBIT as a now core position at much higher prices. I would like to see.
So what you're saying is you didn't plan on it being.
Yeah, by default, I was not planning on it being at 70. If I knew it was going to be at 70, I'd be buying it at 70, not buying it at 90 or 100 or whatever I was in at. So I've got some pain there. I do think it's an interesting spot, and I've done it with like leap call options in IBIT / ETH. They're cheap. Volatility is low. If you want to speculate, that's where I would go versus just buying the shares. I think there's more. It's a more interesting trade because we know that these things can fly.
Yeah, I agree with you. Normally, I would say especially for you, the way that you trade, some sort of diagonal trade in IBIT would work. But when you look at IBIT, I'm going to go from June to May here. You'll look at June; it's got higher implied volatility than May, so you've got kind of the opposite implied volatility you have in oil. You've got oil front month very, very high and back month very, very low. Here you have back month a little bit higher and front month low. So right now for Bitcoin or IBIT, if you're looking to do something, I would be all in May if I was doing something there, whether it be directional or not.
Cool.
Next one, please.
Does the VIX spend more time trading above or below its mean?
This is an interesting
question. The mean is the average, so
yeah,
it's roughly half and half. But just generally speaking, the VIX clusters.
You got to look at the volatility curve in VIX to give you really this answer. Like if you go to /VX, all the different months. I think if you're in backwardation, it would be one answer. If you were in contango, it would be another answer to this. I think I will say this: volatility spikes. We had a really nice volatility spike over the last week and a half or so, and it took a long time for volatility to come back down. It usually comes back down a lot quicker than it had. So I would say that if you have a big move in volatility like you've had this month, we will be below. Well, the mean is the average, so it's you can't say you're going to be below the mean,
and it depends on the time frame.
It does depend on the time frame. We will be below where VIX opened this month. That's what I'll say. I mean, it's subject to change. I mean, listen, if we were to sell off, 10%, volatility is going to be higher. I mean, it's hard to say.
Generally speaking, you stay in a range in volatility for a lot longer than you do at highs. And so your mean is naturally lower. If it's below or above that is kind of negligible. I mean, it could be small above that, small below that, but you stay in that near that mean for a lot longer than you go to the extremes of really high or really low.
Volatility is mean reverting a lot quicker typically than price. So
Yes.
you can put it that way. That's the way to take advantage of it. Volatility gets way too low. We try to put on strategies that benefit from a volatility expansion. Volatility gets way too high. We put on positions, and that's our preferred thing to do, put on positions that take advantage of volatility contraction.
Very good.
Next one, please. What do you mean when you say the market is more reactive to headlines? I know in the past you said you don't think news mattered.
That was former administrations. I believe news is paramount to this market.
Yeah, but let me say, I agree.
I don't think that your take on news matters. I think news.
That was always the misconception.
Yeah.
Now then I'll let you speak. That was always the misconception. Go ahead.
I agree. But there is some news that is fundamental, that is real in terms of like changes in technology, wars. These things are real things. But I agree with you. You could spin the news in either direction.
And you usually spin it in the direction that you need the market to go.
Yeah.
I mean, let's be.
The opportunity is the part that I think is more important. Is that news has been giving you opportunity to trade around that, whether bullish, bearish, neutral, changes in volatility. I mean, those are the keys to kind of focus on versus the headline. I mean, we've faded and played into multiple news moves. Like it's not. It's just
a tradable event because I think it provides opportunity to do something.
Yes.
And that's, and it's not necessarily just price movement. Like I had a Taiwanese source, I won't say who his name is because he's been dead wrong for the last week, but he told me that CPI is the worst since 2022.
Yeah, but we put it high, we rose the bar, and now we hit the bar, like whatever.
But the market doesn't care. Now, if the market was up big or down big, they would say, look at CPI and look at how it's a news-driven market. I mean,
I try to explain this to like Gina or friends or whatever.
People want reasons.
Yeah, but the market is not like the real world. We live in this like world that is a tradable, fast-moving, fast-paced,
dynamic, ever-changing, ever-evolving.
There is no unknown in the market because you can buy and sell it at basically the same exact price. And so it doesn't matter if bombs are falling. If the market's rallying, the market's rallying. Like that's it. Like we're in a different world to what gas prices and inflation. Those are real world. Those are things that we have to deal with when we go outside. When we're sitting here in our holes, playing with our computer game that we have here, it's a different world. And so you have to stop thinking like about what's happening.
You're not an economist.
Yeah, we're not like the market knows all this stuff and sees past it, and it is what it is.
It's like Yoda.
Yes. It is all seeing. It's as close as we get to a crystal ball. I mean, that is really what it is. When you look at prediction markets in general, I mean, it tells you what's going to happen before it happens.
Very good. Next one, please.
There's a lot of talk about SpaceX and some other real cool companies going public. Would you wait on the options to start trading even if you want to own the stocks?
I mean, I am an option trader first and foremost. So yes, and I think the options will start trading quite quickly, if not the first day, within 48 hours of the opening. I mean, this is an widely anticipated stock offering. Now, I don't know how deep and liquid the market's going to be, meaning the difference between the bid ask.
They're going to be liquid. Maybe not the first day, but
I hope you're right. A lot of the stocks that have come out that we thought would be, tradable assets really haven't been, but we'll see. I mean, I hope so. I mean, it'd be a great trade. So, but if you want to own the stock,
buy the stock, go for it.
Buy the stock. And a matter of fact, when stocks first come to offering like this, I mean, there's a little bit of upward pressure to them because there's no float. You can't short them at this point. Usually the companies that took them public, want the price to remain above the opening price or the offering price because it makes them look good for other offerings that down the line. So, I mean, you got a lot of variables in your camp that would say, yeah, you can lean a little bit long in here if you like the company to begin with. Now, the only problem is going to be, and I'm just going to use make believe numbers here, but if the stock is offered at 50 in the public market and it opens at 100. It makes it less advantageous for me, at least.
Agreed.
Everybody got to do their own thing. All right, listen. Nothing.
Take a break.
What's that?
Take a break. Get to Jamal.
Yeah, we're gonna take a break, but I haven't seen any movement here, really in anything so far. So let's take a quick 90-second break and come back. We got more Tasty Live. Somebody who moves and shakes. That's right. We're gonna come back with my man Jamal right after this. Talk about this week in stocks. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you, Rob.
appreciate it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this man, Jamal, in the house this week in stocks. Jamal, how are you, my friend?
Fantastic. How you guys doing?
Doing well. Thank you for asking. Nick, did you have anything?
Oh, I'm great.
You were very talkative on the break. You know what I mean?
You were. I'm really sorry. I threw a little shade at you for a quick second. It's okay.
You know, I've heard in the past, when people say, when like you go to a bar and like the bartender's like being a jagoff and you're like, don't bring the bar to the customer. You know what I mean? Like sometimes they're complaining about what's going on. And I've heard, don't bring the bar to the customer. I've also heard, don't bring the break to the show. That's why I've heard that too. Don't bring the break to the show.
Vanetta calls it family counseling. So when we start to get off on a tangent here, she'll be like, "I'm not a family counselor." So that was basically, what we did on the break there a little bit.
It's
true. This is true.
All good fun though. All good.
Yeah,
fun.
it's all good fun.
Hey, Jamal, how was your week before we talk about the market?
My week in general, or the market?
I don't want to. I'm not a marriage counselor.
Yeah.
I mean, I'm just talking trading. I mean, we had some big movement. Just another perspective.
Oh my God, I was so busy on. I gotta remember to put things in perspective. It was Tuesday night, right? That we got the. On Tuesday night. I was in the basement. I'm hanging out, and I like putting alerts. So a lot of people always talk about stop losses and all these other things. I've never liked those things, particularly since I traded and I've been on an execution desk. I mean, things can move and they can shake you out of position. So I just like to have alerts. I like to know levels where I care. And so in this market, it's been like, okay, let me know if we're below 6,400. Let me know if we're above 6,600. Let me know if we're above 6,700, things like that. Yeah. VIX below 20, all those type of things. And so Tuesday night, 6,700, ding. It's like, oh wait, what's going on here? All of a sudden 6,800. Whoa, what? Oil below 100. Wait, whoa. And so we'll go to the computer and see that we're, what's going on and see the movement that's happening, thinking that it's probably going to reverse. Well, obviously we came in on Wednesday and we held that level overnight, which I thought was really interesting. We held 6,800 overnight. We stayed up, come in, and I was very busy because I've had a lot of things, like a lot of people, a lot of longs that are just not getting paid on, different things like that. So I had a lot of different things to do, very busy and very active that trading day on Wednesday, and started to put on a few other shorts. I think I essentially got out of a few longs. I still have a couple of others. I got shortfall in CVX and XOM. I also sold call spreads basically at the levels of near-term highs and the SPYs in the Qs to get a little bit of short delta, just in case this doesn't hold. Who knows? But it's interesting. I mean, I was looking back just now, looking at a couple of stats before I came on with you guys. Simple ones. I mean, on the week of February 23rd, which is essentially before the 4 weeks of craziness, that's when the S&P closed at 68.75, VIX closed at 1986, and the 10-year yield was 3.95%. And then obviously we had 4 weeks of craziness and, the closing of the Strait of Hormuz and missiles flying and where 20% of the world's oil goes through and 30% of the world's fertilizer goes through. And we saw all these different moves. How I know the worst is over, I feel. The S&P is up 7 days in a row. VIX is below 20. Futures curve is out of backwardation. It's basically flat.
Yeah.
And software is getting sold off again. That's the weird part.
Software is going to zero again. We're back to normal markets.
Did you guys notice that yesterday? Like there was a lot of software names that got sold off. Palantir, all those different names.
They look like duty. They cannot catch an uptick. Microsoft is in that basket too. They've looked gross. But I'm a little bit on the other side of you, Jamal. It felt I think I was playing for the upside move and I felt like I was contrarian last week. And then yesterday kind of felt FOMO-y to me. It felt like it was a little bit of like reaching for the last couple percent yesterday. Like it was a strong up move, but it wasn't like I felt like the rest of the narrative, it just like isn't there. Right? Like the war isn't over. Like it doesn't seem like it's over to me. I don't know.
But I think the worst is over. It feels like the worst is over. It is strange though that you mentioned oil. It is strange that oil is still above 90%. We're still in backwardation there. And I guess the thing it is there has been I think a little bit of with irreparable damage a little bit because again oil is remained high and we just got two inflation numbers that nobody really cared about, but the CPI this morning above 3%, that's the highest level since 2 years ago. So I think that's the damage that has been done. But I think the worst is over. I don't think we're seeing 6,400 again in the S&P is what I'm trying to get at.
Okay. Yeah, I could get on board with that. I think my perspective was more we were going to go from 64 to 66 or 67. I wasn't seeing, a 10% 1 week rally. Like that was not, I thought it would be better if we went to like 66 as opposed to kind of overshooting. It feels like a little bit in this.
What's funny about this, Tony, is that he and I were on last call about 10 days ago. And I was like, man, I don't like this. It doesn't look good. He was like, oh no, don't say that, man. I don't like it, man. I need a rally. And now that you've gotten a rally, you sound so upset about it.
No, I am not upset. I got every piece of it. It was beautiful and euphoric is what I was calling it. But
nobody wanted to be in that situation. I was on the show on Friday's close, and I said the same thing. I'm too big here by default. There's just too much delta.
Yeah,
the numbers are just you need a little bit of a reprieve here in the market because we hadn't had one. I think we had about 9 straight days of lower lows. I mean, it was something that you.
So how are you guys positioned now?
I've flattened out on this way up. I mean, I was very, very long over the last 2 weeks or so.
Long and early. I mean,
long and early. Oh yeah, I took enough heat on that position for sure. But it worked out, and I am here right now. I am about as flat as I think I've ever been. I don't think we've had it.
I have 30% of the deltas that I had just 2 days ago. Long delta.
I don't have as much short vol because vol has come in so significantly. I bought some UVXY yesterday on the close because I feel like volatility has overshot a little bit to the downside. I have a little bit of short delta here, E-minis and the Russell. I was along the NASDAQ as kind of my core position, and I've taken that off. So I'm a little short delta here.
There you go. How
about you, Jamal? Same camp. I'm kind of flat. I would say. I mean, I got a couple of longs in case we shoot higher somehow to 7K. I don't really see that for scenario, but I got a few nearer term shorts. I am still short oil. I'm short iron condors in USO and CL, and they're positioned pretty well. I feel. I mean, if we drop down to 78, then I start to probably get to trouble. And like I said, I'm also
you're not so sure we'll get to 7,000. Just to give you an idea here, by tax day, April 15th, you got about a 90 handle expected move. Now, I wouldn't expect it all to be the upside, but it certainly could happen, which gets you right there to 7,000 on ES. So you're only a spit away.
Which would be unbelievable. Could you imagine if that happened, if we're still in the middle of this war and we're back at essentially all-time highs? What's the narrative spin that you can put on?
It's a very resilient market, which is something that we have said every day the last 2 weeks.
Yeah.
I mean, if everything you said was going on, and it was, you would have thought we would have had a lot more movement to the downside, and we didn't.
Yeah.
Well, how do you make sense of it if we get back to 7,000 and oil is still at
What do you have to make sense of? I mean, I probably
oil though.
Sure.
Yeah.
I'm saying if oil is still at 88, 89, well, how does that make sense?
I think it tells you
that was the whole thing. Problem.
Well, I think it tells you that this is over in quicker time than what we think. If oil stays at highs, it seemed and the back of the curve has not increased to, it stayed in kind of the mid 70s. It basically tells you that, 3-4 months from now, we're back to normal. That can obviously change. That's kind of what it's saying right now, at least in my opinion.
Jamal, I got to let you go because we're saying we got the opening bell here in about 3.5 minutes. So I'm going to let you go, my friend. Thank you so much for a little bit of recap and a little bit more on the week to come, maybe even a little bonus for you. We'll take a quick 90-second break, come back. We got more Tasty Live with the opening bell next. Even the S&Ps right where they are the last time I quoted them, up around 9. We'll be back in 90 seconds with Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University.
Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son. And you know what that means? Time for the opening bell. I see here you did a little Iron Condor. Is that it's a close?
Yeah, I took off when we had the craziness in oil and markets earlier this week. I took off my oil position that I was mostly short units on the upside.
That worked out well. It took a little bit of time. Also, I had the similar type of
took some heat on that. MCL, oil futures, USO, I managed that once the market opened. But I put a shorter duration Iron Condor on, a lot less risk than I had on prior. And I just took like 30 cents out of it, which is $300.
Yeah, which is $300, right? You did it for around $1.30, $1.40, something like that. Closed it at 106 or something, 107.
Yeah. So just taking some risk off the table. Good trade.
Yeah.
That was our bell.
Good trade if you do say so yourself. Yes, that was our bell, son. Even the S&P is just up around 15. Now they're up around 13. 88 is the high, about $10 from where we are right now. 50 is the low, about $25 off of the low. You can see here we were met with some interesting selling all the way from around this area and lower. Over the last couple of days here now, and by couple of days, I mean sustained almost about 9 days, equal to the down move, back to around this 68.50-ish number. We're 68.77. So we definitely got a tug of war going on with the market right now. I think the path of least resistance is not quite as defined as it was for
sure.
At least before. Volatility unchanged, down 2 cents. I would expect volatility to stay a little bit bid here today. Like going into the weekend kind of thing. That doesn't mean the market's going to go lower. Just means that volatility might stay bid over that weekend risk. Bonds down 4 ticks to 114. Here we are. Throw out the highs, throw out the lows. You're right here at the lower mid end of the range of bonds at 114. Bitcoin up 250. Hanging in there, a little bit of volatility contraction as it goes higher. A little confusing there because usually when Bitcoin goes higher, volatility goes higher. Ethereum up $6 and change. Oil up 60 cents. I can see here that it's in the middle of the range from last night, but this is about as high as I've seen it since we've been on the show for the last hour or so. Hour and a half or so. Gold down around $20. Got over 4,800 a moment ago. It's been down to 47.50. Silver up small. Gold silver ratio hasn't really moved. Net gas was green for a moment. It turned red. Net gas might be a trade in there. The only problem with net gas for me is UNG is a horrible product to trade on the option side of it. Doesn't have a lot of movement to it. I think you really have to go into the net gas options. Let's see what's moving this market here, as even the S&Ps haven't had too much movement. There's your LIT you talked about earlier today. It's down.
Those things are as volatile as it gets. When you look at those and SanDisk, that sector has just been.
It's been on fire, right? I mean,
insane.
They've been tear to the upside, like you said, making new highs when the market itself is not making new highs. Really kind of coming back to half of its movement. Costco down around $9. MU down around $3 and change. Palantir down another $3.50 on top of movement. You can see here over the last 5 days, volatility has really expanded with earnings coming on the 4th. of May. May the 4th be with you. NOW, that's your service now down another 250. This stock was around 100 just a day or two ago. It was even higher than that prior to this. Look at this movement down in service now as volatility expands too. Option markets are okay in there. They're not great. Earnings are April 22nd. You put a trade on there, I think leaning a little bit long yesterday. CRM down around 2. Zoom, haven't mentioned them in a while, down small. JP Morgan down small. Let's take a look at Goldman Sachs just because it has earnings on Monday, down around 60 cents or so. Let's see what's moving the market to the upside. AVGO up $15. TSM, that I missed that one. That was a hard one to trade in my opinion. Up another $10 to 375. Meta been catching a bid, up 8. Your semiconductors looking good, son.
Unbelievable.
Isn't it? It really, really is when you think about it.
I mean, I put on a strangle in TSM that was like 60 points out of the money or 70 points out of the money on either side. And I did that like a week ago. You know, like it was a short period of time. And that thing's getting tested already. And AMD, I'm rolling up puts here. I'm going to have to roll up puts again in TSM, I think.
Yeah, I think you do. I mean, it's unfortunate.
I'm trying not to be super aggressive. I mean, I've rolled up. You know, I've done the roll ups in AMD and TSM. I had another one where I was doing that too. But you know, picking up like 10 deltas, and then all of a sudden the next day, you know, that delta that goes from 25 to 10.
Yeah,
like.
It's hard. 10 deltas doesn't help you when the stock moves, you know, exponentially is what I should.
It's unbelievable.
Yeah.
And I'll get those pushed through here.
Yeah, no worries. All good. Even the S&P's up 750. Russell just turned red with the Dow down 170. That's your weakest of the group, about 1/3 of a percentage point. NASDAQ up around 80. That's up around 1/3 of a percentage point. That's the difference between those two.
Yeah, I think volatility is going to stay.
Yeah,
I feel like we're not closing today up.
Yeah, I would agree with you there.
And that's just what it feels like, which makes my roll ups feel that much worse. I mean, just looking at my positions, like I don't. Again, we're kind of in no man's land because I've taken a lot of my short delta off. I have a handful of strangles that are being tested to the upside now. So, you know, I rolled up the puts there. That's some of it. But there's not a ton to I don't have a ton to take off at this point. I've spent the last week taking stuff off. So
no. Well, we may think that volatility is not going to contract over the weekend, but it doesn't mean it's not going to be contracting in the 0 days and maybe even quickly. Take a look at the 0 day expected move is $25. That's almost been cut in half over the last couple of days. So say what you want about everything that's going on around the world right now, oil included, up 70 cents. Right now, even the S&Ps and the market volatility is saying today is going to be pretty complacent.
Yeah.
Subject to change, I guess, right?
Yes.
Yes.
I got nothing, dude.
I know, but we don't have too much movement. You had a nice.
I know. Is today going to be a grind fest? See, I thought we'd get like, you know, you got to scare the children a little bit into the weekend. You had volatility at lows, everybody buying the dip. It's over, blah, blah, blah. I feel like you had to kind of humble everybody again, but
yeah, it's a hard one. I wish I knew.
Yeah, that would be great to know exactly what's going to happen. That would be make this whole thing easier.
All right, well, you ready to take a quick 90-second break then? I don't see too much movement.
I'm going to roll up and aim at too. I hate this. I know that this has been an overshoot, and I know I'm going to kick myself for doing this. But
there's nothing, you know, So you can reduce delta by 50% normally, right?
I'm reducing it by 20%.
Yeah,
I'm not
I was gonna say
reducing
you
by
reduce
50.
it by less. Maybe reduce
Yeah.
it by 25% was the number I was going to go to.
Yeah, that's what I've been doing. All right. Well, we do have fast markets, so maybe we can get a couple good trades out of that.
Let's do it. Let's do it. We'll take a quick 90-second break and come back. Even the S&P's up 875, NASDAQ up 85, Russell and the Dow lower, volatility unchanged, bonds down 4, and oil up 47 cents. Take a quick 90-second break and come back. We got more Tasty Live after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, we've got Fast Market.
That was kind of bad for me. I was incorporating like the Nick Cage, like from Gone in 60 Seconds, where he does the like.
You were trying to get really into it. I gotcha.
Is it Gone in 60 Seconds? I think that's what it is, right?
It was a great movie.
Yeah, I think. Yeah, that was Nick Cage. Yeah.
I don't know.
It is a classic.
Yeah.
Yeah.
Definitely a classic.
Yeah, that was Angelina Jolie as well.
I believe so. Yes.
Thank you. Yes.
They're giving you the win.
All right, let's do it. Fast market.
I'm ready. Let's go.
Nothing's moving in this market. Kind of unbelievable. Oil up 76 cents. Be interesting to see where people are finding some opportunities here.
Mm-hmm.
Let's do it.
I'd love to know what they're doing. Let's take a look at this fast market. Amazon neutral. We're talking about Marcus here in Albuquerque. A big rally today, meaning yesterday, like Amazon, but don't see it pushing past recent highs that quickly. Selling a 20 delta, $20 wide iron condor. What do you think about that?
Yeah, I like this. I had a call diagonal spread that I did with Mikey the other week that I closed yesterday, and I wish I had held it because it's up another $4 today. But this has been a great move, and I think it's a short premium play here. You got an IV rank of 59. I sold the 215. 265 strangle, so that's essentially the 20 delta short options. I'm going to just go naked here to have a little bit of short premium. I mean, that would be new highs to the upside and kind of back to where we were middle of last week and this year, kind of in that 210, 205 handle. That's kind of where my break even is on the downside. So I like it.
Yeah, Amazon got up to around 250-ish. I'm just throwing out the highs, and the lows were around 200, throwing out the lows. We're sitting close to 240, up 4.5 so far today. Like you said, good IV rank of 60 works out. And you got earnings May 7th, May options May 15th expiration. I think it warrants a trade. Amazon.
And we did that Amazon Iron Condor yesterday in the Johnny Trader account. So we're very much on the same page with you, Marcus. I like it.
Very good, very good. Next one, please. All right, gold looks fairly priced in the short term. Selling some premium with a May 380, 400, 480, 500, Iron Condor for 371. Now they're collecting a little bit, they're going $20 wide here, not $10 wide here. So you're going a little bit further out, a little less credit from NYC, Luca, which was almost my son's name. Not you, son, the other son.
That would be a good name. That's an interesting name. It stands out. Vinny is a good one, too. You don't get a lot of Vinnies in Glenview, Illinois, you don't. It's good. It's good. Nick was quite the standout in Glencoe, let me tell you, along with all the Joeys and Jordans. The Nicholas was quite the change there. So I like that. Luca, I'm with you a little bit. I'm long delta via diagonal spreads here. I was long an MGC futures contract and I had some short premium against it. I've kind of taken that off. I'm actually more kind of neutral / bullish here as opposed to just straight up bullish, which I was, like 44, 45. I don't know if I want to add to my position. I'm kind of locked and loaded here in gold. I actually took off a short put to kind of reduce some of the long delta that I had in GLD. But I if you don't have a position in gold, if you don't have a position in silver, I certainly think now is an interesting spot to be short some premium. We did a GC Iron Condor with Craig the other week. I closed out of that. So I've played it. I don't want to push the chips in. I think if you hadn't played it, it's certainly a spot to be short some premium here.
Perfect. Good job. Next one, please. Thank you, Chris. I'm sorry, now this is Chris. I apologize. SPX neutral. I've done a little bit of bullish trades in SPX on my option trades today, which is every week, every day this week. That's right, Monday through Friday. You can catch me wherever you catch your YouTube, or just wait till it's on our website too. Or you know what? You can go to the follow page and see it there in real time. SPX, I've been doing a lot of broker wing butterflies on the put side in there. I'm contemplating doing them on the call side here.
Yeah.
Have that big put skew on the call side, which means you're a little bit closer to at the money. Anyway, no major news after 9:30 Central. Expecting SPS to stay in a wide range.
Sorry to cut you off.
That's okay. So going with a 20 Delta Iron Condor and targeting around 25%. It looks like you did a 0 day. What'd you do here?
I did a butterfly. So I'm leaning a little short here, and I think volatility is going to stay bid, if not expand. And I'm thinking there's going to be a little bit of a scare the children into the weekend.
You did a broken wing butterfly.
I did a broken wing butterfly. So I have no risk to the downside on this butterfly. I did it at a small debit just because it's kind of negligible.
Yeah, this is interesting. Here, if I keep it at a debit, now your debit's 15 cents. So you'll notice this green line says you only make money in between here and here because you will lose 15 cents, $15. If we're unchanged today, if we stay right here, you'll lose 15 cents, which means you have a pop of only 17%. But let's change it just for demonstrations from a 15-cent debit to a 15-cent credit, or even just make it a 5-cent credit. So we'll only change it by 20 cents total. Your pop goes to almost 80%. And then your green line is anywhere into perpetuity, the downside below 68.60. So I just wanted to show you there that small debit makes it look like a horrific trade, but the net risk is $1,500 to make, $15 to make $1,000.
Yeah. And I'm going to put in an order. I just put it in at 115. So a 115 credit.
That's
so if we get kind of a choppy, you probably need like an hour or two of time to pass, and maybe, staying here, if not going maybe a couple points higher, up 10 or
couple points lower is going to work too, because you're synthetically short on these broken wing butterflies. You're synthetically short. You're long a $10 wide spread, short a $20 wide spread if you break it up into two trades here, which is what a butterfly or a broken wing butterfly is. So we're synthetically short. We're right where our break even is. That's the trade hack. The 60, 68, 70 put spread is exactly what you are synthetically short. That's where your risk is.
Exactly. And so and this goes to the point we were making yesterday too with the 0 day. When you were looking at that 20-point wide, it was trading at 375. I mean, we were trading these at 475 in the middle of last week. And so it's, the probabilities are what they are, and the credit is what it is based on volatility. But it's hard as a trader to experience a $5 credit last week and then sell out that same sort of trade closer at the money for $3.75. It's just tough to do. And so I kind of am feeling that a little bit as well, which is why I went to this broken wing butterfly just on the call side, because ultimately I don't want to make money on this trade. Like, I want this trade to be nothing. If we drift higher, it's a nice consolation prize, like, a participation trophy, but it's not going to be a good move for me.
Next one, please. The good thing about that, in all things being equal, the strategy allows you to manage a profit at some point. Now, it may be as smaller than you expect or want, but it's a high probability trade. After this multi-day rally, I'm shifting closer to neutral. Still like some upside, but keeping it small with a 20 wide put spread and a $10 wide call spread for slightly positive delta. I'm going to Nashville, Tennessee. Aaron, thank you.
Aaron.
Thank you for participating.
I think this is interesting. So I have some long delta here. I have a diagonal spread that is long the 420 right at the money in May, and then I'm short the 435 in the 7 day. Don't look yet.
Go ahead.
What do you think the 435 call is trading at? It's $15 out of the money, expires next Friday.
In MU, there's no earnings or anything.
No earnings.
430 with the stock at around 420. 70% IV rank. That's going to give you an expected move over 7 days approximately.
Yeah.
That's going to give you an expected move of about...
Which includes the weekend.
Right, but that's about 30-ish, 28 to $30. I would 30, something like that, dollars. I don't know. $10?
You're right on the mark.
What is it?
It's $10, $11 is what it's trading at. I mean, that's how high the volatility is here. There's so much vol here.
Yeah.
that option is holding a ton of value. So I'm keeping that on. I'm leaning a little bit long. I'm going to add an iron condor here. I think it's an interesting spot, but I'm not going to do it with a tighter call spread. I'm actually going to make the call spread a little bit wider to give me a neutral delta more than the bullish delta, because I already have the bullish delta via the diagonal spread. So I'm going to do this like, I was thinking 20 by 40.
Okay.
Because I have this diagonal
a little
spread.
wider. It's a $400 stock.
Yeah, exactly. So it's going to be
rather do that than do two contracts. Rather do one $20 wide by $40 wide than two of the way that that Aaron has it in Nashville. I get it.
Yeah. So this is going to be. It's very similar, but this is going to lean me slightly short delta because I already have some long delta here. Whoa. So I did the 500, 540, and then the 350. 330, and I did it at $9.10. So I have $10 of risk on the downside on this trade, $30 of risk on the upside, but I have some long delta already here. So this is more of like a short premium kind of range bound trade here.
You're certainly on the same wavelength as Aaron. Next one, please. Ooh, PANW, Jake in Omaha, 145, 190 strangle in May. PANW.
So I have some long delta in CrowdStrike. I did that 1 by 3.
Mm-hmm.
Is it kind of crazy to do another one here?
Oof,
and just load up
down $10 if you're going to do a strangle in here. Man, this is really falling off. IB rank at 84 is really good. I'll look at the market.
The markets are not great.
Yeah, I was going to say, what do the markets look like in here?
All right, I did it. I did a 1 by.
You did it.
I did a 1 by 3. I mean, these things are moving, and I've talked about this before. I'm a little bit skeptical that we're all of a sudden going to let AI do our cybersecurity as well. I think there's got to be a little bit of overlook there. Skynet, I'm not so bullish on that taking over here. So I'm going to do the 1 by 3. It leans long delta. It's a put ratio spread, short some premium. Risk on the downside.
It's a capital intensive trade because you have those extra units. Let me just put it up there for everybody so you see. But it really is just like, not the amount of buying power you're using, but it's just like the, actually it is in SPX, very similar to the same buying power. But anyway, 86% pop, you get $20 a day in theta decay, and it does lean you long about 22 deltas or so. The bad thing here is these markets are horrific. So maybe you could do a little bit better price discovery playing at home.
I'm okay leaning long at 130 into this move. I mean,
well, you better be with a position like that. Although
that's true.
Have a max profit of around $1,700 if you were to close right at 140 in the next 35 days and you kept it on forever. So it's a good risk reward ratio. It's a good probability of profit. You do have to remember it's long delta. If you're not bullish on PANW, then it's not the trade for you. Next one, please.
Next one.
Oh, perfect. Thank you. Coin bullish. Hey, it's AA around again. Richmond, Virginia. How'd you get to Virginia so quick? Appreciate all the shows, Bats. You see that?
There you go.
What do you know?
I finally got some credit.
Staying long coin at these levels, covered calls, short puts, or even a Jade Lizard. What do you think?
I think I'm more in line with the Jade Lizard here.
Okay, less delta than a short put, right?
Yeah.
Less delta than a covered call. So you're taking the less directional approach to the stock.
Yeah.
The least that you could go. Earnings are in May, right before expiration. You're probably going to go into May, right?
Mm-hmm.
How are the markets in here too? They give you a little bit.
They're not too bad.
Yeah, 40, 50 cents.
What do you think about like 140, and then selling the 175, 185 call spread? It trades like at like $9.40, or at least it's marked at like $9.40.
Mm-hmm. Coin has not participated with this Bitcoin rally.
No. Let's see.
At all.
You know what? I'm gonna pass on this one because I have Hood, I have iBit, I have enough of my Bitcoin exposure. I'm not gonna put any more on here. I don't hate it. It's capital intensive too. After putting on the PanW trade, I think we're gonna pass on this one.
Okay. I have no problem with you passing. Really good job. Next one, please. I don't think the market's that great in there anyway.
No, they're not.
ARM neutral. I like. You know what? We've had one or two bullish on stocks that have gotten beaten up. Like I don't know what direction anything is going to go, but I like at least that they're kind of playing the reversion to the mean here in price a little bit. And ARM, there are a lot of neutral strategies too, with volatility having contracted already, going both sides. Let the stock beat you. I think that's the way to go. ARM has been trading between 100 and 180 for a while. Using that range, selling a lower delta 120 put and a 185 call in May. Sean in Hong Kong, kind of doing what I did in SPY earlier this week on option trades today. I agree with you. I mean, let the stock beat you. That's what I got to think. All you have to do is look what's the IV rank in ARM.
Yeah.
Too. I guess that would give you another reason to
Markets are not great.
Yeah, that's another problem. You're right. Good IV rank, though, of 69. It does have earnings coming early in May 6th, I believe.
Yeah. I'm going to do...
What are you going to do?
I'm going to move these a little bit. I'm going to move this to the 125, 190.
Okay.
The 120 at an 11 delta. I mean, I'm just preemptively rolling up because I've been rolling up in all of these semiconductor stocks. So I'm rolling up one strike and moving my call to the 190. Let's see. All right. 595. I'm in.
All right. Beautiful.
I also have a short-term butterfly. If you remember, ARM had, I don't know, some partnership announcement or something where the stock was up like $15. I did a call ratio spread and then the stock like sold off, basically reversed the entire move. And then I bought in the risk. So I have a butterfly into next week as well. That's like right at the upside expected move.
I do have to interrupt this programming just to give you the E-mini S&Ps just had their largest move of the day. They
3 points.
3 handles. That's correct. That's correct. Next one, please.
Ridiculous.
It's amazing how things change. CRWD crowd. We talked about this for Eli in Syracuse, New York, coming up with cyber names have pulled back on AI concerns. You've been talking about that for most of the morning, really. Feels oversold, but not ready to buy stock. So going with the 320, 340 put spread, 460, 480 Iron Condor. For $4.75, you'll notice the last $20 white iron condor was around $3 and change. So I'm assuming this one has a little bit more delta risk. We'll take a look at it.
Yeah, I wish I had this trade on instead of what I have on, which was the 1/3 put ratio that I did, I think, yesterday. And then the stock is now down another $18. Did I do that yesterday? Yes, I did that yesterday at $3.60. It's now at $9. So I'm feeling some pain here. I'm locked and loaded in CrowdStrike. I don't need any more, especially because I added in PanW. So I'm going to pass on this one.
Okay.
I do like the Iron Condor. You got to be careful with these markets because they're wide and this thing flies around. It's hard to trade Iron Condors in a stock like this, just because of how wide the markets are. Volatility is super, super high. So just watch your pricing here.
That was a public service announcement by Nick Batista. Next one.
There you go.
PLTR bullish testing support near 125 with a small position sold. The 125 115 put spread will close it on the first bounce. If volatility contracts, PLTR down another $6. I'm with you here, Owen, in Spokane. I I think Palantir is a buy here. Earnings are May 4th, but I've been completely wrong. I just started with it, I think, yesterday.
I'm
sure a little bit of an omnidirect. My break even is down near 100. His break even is going to be closer to 117 or so. Something like that.
Yeah, I have the 110 puts and the 120 puts. I'm in this. I'm with you. If you waited until today, you got a way better entry than I have. So I'm going to pass on this
and
one.
A way better entry than I did, and that was just yesterday.
Yeah, I'm passing, but I'm with you in this already.
Awesome.
Not going to add.
Next one, please. Oracle bullish, running a put ratio spread. Brian in Denver, Colorado is talking about in May, buying the 135 one time, selling 2 of the 130s for a 327 credit. Now, he said here, no upside risk, which is absolutely correct, right? And he break even is near 121, which would be correct also. And 125 looks like a solid floor on his technical analysis. You already you had no problem pulling the trigger on this trade.
I put a Jade Lizard on. We've traded these a handful of times in Oracle, and they've been pretty good. Oracle IV rank of 47. I sold the 125 put, and then I did the right at the money 140, 150 call spread. I did it at like
745.
745. So you technically have risk to the upside, but if you get that $10 or $15 up move, you're probably profitable on this trade in the short term. I like it.
You got a little bit of long delta here, maybe like 10, where I think what Brian would have is closer to about 20-ish, so a little bit of a less delta. You're out of the money with your call spread. You're out of the money with your put. If you wanted to add more credit and more delta to it, you could roll up the put to the 130 put and collect almost the width of the strikes. But it all depends on how bullish you are in Oracle. If you have other positions on an Oracle, Oracle has not had an uptick, so you're not buying it on its highs. That's for sure.
For sure. This is more of like a iron fly type trade. You know, it's not super bullish.
That's correct.
Cool.
Those are our 10 trades. You did pretty good.
I think the only one we really passed on was Coinbase. Everything else we either had a position on and didn't want to add, or that was really the only other case. With CrowdStrike and Palantir, those we had positions on already in similar fashion. So I like the half check there. I think net that's what 75%. If we take like a half, like if we take 5% off of each, 10% off coin, 5% off of gold, CrowdStrike, and Palantir, because we already had a position. That's 75%, right in line with a Batista, right there at the average.
Yes, that would be the class is curve grade.
Yes,
we're just looking for you got a 60, which is really what Batistas usually do. When we take tests, we get a 60. Good job out of you. Even the S&Ps were unchanged for a moment. They're up $5. Nasdaq is up $40. Russell's been weak relative, basically unchanged, down $1. The Dow is down $1.35. Dow's been down all day. Even the S&Ps and Nasdaq have been up all day. Volatility in by 12 cents. Not too much movement in volatility, nor the market so far. But when you least expect it, maybe you expect it. So, keep an eye on the market. Bonds are down 8 ticks. That's about as low as I've seen them, obviously, because they're just a tick off of their lows. 113.28. Bitcoin hanging out. It was up around $200. Now it's up around $400. Oil's been hanging out right here, 37 cents higher. 98.40 or so. Gold catching a little bit of a bid here, still down $16. Silver catching a small little bid, up 5. Really, it's a pretty complacent market. Let's see what's moving to the upside first here. AVGO up 14, although it is $5 off its highs. SanDisk is up 10, although it too is about $12 off its highs. AMD up around $9. TSM up around $9. They're all a couple of dollars off of their highs. AMAT flirting with its highs for the day, up $8. SMH is the one that I think we're most surprised at, up $7 and change. Let's take a look at the downside here. Costco down 23, big move in Costco. That's a 2.33% move there, trading not right near its lows of the day after trading up to 1,029. It was actually up a couple of dollars, or yes, basically up a couple of dollars. Crowd down 22. It too is trading near its lows. Palo Alto Networks, we put trades on in, also near its lows. Snow near its lows for the day, down $10. Big 8% move in Snow. AppLovin down $10 also. All these IV ranks are going higher as all of these stocks have earnings. Even if you go to the upside, you'll notice that these IV ranks are going higher because they all have earnings coming. All right, son.
What a tight range.
Yeah, very tight range.
I mean, this is pretty unbelievable from what we've watched over the last a couple months here to have including the overnight session, a 30-point intraday range. I mean, that's as light as we've seen.
Yeah, I actually thought we would chop around the 68.50 number, but I thought we would be 20, 30 handles below that 68.50 number and chopping around. We're overperforming as far as I'm concerned with the pricing. Yeah. Anyway, we'll take a quick 90-second break and come back. We got more Tasty Live coming up immediately following these messages. We got a market measure you're not going to want to miss. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure coming at you. We've got no movement in the market right now. Volatility in by 12 cents. Even the S&P's up 5. Go.
Pretty incredible.
It really is. It really is incredible how, I mean, like, you missed the movement, don't you? Like, I mean, you didn't miss the movement.
100%. And we've said that multiple times. Like, everybody's waiting for the go-ahead on either side of the market, like the perfect timing.
Yeah.
If you waited, if you didn't put risk on on both sides of the market at points, you're sitting here and you're like, damn. Like, I need to put.
How did I get here?
How did I get here? And I missed. I missed both of them. And you're never going to get the top, and you're never going to get the bottom. Like we talked about how we took some heat on the downside, leaning bullish. But when you get to this point and volatility's getting smashed and nothing's moving, it stinks.
It does. It does. And when it's happening, you say you need the market to bail you out. And then when it happens, you feel like, well, that was what was supposed to happen, but it doesn't feel like it before it happens. You know what I mean? Like, and that's why you have to keep your position sizing intact so that you can at least take some heat, because you're never right. I mean, usually never right immediately. Even trading futures, you're always, the market doesn't accommodate every once in a while, immediately, and you got to be able to have enough conviction to stay in it. That's why you have to be small enough to stay in it. If you bet the house every time, you can't stay in the trade.
Yeah, and I just I keep reiterating, and it's amazing because it's always the same. It's like, the YouTube comments and whatnot that I get on some of the videos are like, oh, it's too volatile right now. You can't do anything. Yeah. You can't do that. You gotta wait.
Yeah.
Yeah, it's tough. That's a tough the waiting aspect. It's you know what's harder than putting some risk on when volatility's high? Waiting for the volatility pop when volatility's low. That's way worse.
Right.
That's way worse. I'd rather take 3 days or a week or 2 weeks or a month of heat to participate in the eventual two-sided action / volatility contraction than I would wait for VIX to go from 10 to 15 and wait a year. Like that's the difference. Is like 1 month versus a year is way different.
Agreed.
All right. Market measure sponsored by the SIBO.
Let's do it.
Managing expected move 0 DT spreads. We're talking SPX here, of course.
Mm-hmm.
So 0 DT options continue to be, one of, if not the most active thing traded. I think it is the most active traded option here in the market across the board here after the launch of the full suite of 0 DT options 3 years or so ago. The multi-year bull run has been particularly kind to put sellers. I've seen so many comments from people being like, oh, well, it stunk the last couple months. That's right. That's called reversion to the mean in terms of your probabilities. If you outperform by 20 or 30% on what the projected probability is for multiple years, you got to expect some downside after that. You can't continue to flip coins and hit 75, 80% on the head side on a 50% probability time and time again.
Right.
Probabilities mean revert. You just don't know when, right? So we could have had another year of bullish move. That was certainly in the cards there. So it's been a good trend. Using out of the money short strikes offers premium sellers a high win rate and room to be wrong at the cost of a smaller initial credit. But good entry is only part of the equation. Knowing when and how to exit has, in my opinion, been the biggest key here, especially this year, because we've done a number of 0 DT trades where we closed them for $100 or $50 or $75 profit, and at the end of the day, it was a much different story. It was a big winner, a big loser, or a variable loser. It's really been about managing these trades. So today we're going to examine how different management mechanics affect the outcome of zero DT trades. We're looking at short put verticals placed at the expected move here. We've done a variety of these looks from at the money put spreads versus iron condors, a variation of iron condor widths. Here we're going to do at the money put spreads with a variety of widths and different management criteria on these. It's going to be a good one here.
Very good. Take a look at it.
So, of course, we're going to use 3 years of data. That is the data set for SPX. They've only been around for 3 years, collected every 10 minutes. So
you know what? They should have been around a lot longer. We came up with I shouldn't say we, I believe Sosnoff and TP were pretty much instrumental in the quickies.
Yes.
Would have been the zero. Also.
A much better name, too.
Yeah, he's good with that stuff.
Yeah, the quickies would have been good.
Yeah, it would have been good. We could have had this a long time. I don't think the market was ready for it. I don't think the technology was really ready for it yet. I know the different brokerage firms weren't ready for it, but it was, we could have been somebody.
For sure.
We weren't allowed to own it, so that's okay. But,
yeah.
The idea, once you spread it, it's public knowledge.
Yes. So we're going to consider the results from selling put spreads every day at 9 a.m. So that's our spot for the opening trade, and that's central. We're placing the short strikes at the expected move, and then the long strike either at $10, $20, or $30 wide. So just doing different widths here. We're experimenting with closing winners at either 25 or 50% of the max profit. We've talked about with these one-sided trades, targeting a higher profit potential versus the neutral trade, doing a lesser profit potential, as well as closing all positions at noon or leaving the losers on until the expiration. So those are our two exit points for losing trades, and obviously small winners that don't hit that 25 or 50% mark. So it's really 25 or 50% is the criteria prior to noon. If we don't, we're going to look at closing all of the trades at noon and then closing all the trades at expiration at the end of the day. So we're going to look at the total number of winning trades, the total profits or losses, and the maximum drawdown. Remember, the maximum drawdown is going to be continuation, right? So it's going to be the lowest print of the P&L cumulatively. So, there are multiple weeks where you have multiple losers that are going to, so that your max drawdown is actually going to exceed the width of the spread. It's not each single trade, it's the accumulation of losses and loss total throughout the study. And of course, all these trades are assumed to close at mid-price. It's about as good as you can get here. They mostly do trade around mid-price, maybe within a nickel or so, but that is just a caveat here. Sometimes, you got wider spreads here, volatility creeping up and whatnot.
Sure. Well said.
So the first one we're looking at is $10 wide wings. So this is the short strike right at the expected move with 10-point wide with a 10-point wide wing. We're looking at the different management here. So winners at 25%, losers at noon, and so on. You'll see that obviously targeting bigger winners and holding losers till the close, especially in what has been a bullish market, is going to be your highest average P&L per trade, and it actually does reduce your max drawdown, because when you think about it and look back at the market over the last 3 years, a lot of times you've had a bullish lean in the market, and so your biggest losses actually decrease there. I think the thing here is that towards the end of the day, it's kind of leaned a little bit bullish, which has bailed you out on a lot of these trades. And you kind of see that in the hold till close for specifically bullish trades. Mm-hmm. I think the opposite has come into play with the iron condors, because again, with iron condors, the bigger moves have happened kind of at the end of the day here.
Yes, agreed. I mean, you got to manage them is what it comes down to. I mean, that's, I think all our research has pointed to that and point to it numerous times.
So here again, with 20-point wide wings, as you hold them with the expected move put spread, you're going to have much bigger average P&Ls per trade. Your drawdowns actually decrease. A lot of the time, you have to keep a grain of salt on some of these studies that are just one-sided, because the 3-year data set is exceptionally bullish for most of it. And so but
that's all we have, right? I mean, it is
what it is.
Right.
And it's like flipping you've flipped the coin every day and it's been 70 or 80% heads. And that's, probably going to mean revert at some point. It might take months, it might take years, but it'll probably get closer to the probabilities. It's unlikely that the probabilities are going to be 10 or 15 points better than what they are at the open.
Perfect.
So when we get to the 30-point wide wings, you'll see that you're not really changing a ton going from 20 to 30 points wide. I think this is really what it's kind of getting at here, is that the P&L numbers essentially the same, maybe slightly lower here, just because you have much bigger tail risk, which you see in the max drawdowns here, especially when closing losers. I think basically what we're getting at here is that there's no big advantage to going much wider than 20 points, especially when you're doing strikes that are at the expected move. The relative difference in premium when you go from 10 to 20, and I'm just throwing out numbers here, might go from, the $3 or $4 premium from a $10 wide to like $6 on the $20 wide. And then when you go from the 20 to the 30, it's probably $6.50. Like, you're not getting the linear change in premium going wider. And so your wins are basically the same size, but you're putting on more of that tail risk. And that's why your drawdowns have gotten so much bigger as you've widened out the spread. So I think the key takeaway here is, keeping your spreads $10 to $20 wide is probably the spot to be, versus going $30 wide and having more of that tail risk with very little added reward on your trade.
Yeah, I agree with you. And I think you just have to, they're the type of trade, and we kind of make the mistake on the show. I mean, I know we're doing a show. We have a lot of other things going on. We're not just watching our own personal accounts and putting on these 0-day trades, but we probably should be a lot more mechanical with these 0-day trades and just put them on, put a stop buy in on them and go from there. I mean, I think we could do a better job with them, because all the data points to really trading them that way. What'd you just do here? Fastly?
I think we had like a Jade Lizard here or something, or let me go look at what this was. So we did, I'm sorry, it was an Iron Fly on March 11th, and I legged out of the put side.
Did you do this with Mikey? I'm just kidding.
No, I think this was a fast market or something like that.
I was teasing. But
and I was just looking at my positions, and I was like, what is this stock down, like 30% today or 20% today, down $5 and change. And I look at my position, and I have just the call spread. It was an in the money call spread. I was short the 22.5 35 call spread. The whole trade I did at $4.40. And so I just closed it I took $169 out of it.
From a full loser, basically.
From a full loser. I mean, it was like a $300 loser yesterday. But it was
you got bailed out, right?
I got bailed out. I was looking at my P&L. I'm like, how am I making back $300 in Fastly today? So I took that one off the board.
Yeah, no doubt. It's a defined risk trade. It was a bad trade. You got lucky. Sometimes you get lucky, and that's what it is here. With a defined risk trade, you can get lucky because, like you said, you had on an Iron Condor originally?
Iron Fly type trade.
Okay, and you took off the side that was basically worthless for a couple of pennies.
Yeah.
And you said, all right, I'm going to see where the chips fall here. I have defined risk. I've got another 50 cents or 75 cents left to lose here. Stinky trade.
Yeah.
And in 2 days or 3 days, you get bailed out. I mean, it's going to happen the other way too. There's no genius to what you did.
No. And to that point,
the genius was actually putting on a defined risk trade in something that has, almost 100% implied volatility. So
junky stock,
go to zero or double.
I will say, and we've talked about this before, of one of the things you could do with defined risk trades and even strangle trades, without adding added risk, you can take off risk. So you're not, or without adding more deltas, you can take off risk to synthetically, move your delta. So buying back that short put gets you short delta because you're closing long delta on that trade. And in a situation like this, which isn't totally uncommon, I mean, it can happen. That put that I bought back for 21 cents, it's marked at like $1.10 now.
Right.
So it saved you, you had no more money to make on that put. The put was 20 cents. You could only make 20 cents over the next, and I did that on April 1st. So, it's been a week and change. You had 20 cents to make on that put. Right. I would rather lose out on that 20 cents than have to sit here and be like, oh, I'm going to scratch this trade now because I missed out on that dollar from closing the put. Like, I'd rather take the 20 cents and be like, you know what, 20 cents more risk, no problem. And then close the trade today because I'm, making money than be a scratch.
Perfect.
Okay. Next one, a couple takeaways. So zero DT trading seems to demand its own playbook that works for what works for one setup doesn't always work for the other setup. So while smaller profit targets like 10 to 20% work for work for at the money zero DT trades, like more aggressive trades, the reduced credit of the out of the money strikes rewards patience. So holding out for 50% of the max profit has paid off with the out of the money short put spreads. This contrary to what we've done with like iron condors or closer at the money trades. Closing losers early is an effective risk mitigator for long dated trades, but proved counterproductive here. And I think that goes to kind of how these trades set up. They're very binary trades. And so if you're taking, the paper cut losses, it's really, really going to hurt you here. An out of the money spread that has been tested but not breached may be underwater at the onset of that trade and at midday because you have a lot of extrinsic value. But by the end of the day, if you've moved to the expected move and you're short that put spread, you're probably a winning trade, a couple hours after noon just because that premium decays really quickly. And so, with these out of the money spreads, and we don't have it on here, but I think the other takeaway as well is that at a point, why you have to look at that long option. Like, moving from the 20 delta or the $20 wide wing where the option might be $1 to a $30 wide that it might be a 75-cent option, you might as well just buy the $20 wide. Like the 25 cents or the 50 cents, it might not be worth it to add the extra tail risk for whatever that width is. Just consider that, the widening the width, it makes sense when those options have a significant value or synthetically selling an extra spread there. If you're getting nothing for the added risk, don't add the risk.
Well said, kind of voice of reason there. Can't argue with it. Good job out of you, son. What comes up next?
We got Jason from the trade desk. It's gonna be a great one. Yes, we do. My man.
Soon to be fan favorite. No.
Oh, always fan favorite. He's been fan favorite. We've had him on before.
Yes.
He's not new.
No. He comes on infrequently, but every time he does, he definitely corrects me, which is nice. So I'll see what I did wrong today. We'll be back in 90 seconds. It's Tasty Live. We got Tasty Trade World Headquarters, even the S&Ps. Let's take a quick look at that before we go. Haven't really talked about it because there hasn't been too much going on. I guess you could say they've caught a little bit of a bid here, up 17. I'll zoom out so you can get a better view of what's going on here. It's been nothing but A resilient market. Another V bottom. Can't argue with that. NASDAQ up 100. Russell up $1. Dow down by 100. The Russell and the Dow have been weak most of the day as even the S&Ps and the NASDAQ catch a bid. Volatility in by 14 cents. Hasn't really moved that much. Bonds 114 at the low end of the range, but a very tight-ish range. We've been having more than a point range almost every day here. Bitcoin catching a little bit of a bid here, son, up over 1,000 overnight. That'd be if it can hold on to its bid, and it has been climbing higher, but it seems like Bitcoin's holding on to these rallies a little bit, although this is the high end of its range where it's fallen from before. Ethereum up $32, doing the same. Oil in by 50 cents now. I think of all the products, I mean, I think the market is definitely, I mean, we said it was a resilient market. I don't know how else you could say it. I mean, it did seem like that. Even on the downside, it didn't seem like it was as much as it should have been. Yeah. Volatility was certainly expanding, but the market wasn't going down as much. But really, oil, $97.50. I'm going to say it's bid. I mean, it's down 40 cents today, but it's not like, you know, if we were looking at this before, you know, the conflict happened, what do you want to say oil was? Around $70?
Yeah.
Okay. Yeah. So I guess if you say oil was around $70 before the conflict started and it got up to 110, let's just throw out the highs and the lows, and it's sitting just under 100. I guess it's bid. I guess it's a little bit resilient. I mean, the market's halfway back or a little bit more, and oil is a little bit less than halfway back. I don't know. Oil seems to be bid, and I don't think that's surprising to anybody, right?
No, I don't think so either. I think the surprising part is the velocity and how quickly volatility has contracted.
So I have a question for you. If it's staying bid and there were a bad event to happen in the Strait, which would close the oil pipeline or shipping lanes, do you think oil has that 8 to 10% move to the upside that it's had in the past, or do you think that move will be muted?
I think I've been on this camp for a while now. I think the calls for 150, 200, that is just not going to happen. I think we've seen kind of the high in oil. I think we can see 110 again. I don't think that's out of the realm of possibility, but I think the oil fear has come out. Like, I think we've priced higher. The floor is higher and the ceiling is a lot lower than what everybody was feeling. I think that's where we've strangled that 80 to 110 range. Like, that's our spot. We can kind of have some short-term pops or fear there and changes of vol. I think the bigger change from markets, if that were to happen, like you get a 110, 115 handle in oil, is I think volatility will be moving a lot higher. Like, I think we have a floor for volatility. I just don't see how volatility or why volatility would get below 20 in the current situation.
Without looking, what do you think over the next 6 days, and that's expiration for the front month oil, what do you think the expected move is? It's trading 97.5.
$14. It probably puts you at 110.
That would
112.
That would be your $9 and change. So I mean, you're not too far off. That brings you to around 107 or so. So there's there's your number. How about this? What do you think it is for the next 34 days? Now remember, the oil futures that we're pricing here are just under 90, 89.
Yeah, I think it probably puts you at 100. It's probably the
So you're saying about $10 for 36 days? It's closer to 50.
No. Yeah, well, at like 100 is probably on the contracts because it's trading at 80, right?
It's trading at 90, 89.70.
That's what I meant, at 90. Yeah, so 100, that's where I would expect it to be.
$15 expected move, and I would have thought it would have been more than that, like for the next 30 some odd days. Here's what I'm looking at.
Well, the volatility's come in so much. Like, right, the OVX at 8 is at, in the mid 80s.
That's correct. Here's your $9 or $10 move for the next week. Interesting enough. But here, for if a week was 9 or 10 days, I think you'd be hard pressed to say that for the next 30 some odd days, you've got a $15 or $16 expected move in the product. I don't know. So the market is, I mean, I said it before I looked, but the market is actually pricing in exactly what we said.
Yeah.
That was the point that I was trying to make. So
beautiful.
We'll take a quick 90-second break. We'll come back. We got more Tasty Live. We got Jason coming in the house. Tasty Trade World headquarters immediately found these messages.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, we've got this man in the house. Come in, Jason, from the trade desk. How are you, sir?
Oh, wonderful, wonderful.
Happy Friday, Jason, to you.
Absolutely. 1 week till expiration Friday, monthly expiration. So, calm before the storm.
Expiration, all the craziness. We're ready.
That's right.
We're ready.
That's right. Hey, one thing I wanted to...
What is that, Jason, what does that mean to you on the trade desk? Does it get a lot more busy, or are people kind of cleaned up their positions by expiration? Just out of curiosity.
Okay, so that's a great question. So generally speaking, when it comes to monthly expirations, not gonna lie, a lot of our non-Tasty Trade viewers are the ones that are calling it, because I'm not to pick on them, but they're the ones that they'll like to hold them on the week of expiration, especially if it's going against them. Tasty Trade, Tasty Live mechanics, and all about rolling 21 days out and all that stuff.
Yes.
I'm not gonna lie, we still have Tasty viewers calling in week of expiration. Look, everyone loves a little juice. Why not? Me included. But generally speaking, when those that are calling in, about like position management, what can they do what's going to happen. I'd say generally speaking, those are the not so much the tasty viewers, because the gospel y'all preach, but it's you see a wide mix of things. Like, we've had some vol the past month, especially, and so generally I would say those have mostly been cleaned up. Those that put those positions on and didn't have any excessive risk, and those are already gone. But who knows what can happen next week? So
you got to have your head on a swivel. But I respect the peeps that keep on a little extra risk into the end of the week. I mean, you gotta have some skin in the game sometimes. It's okay.
No, there's nothing wrong with it. I mean, that's what makes a market, right? But but gentlemen, I wanted to ask you guys.
And if you're too wrong, we just liquidate you. We just say, you know what? Boom, you're out. Tony Batista shows up at your door with a baseball bat and collects.
Just to say that. I mean, look, just to piggyback off that, we're all flawed human beings. There's nothing brings me a little bit of joy, even a little chuckle, when I see one of our Tasty Live folks come up on our risk monitors like,
you guys, I've had some conversations with you guys.
Oh, yeah.
Okay.
Oh, yeah.
Yeah. On some of my own personal degeneracy. I go over there and talk to Clink quite a few times. I say, hey, you take your monkeys and you put them on somebody else's account. You put a flag on mine. Don't touch me. I'm doing my thing.
One of my biggest, a big reason why I manage my risk is one of my biggest fears here at Tasty, in my career here at Tasty, is getting a phone call from Rashes, also known as Slappy. I never want to get that call from him, because if it's reached that point, that's... Ugh.
Yeah, you're in trouble.
You're in trouble.
I don't want to spoil it, because he's the pseudo enforcer.
Yeah.
He's also the nicest guy in the world.
He is.
So I don't want to take away from his mystique, but certainly the nicest guy we have.
Oh yeah. But speaking of holding risk, I just wanted to know, gentlemen, as we get into the summer months or vacation months, like I'm taking a week off in May. I don't know how they approved that, but they let me.
That's
just curious,
okay.
What do you guys hold risk into vacations? I had to ask this. My wife told me, it's like, I wanted to ask you how y'all do it, because let's face it, we're talking about being engaged with the markets and so on and so forth yesterday, especially with sports betting.
I try to kind of lighten up. I mean, we've talked about this before. Like, if you have an extended period of time, and I'm a junkie, so I'm watching the markets despite being on the beach or wherever I am on a vacation. So I'm always watching the markets. But the easiest thing you can do, take some risk off the table, take some units off the table, close stuff that's working that might not be 50% of the max profit. Maybe it's at 30 or 20 or whatever. Just taking some stuff off the table so it helps you sleep at night a little bit. You can relax.
Yeah. I mean, it's especially worse because I'm going to the motherland and go see my Taiwanese pals.
Yeah, your motherland is different than ours. You said that, and my dad was like, "Oh, you going to Italy?"
The other Italy, Taiwan. But I mean, the hours are flipped. So as I'm winding down, I'm ramping up, pulling up, logging into the platform, seeing what's going on, and then if the wife hears the ding, I'm in big trouble.
Yeah. I get this. I get the same thing.
Well, you're in big trouble because you'll have to confess how much you made on the trade.
No, we'll have to cut back. Looks like we're not going out to eat tomorrow night, hon.
Never a profitable trade.
Smart.
Remember that. Never a profitable trade.
Never a profitable trade.
You have to keep them in the know. Never a profitable trade. It's hard to pare down. I actually went on vacation during that 2 weeks ago during the big meltdown.
Oh my God! And he was texting me the whole time. What the hell? What happened? What's going on here? What do you?
I did text him once or twice. I will admit that it was a low point in my life because I was just getting too big. The numbers were just getting too big.
Oh yeah.
It was a surprise. It was a surprise having a market move like that. But it really was. I don't know if I would change it. I don't think I could change it. You know what I mean? Like I don't know if I would do anything different. I might have maybe in this instance, I might have probably saved myself a couple of dollars, because if you like a stock at 100, let's say, and you put on a position that benefits from the stock moving higher, and you reduce that position by 50% because you're going to go somewhere on vacation or whatever, and the stock goes down to 96 or 7.
Oh yeah.
You're going to put that same position back on again. I mean, I don't think you're going to sit and pat yourself on the back and say, "Oh, I lost less money."
Yeah.
I don't think you're going to do it. You're going to look at it as an opportunity to get more. And then it goes down to 95 because you never get the bottom, right?
Yeah, exactly.
So, and a break also helps you not overmanage.
That's true.
Because sometimes you like you're talking the emotions of like a big move. You were kind of forced to just sit with your positions, which you were comfortable with prior to the move. So that's another thing. That in combination with closing out risk and kind of lightening up risk. I've had some of my best weeks being out of the trading zone.
Yeah, me too.
It's like one of those where you're like, damn, that was awesome. I didn't even see it, but the numbers look good.
Yeah.
Like last year during Liberation Day, I was at the Badlands in North Dakota, and I had my phone. I'm like, oh, I gotta get
satellite, help me. But that worked out pretty good for you.
No, I had some puts on, unfortunately, so I was sweating bullets. Nothing. It reminded me like later that week, we went to the Mall of America. I was like, you know what? We're cutting through Minnesota. I was like, let's just go there. And it's crazy. It was the Friday following Liberation. And then everything was tanking. And here I am just walking around Mall of America, and I'm looking around. I'm like, man, people are still on roller coasters, still going to Lululemon, having a blast. And they don't know that spoos are down 250 handles right now. But everyone's eating your auntie hands. But anyways.
So you just mentioned something there, Jason, which is actually a phenomenon that I don't think we realize. The public, and I'm talking about the vast majority of the public, doesn't care about the day-to-day movement of probably their biggest asset that they own.
Yeah, they don't even know most of the time.
They don't even know.
I haven't got the text from Gina yet to that point. The text on the down days when it was all over the news. I was getting those texts. You stink.
Yeah, but she has somebody who's going to look at it. She has somebody who's going to look at it day to day. Somebody who just has money in a 401k, and I have a 401k just like everybody. I believe everybody else who's had any type of employment, and I like to watch how it behaves to the overall market. Now, of course, it's going to move not one-to-one on a percentage basis. It usually goes down a lot more than the market goes down, and it usually doesn't go up as much as the market goes up.
Yeah.
But the numbers can get quite disturbing. And a lot of people don't look at it or even trade it, which is kind of
wild.
Because it's the person's biggest asset, maybe besides their home.
Yeah, exactly.
Yeah.
So, with that said,
well,
let's get down to some business, fellas.
Let's do it, Jason. Thank you.
All right. The list here. There we go. Starting at 20. Top 20 symbols rolling through the system. First 90 minutes of the day. Coming in at 20, nice. Apple at 37, Netflix at 52, Oracle at 47, NBIS at 66, CoreWeave at 34, SOXL at 43, SMH at 52, Microsoft at 94, SanDisk at 77, SLV at 46, last 10, Intel at 94, Meta at 55, AVGO at 31, GLD at 47, MU at 69, Tesla at 14, Palantir at 49, last 3, AMD at 59, Amazon at 57, Nvidia at 4.
And to that point, Dad, we were talking about like some of these SanDisks, Lights, all these stocks.
Yeah.
SanDisk was 873 at the open. It was the high. It was the high print of the day. It's now basically unchanged. I mean, these things. You gotta be just YOLOing these. You can't sell spreads. You can't do iron condors. You can't go 30 days out in time. These are pure speculative juice. That's it.
Yeah, I agree with you. And your AAOI is another one. I mean, I think it opened at 140, traded down to 130, and traded up to 150, and it's sitting there at 146 right now. So
Fade the first move on those.
Yeah, these
either direction.
Unfortunately, they don't have the greatest option market. So although I'm looking at AAOI right now, and I'm going to try to see the open interest or at least the volume.
Oh, they trade, but it's all short term. Nobody's trading them 30 days out in time.
What the heck does AAOI do?
Optical.
Yeah.
It's in the semiconductor suite. It's the next realm of juice there. We've gone memory. Now we got like optical, fiber optics, that sort of thing.
You're right. 4 times the volume trading in the 0, 7, 14 days as the 35-day options.
You say that like I'm not always right. You said that like, oh yeah, you're right this time.
Jason, we've come to the end of the week. It's been a long road dealing with him for most of the.
Look, I've only had 2 days. I can only imagine. I mean,
I know.
At his desk right here. I'm like, good grief.
Every day I get to spend with my dad is beautiful. Okay, it's a blessing. It is a blessing.
It is. All right, gentlemen. I'll take care.
All right, my friend. Thank you so much for coming in. Appreciate your time. Nick, appreciate your time too. Let's take a quick little look at the market before we say adieu to our friends. Let's go to the market that has been in the news first, even ahead of maybe some of this move in the market itself. Oil up $96. That's about as high as it's been since we've been on the show. Trade up to 100, down to 100 and change, down to 97. Even the S&Ps are up around $9. Nasdaq up 92. This is the way it's been all day. Even the S&Ps and Nasdaq higher. Russell and the Dow lower. Volatility up by 10 cents. I think a good call on volatility. The volatility wasn't going to move too much here today to the downside. Bonds are down 6, 113.30. Bitcoin hanging in there up around 850. Ethereum up around 30. I already mentioned oil. Gold down $15. Silver up 15 cents. Big market movers to the upside. Obviously, the Nasdaq, which is right here, the Nasdaq futures.
It's the semis, the semiconductors, man. These things are going nuts. I have a call diagonal spread, June, May, long delta there. I mean, this move has been incredible. I sold the 450 strike in the 7-day in SMH at $4.50. Small little hedge into this up move, but man. Woo!
Oof. And you close some McDonald's calls. McDonald's down $4.
I sold those yesterday into the rally too. I'm long a May call too. I'm keeping that on.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace. Thank you for your week, son.
Have a great weekend,
all
everyone.
For your week out there.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing. for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
everybody, and welcome to TP and VLD Flame Shirt Friday show.
Hey, all right, Liz, do you think the collar up is a little too much?
No, never.
Is a little too greaser looking for me, because I'm not really,
The more greaser, the better, TP.
Hey, by the way, not to I don't want to make this a controversial show, but just really quickly. So my younger daughter is turning 21 this April.
She is? Your youngest daughter is turning 21 this April.
All right, yeah, let's not belabor that point. Anyway, so what we want to do, what she and I are going to do, is take the motorcycle class to get the M designation on our driver's licenses. So it's like a 2-day class. So we're going to go get our own helmets and stuff like that. But anyway, that's probably going to be maybe in early May. but it's talking about greasers.
No, I've got questions.
Yes,
Do you
ma'am.
have a motorcycle?
No, because my wife would kill me in my sleep if I ever got one.
Okay.
But my daughter, she's of age, she's of legal age. If she has the money, there's nothing really stopping her from getting a motorcycle. But I thought it would be fun to say, yeah, I know how to ride a motorcycle.
So you can take the class without having a motorcycle of your own?
That's the whole point, yeah. So like you need a special designation, I guess, on your driver's license that you've passed the test. And part of the test is driving the motorcycle. And yeah, if you don't have one, it's which came first, the chicken or the egg, right? So there are these companies that they bring a trailer full of motorcycles, 6 or 7 or 8 of them. And they have people, come and you hop on their little, they're not big motorcycles, but they're enough to teach you how to do it. So that's what we're planning. And so my wife now is thinking, oh my God, my husband and younger daughter are going to turn into these bikers.
Yes, well, pop the collar and you better wear this to the first class.
Well, I have to wear I could wear this over like a long sleeve shirt.
Yeah, there you go.
All about safety, Liz. It's all about safety. So
wait,
go ahead.
Before you go any farther, okay, she's turning 21. Do you have to be 21 to get the motorcycle designation?
No, I don't think so.
You have to be 18? So my daughter is turning 18 in the beginning of May. She's getting a trading account. We've been talking about this a lot. And she wants to go skydiving. And I said no. She doesn't know that I have no authority over her when she turns 18, but I said no. I might actually maybe ease in and say, I'll get a motorcycle license with you instead of going skydiving.
Yeah. Oh, wait a second. You would go with her?
I would go get a motorcycle license. I would not.
No, but I mean, was the skydiving like a mom-daughter thing?
She asked if I would go with her.
Yeah, that's a little.
I might have to send Vanetta.
It's a little bit on, as I say, a little bit on the pay grade for me on that one. I'm not sure if I signed up for that when I became.
But I'm very excited to teach her options because she has a very healthy risk appetite. So
good for her.
Yeah,
good for her. Yeah, I mean, if she's skydiving, hell.
Yeah.
So what Liz and I talk a lot outside the shows and all that stuff. And so one of my points with Liz, you have one kid in college, one kid heading to college.
Yep.
And a husband with expensive tastes.
True that.
You need some winners. So we're gonna try and do, I think, maybe at least three real live trades today, because you've done an awesome job with Jenny out of town. You've got a lot of really cool, interesting guests, and there are so many things to talk about. But we need to do some trades.
This is what I was talking about with TP yesterday. I love all the guests. I love having them on. But when that happens, I managed the account. I closed a couple things, but I didn't really put anything new on, except with I did a couple trades with Fazia. She was wonderful. She's cut of the same cloth.
Oh, so Fazia is awesome.
Yeah, she's great. She is. Do you want to jump in the platform? And
let's do an SPX. What do you want to do? You want to do an iron? Do you want to do sell a put spread? What do you want to do?
Well, you know what I was thinking? Do you want to go old school? I just want to go old school with you for 1 second, if that's okay.
Old school.
I'm just going to go to the watch list.
Yep.
Okay. Not defense stocks. That's our old watch list. And I'm going to go to Tasty Default. Where the heck is that? Oh, let's go. Yeah, we'll go Tasty Default. And then I'm going to sort by IVR.
Yep.
Okay. And then we'll maybe.
Oh, let's short Microsoft.
I know, but I already have a position on Microsoft.
Because Microsoft stinks.
You're bearish Microsoft, TP?
Those Mag 7 stocks, with the exception of Meta, they're not doing well. I mean, I guess Amazon and Apple are up, but like Tesla's down, Microsoft was down.
What was Nvidia doing? Because that one has kind of been stuck in the mud.
Up, down 34. Nvidia.
That's I typed it wrong.
Easy.
First day with a new set of hands. So up a little bit.
Yeah, up 2.5%. But that's basically really trading in a range.
Yeah, and it's got a 3 rank, so it's not even on our list. Okay,
so
let's go old school. I've got one of the best trading minds in a flame shirt ever to trade on my show today. So if I show you something like this, and we're going to try to avoid things Microsoft because it's got that little circle on it right now. What would you? And I don't have anything else in there. I have Microsoft and Snap.
Do you want to do CMG? Do you want to do Chipotle's $34? That would be a relatively low capital trade.
92 IVR. There's got to be earnings.
Yeah, it's got to be earnings. Want to do a 0 DTE and CMG? Let's see what we get.
There's going to be nothing.
Nothing. It's too cheap.
What about, do you want to break all the rules and do a 7-day?
Yeah, I do 7 days all the time. Let's do, you want to sell the 33, like the 33, I'm trying to match them up. Yeah, like the 33.35.
That's not bad. 33.35. You're getting 80 cents. Now, what I like about this TP is this is 7 days. It's pre-earnings. So you and I both know that if the wheels fall off scenario, if we don't get to keep our 80 cents, I'm either going to be long the stock or short the stock, and then I can do something. I can do something with the earnings premium.
Yeah, and here's the trick. And I can do it on my phone, I think, because I want to trade alongside with you. Because Liz, I take risk along with everybody else. Okay, that's what separates traders from everybody else. You can have an opinion, you can talk about stuff, but unless you're putting money down on the table, you're not a trader. So I like this. Here are the metrics that I look at this trade for. I'm collecting almost $9 of theta on that trade. And you say, well, of course, because it's got 7 days to go. Yeah, but still, it's $9. That's a lot of money. I can make, if I take this off for half max profit, $40 versus $619 of buying power, that's a relatively high return on capital. I don't know anything about CMG. All I look at are those metrics. I'd try to offer this I'd try it maybe 82, see if you get 82.
See if it can come to us. I like it. So
maybe it's worth it.
7 days.
It's worth a try.
The Chipotle Mexican Grill, selling a strangle. We've got it's about a 35 delta on one side, 32 delta on the other. I like it. I'm shipping it, and we'll see if we can get filled. I actually don't mind. I know we went the opposite way with it. I'm going to penny it down to 81. I'm going mid.
Yeah, just because we're going to miss it.
Yeah, I want to get filled on it. So I've got it working mid market. We'll do this. Now Chipotle is pretty active. So I mean, it's pretty liquid. 2 million.
Yeah, I mean, it's got some decent volume in there. It's not huge, but for a $34 stock, I think it makes it very accessible.
I like that. We're breaking all the rules, trading all the 7 days. Okay.
Oh, it's fun.
It is fun. Okay, let's go next. We'll do this pretty quick. We're going to go back to the watch list. What do you, I kind of want to go to a GDXJ only because I know they won't have earnings.
Yeah, let's go to GDX. Let's
Google GDX.
GDX or whatever. Bullish or bearish on gold?
I lean slightly bullish on gold, but that doesn't necessarily mean I need to be in GDX, right? So I'm looking at this. I've got a $99 product that has, and my IV rank just got covered with that, with a 73 IV rank. I would almost say neutral. What do you think? Because it's not going to be too expensive. We might be able to.
Yeah, but let's see what the 0 DTEs are paying us, Liz.
Oh, I love it, TP.
Come on, all right, it's cheap. I mean, the 90, 99, 100.
Now the problem,
it's a capital intensive trade. That's the problem.
Well, and it kind of should be capital intensive because at the end of the day, no matter what happens, unless it stays right here, if it moves 50 cents in either way, you're going to be the proud owner of, and it's going to cost a lot more. So it's a very capital intensive trade.
Okay, fine. Go out to 7 days.
I love the 7 days. Oh, look at all this juice in the 7 days.
Oh my God, it's dripping with juice.
What about a standard deviation?
A little wide. Yeah, so Liz, what I do when I look at these trades, and TP, you're all about the probabilities and deltas, yada, yada, yada. I look at the actual option prices and match them up.
Oh.
The reason I do that is the market is smarter than I am. So I would sell this for $1.29, and if I can make 65 cents on that, again, compared to its buying power reduction, is a relatively high return on capital. That's and I'm generating $24 of theta.
Yes. Do you know
Fire away.
You know what I think is fantastic about this, TP? I like this segment. Once again, I know I talk about this a lot. I like this for younger people too. Now, granted, it's a lot of capital for a younger account, but it's instant gratification.
It is.
They like to see it faster. Ooh, we're filled immediately.
It
now,
is. Take a fill.
Because we're filled, I'm going to immediately go in and put a 50% GTC in.
Yeah. And that's that mechanics. And like I was saying, Liz, so I'm not smarter than the market. If the market is saying that the 106 call is worth 60 cents, and what was the put side?
Slide down. Yeah, 60
93 is worth 65 cents. Those option prices reflect the same probability. The market is assigning the same likelihood that the stock is going to hit those prices. That's all it means. If it's biased one way or the other, that's the way the skew is pointed. Okay, I don't disagree with it. So that's what I do.
TP, you know what I've always wanted to do is a segment where you cover up what it is. So you just cover this up so nobody knows what it is. You can answer any questions you want, just because people form opinions on what it is. Kind of how we came in and you said, are you bullish or bearish gold? I would love to, because you're the one who taught me, and from very starting out as a retail trader, that these are just the numbers and it's just the probability of it coming out. So you kind of look at it without that kind of feeling about the stock.
Yeah, and the more I start to do this, the more I just cover up the stock symbols on watch lists and just show me, because I've been doing a lot of work on market cap and volatility and stuff. Just show me the numbers. That's all I care about. All right, hey, you want to do a 0 DTE in crude oil?
I do. Hold on. Just because this was great. I love it. We've got 2 trades on, and I want to say thank you to TP for helping me through those. I'm going to go right here. We're going to take a look. This came from Scott Sommer. He says he knows 0 DTE SPX is huge, but haven't heard much about the 0 DTE on oil. We don't have any studies yet, but TP and I will do our own case study right here, live on air.
So it's To Scott's point, I haven't seen any studies on that yet. You're absolutely right. It comes down kind of to a question about data. The equity data and S&P SPX options are part of the equity world is a little bit easier to get and manipulate than some of the futures options data. So it's for the research team. They have all the stuff loaded up and it's all ready to go for equities. Why is it harder to do futures? Futures, you have different futures months, right? You've got basis stuff, you've got carry stuff. It gets a little bit more complicated. For a trader, it's not complicated, but when you're trying to build research pieces, you want consistency. So Scott, that's kind of why the research team, maybe you haven't done seen research in CL. However, cover up that symbol, Liz.
Yeah.
This thing, whatever it is, has a 55% IV rank, has 127% volatility in the 0 DTEs.
So what TP's referencing is this column right here, where it's this volume column right underneath it, 127.3, which is give or take $1.95. Now keep in mind, CL is big. So $1.95 is big. It's not $1.95.
Right.
Yes.
Right. So let's just pop that up. Maybe it's a little too much to do a naked strangle in there. Let's sell their markets are a little wide. Let's maybe sell the 97.75s.
Oh, 97.75s. Okay.
Well, whatever. I don't know. I'm just floating around here. And maybe the 99.75s.
Can I make a suggestion?
20,000. Let's
because it makes me feel better. I'm going to go to a little bit rounder of numbers.
And I would condor this off. Let's buy something like the 101s or the 100 half.
I just want to see 50 cents wide. Let's see.
And the 97s.
That's not bad.
Ooh, no. See, that's why you do this. Even if you have $20,000 of capital to put towards a trade, the return on capital isn't high enough. In other words, $20,000 that I could make, $1,000. No, that's not what I want. I'm willing to make a lot lower. In other words, buy the 97s and the 100 halves. I'll make a third of the profit from 1,000 down to about 360, and what?
Look at
less than 5% of the capital requirement, something like that.
Look at your max loss here too. This is honestly, TP, this is, nothing we don't say, nothing we do is a trade recommendation, but taking a look at this,
right.
Your max loss is 190, your max profit is 310 today. So wheels fall off scenario, and CL gaps up wildly, which, hey, in this political environment, it could happen. The most you're out is 180. If it gaps down wildly, the most you're out is here. It's even moving now, 110.
Yeah.
But if it stays within this range, you get to keep all of it.
Yeah, and I would do the same 50% profit. I would offer this out at 27, look to buy it back for 13.
Right. Now,
go ahead.
Is with the zero DTEs, we've done so much research with Jacob. Once again, there is none on CL, but they have said with the zeros, take less than 50. Now we did 50 because the 80 cents on the last one, I get that's not a lot of profit. But if you're getting $300 in max profit, I'll take a third of it. I'll take $100 instead of 50%.
Perfect. And this is where you get to control it. So to Scott's question about, would you do this? Absolutely. Okay. I'll do this trade after the show because I think it's fun. CL is a put on your big boy pants or put on your big girl pants. It's an expensive product, $1,000 a point. It moves around a lot. That's why its volatility is high, and it's driving the market right now. But I would absolutely trade zero DTE CL options. But what if I'm assigned? All right, so you get a future. Deal with it. So you get a future. And the bottom line is, if crude oil does start breaking through your short strikes, it's probably going to continue and go through your long strikes too.
Okay, now I know you said so what, so you get a future, and I love that comment out of UTP, and it did make me chuckle because if you do get a future, it's only going to hold up about 38,000.
Yeah. It's whatever. It's pocket change.
But
so the point
is you and I are so desensitized to that because you and I both know. Let's talk worst case scenario right here. So what? You get a future. And that's why I think a lot of the research is in the SPX because it's just cash settled. End of the day, no matter what happens. Here, you would get the future. You'd either be long or short it if it ends in the middle. But you and I both know that if you get that future, you can trade right out of it.
Yes.
Well, let me ask you this, TP. Would you be able, if you didn't have enough money in your account, they'd still give you the future, right? And then you'd have to buy it back immediately?
Yeah. Yes. Yeah. Oh, you have to take the future.
Yeah.
Because there's somebody else exercising it. There's somebody else on the other side, and they have to make that other person good, right? Yeah. But if the position is too big for you, you just close it out immediately. Yes. And you take whatever loss there is, and you're done.
And the other thing, too, that I think people fail to realize is that, okay, zero DTEs, we put in a closing order for it. Now, ultimately, at the end of the day, I do like the SPX but I'm still closing my SPX orders. So it's the same thing as the CL orders. I've got an order in to close it. If it's completely, if mind-blowing move, I leave it and one exercises and one assigns, but I could still close it for full loss at the end of the day. So those zeros in SPX, they're leaning that way because people think they're going to, set it and forget it and walk away because they're trying to take full profit. I'm not trying to take full profit here. I'm trying to take a third. So either way, I'm watching it with a closing order. Right?
So here's why are we looking at CL? Okay. Because it has high volatility. But can't I just build my whole trading career trading SPX zero DTEs?
Sure.
Yes, you can. Here's what's happening. Here's what happened to me this morning. Go in to sell some premium in my SPX zero DTEs. I was going to sell an iron condor. I sell them about 25 points wide. They're nice and wide.
Just hold on 1 second. I just want to kind of break forward just because I want to talk. I wanted to put this in there at the time. So it is now 10:21.
Yep.
And GP is going to talk to me because I said save it for the show about his journey with zero DTEs this morning.
Right. And so here's what I did. I went in and I looked for the $2 put The 6805s.
Okay.
And then I bought the, what's 25 points down? The 6780s?
Yeah, 6780s would be 25 points.
And then I sold the $2 call, which is, let's say, the 65s, and I bought the 90s.
Okay. This is very Jack Tucker-esque.
Yeah, I'm sorry?
This is very Jack Tucker-esque.
Very Jack Tucker-esque, and it's a little expensive and whatever. So I go in, and it was trading at about 260.
Okay.
And I thought, okay, I'll go in at 260. And these were not the strikes, but it is the same logic I was using. Find $2 options, 25 points out for the longs. 260, nothing done. Nothing done. Wait 5 minutes. Oh, they're 255. Nothing done. Okay, 255. Okay, they might come back. 250. Then they sucked it right out. 240, 235, 225.
We can watch this in real time. I locked that 260 price on here.
Right.
As we're talking, you can see it go down to 250 to 255. It's getting sucked out of it as we speak.
So, what was my choice? I could, quote unquote, chase it, right? I could say, 260, they're not playing. I'm going to take it down to 255. Not playing, 250. I could chase it down and maybe get filled at, let's say, 220 or something like that. Maybe if it were lower, I'd have to give them a nickel and I could get filled. To me, though, it's if I don't fight for those nickels and dimes on these irons in zero DTEs, it makes it harder to make money, in my opinion. In other words, it's the richer I can sell these things at 9 o'clock, the faster I can take them off. And if I start chasing stuff, and yes, I'm willing to maybe give up a nickel, and that's probably what I should have done, because it would have been a winning trade.
Right.
But I'm not going to chase it. I'm going to put my hands in my pockets and go to crude oil. Okay, zero DTEs.
Pick a different product, right? So if you're going to be product agnostic, you can pick a different product. Take a look at this, exactly what you were saying. Like I said, you talked for about a minute and now it's 245. Instead of 260, it's 245. We're seeing it in real time. Now, TP, this is the iron condor. So what's happening when you're selling both sides is even without any movement, the vol is coming in, right? Vol is getting out of this thing.
Right.
Versus if you're doing just the put spread or just the call spread, it can come to you because if you get the movement, that price will come to you. So this is interesting because this is a vol play. When you're selling both sides, this is straight up volatility.
And it's up to you. Oh, now the 270. But the point is, why is this important? Because I do this every single day. So most of the times I get filled, sometimes I don't. But it builds market awareness. So when I say, hey, Liz, it looks like they're sucking volatility out of the market, it's because I see what they're doing to the prices of a specific iron condor. Mm-hmm. And when I'm not filled at my price, they're taking vol out.
Yes.
It builds up a lot of market awareness. And with the zero DTEs, you do it again on Monday. You do it again on Tuesday. You do it again. In the old days, it was like, well, every expiration. And now you learn so much faster. So that's why, whether or not, Liz, I don't know. Do you chase these things? Do you give them a nickel? What do you do?
Well, so what's interesting with me, and I've been sticking with this, is I'm doing one side only in zero DTEs because I feel like it's easier for me to get filled. And usually you do. Because if I'm just selling a put spread, if you get one tick down, I'm going to get filled. At my price, right?
Yeah.
And it's typically, sometimes you don't want to, but I can let it come to me. So that's what's different about the fills with the zero DTEs. But I like this. I'm going to put you're going to get a gold star for something that you said. And it is, your gold star is the fact that you are looking at this, building market awareness, knowing that the volatility is getting sucked out of it. No one would know how to say that because your IV rank up here in this corner has not changed since we've been talking. But the implied volatility, time is passing, and you're actively watching at what happens to out of the money options as time is passing.
Right. And Does that mean you have to be glued to your trading screen? Not really. I mean, maybe if you're doing open heart surgery, you can't look at your phone. But in most other, or maybe an electrical lineman, right? But in most other jobs, you can just check and see see how your order is. Right? See if I'm filled or not. And the nice thing about the platform is I can go into my activity page and I can see the price that I'm working it for, 260, versus what the mid price is currently.
Right, which is amazing. So then you can decide if you want to cancel it or not cancel it. So you dispelled a misnomer that a lot of people say, and I've had there's a lot of there is no right or wrong. I mean, trading is a choose your own adventure. It truly is, and everybody can do what trading is a choose your own adventure book. But so this week I had a lot of different guests on, and a lot of different guests like the zero DTEs. Some like them, some hate them. Right. So and there's no right or wrong. There is no right or wrong with this. But the common theme or the common thread that I saw with both the chat and with Twitter is that if you're trading these, you have to be glued to your screen. And I think the exact opposite, especially with SPX. Now with oil, I might, because I don't want the $39,000 future. But with
My God, Liz, you're going to go skydiving and you're worried about a crude oil future. Okay, fine. You do you, Liz.
So I think these truly are the set it and forget it. And like I said, that's why I've got my son looking at these SPXs, because you can just put it on and walk away and go to class.
Yeah, and that's because you enter those GTC orders to buy them back, and it's kind of like, as you said, set it and forget it. It's the more I do this, and granted, you and I have been doing this for years and years, the less glued I am to any specific position. What I am glued on, what I'm really looking at, is what the next trade is going to be.
Yep.
Because go ahead. I'm sorry.
No, it's 230 right now. Take a look at that. You went from 260 to 230 while you're talking.
And that's what I mean, Liz. They're sucking vol out of this market, and the VIX is down. Do you have the VIX? Do I have the VIX?
I'll pull it up. We'll go to the VIX. Okay. Yeah, because we can take a look at a bunch of other.
Yeah, the VIX is back down in the 19 handle. And where I was saying, last week and all this time, I did a video on YouTube about what the importance of the volatility in zero DTE options.
Oh.
You won't see.
Would you like to show me where it is? Because which one was it?
I don't know. It was down there somewhere. You see my grim visage somewhere.
I love looking for your face down here.
Yeah, there we go. 3 days ago. Premium sell zero DTEs. And the point is, don't think that 26, VIX at 26, a VIX at 30 is going to last forever. It usually doesn't. Maybe it will, but it usually doesn't. Yeah. And you have to get, as a premium seller, you have to get paid when it is, okay? Because it sucks when VIX is 14.
Oh, it's like watching paint dry. And there's not much to do. You are right. You have to seize the opportunity when it presents itself. And these zero DTEs have had a lot of volatility, and they've been gaining so much traction lately, especially in the SPX. So I'm glad we tried it. We're still working the CL. We're going to let this come to us. But we were trying to work it I'm actually trying to work it for less than the midpoint.
Yeah, the markets are a little wide in there. And like I said, when it's volatile, the old line is, keep those markets high, wide, and handsome. You just widen them out, and the market makers don't want to take risk.
They don't.
So,
okay,
Liz, I have a question. A question came up.
Shoot.
Every trade we did was selling premium.
Correct. Today.
Yeah, today. And I'm not saying we don't ever buy it. But one of the questions that came up, Fabio had a question, sent it to me in an email, and I like to address it to the audience because a lot of his questions are they're kind of next level.
He is next level, and I'm actually very interested in what you have to say about this as well. Is there something you would like me to type in the platform so people can follow along, or is this just?
Yeah, let's go back into SPX just for the heck of it because it's kind of easy. Let's go to the trade page. Let's load up open interest in there.
You got it. Do you want 0 days, or where would you like to be?
Anything or the 6 days. Let's go to the 6 days, the AM, the April 17th.
Okay,
and let's open up the open interest, and we'll take a look at what he might be talking about.
Okay.
So, and those are okay. Yeah, we can just go with this for now. So when you read about, or when you go to certain trading discussions, certain financial media, not MSNBC, not CNN, not the standard sort of talking head, with CEOs and stuff. When you go into a little bit more digging around into the trading world, you'll hear talk about gamma risk and Vega risk.
Do you want me to move this to Gamma and Vega?
No, not necessarily. Well, yeah, you can. Sure.
I can go back and forth whenever you're ready. Like, we'll talk open interest first, then we'll go Gamma.
So what does that mean? And everybody or I shouldn't say everybody, but gamma is just it's a theoretical number. It says, how much is my delta going to change?
I'm just going to change it while we're talking. It's usually an actual number, but in the near term, it's not there. Let's go to, I'm going to go farther out in time.
Yeah, let's go.
I'm just going to go to 45 days, like the standard options. I'll go 49 end of month. And you're still.
No, you know what? Because the stock's so high. Let's go into something like, let's go back into CMG. CMG will have gamma.
Okay, 7 day, or do you want me to go farther out?
It doesn't matter.
Here, I just went a little farther out. We're in June, 69 days, so there's an actual number. Here, this is an actual. I mean, it's not an actual number; it's a theoretical number, but it's got a value.
So gamma is how much your delta changes with a 1 point change in the stock price. That's what gamma does. And Fabio knows that. You know that. Most our viewers, most of them know that.
Right. I just pulled it up. Like I said, I'm just going to do this. Here's your delta. So what he's saying is that with a 1 point move in the stock, the delta should go up by 0.06. So if it's 55 now, it'll be 61.
Yes.
Okay. I just wanted to visually show people. Okay, keep going.
And Liz, thank you for pointing that out. Because, and this kind of answers both the gamma question and the Vega question. So what happens is these Wall Street banks, Goldman Sachs, Chase, all these big banks, they have dealing desks. They're like market makers, but they see what customers are building up. And what they'll talk about are concentrated positions at certain strikes. And when you have a lot of short options, I'm sorry, Liz?
Now I'm going back to open interest.
Yeah, open interest.
Yeah.
A lot of concentrated positions at certain strikes. Gamma is highest, and Vega is highest, by the way, when the stock price is right at the strike price. In other words, the at-the-monies have the highest gamma and Vega. What they're talking about specifically with gamma, okay, is if the stock goes to one of these strikes where this pile, like the 3160s on CMG, have all the way down those puts. Yeah, I mean, it's 35,000 open interest on the 27 halves.
There you go.
That's insane. So what happens is if CMG drops from 34.11 down to 27 half, all those short options, and somebody short those options.
Well, somebody's
all those short options, the delta explodes. So suddenly, it's not like you have this 0 delta option, like a 5 delta. Now you have a 70 delta. Okay, you got 14. It's gonna have 4 times the delta it does. Okay, your delta risk explodes. So that's what they're talking about with gamma risk. That if the index or the stock goes to a certain strike where there's a pile of open interest or a range of strikes, here they go from 25s to 5,000, 3080s or 5,000, 3160s, 5,000.
Yeah.
That's a lot of open interest. And okay, Liz, it's a zero-sum game. For every long, there's a short. Yes, but there's a difference when you have 5,000 individual traders trading one lots.
Or you have one institutional investor.
Or like one institutional trader trading a 5,000 lot.
Yes.
You and Liz, you're big by big. I'm trading one lots. And if it gets down to that strike, I'm going to have, 40 delta worth of CMG. I can handle it. If I have 5,000 of those things, I have an enormous amount of stock risk that my fund can't handle. I don't want to take that risk. I need a hedge. I need to get out of that stock. I need to do some negative scalping maybe to save that position. I don't know. But what happens is it adds a lot of price volatility. If CMG goes down to 27.5, expect to see some more price volatility. In other words, not down 16 cents, try up and down 70 cents.
Intraday, right? Because
intraday. As those short options battle the position. Vega risk, same thing. When you have a lot of people selling premium, back when the VIX was at 17, 18, and loading the boat on short Vega, which is what Liz and I do this every day. We sell iron condor, strangle, short put spread, short call spread. We're short Vega. And it makes more. It's a lot of there in the omnibus about at the firm. There's a lot of short Vega. There's a lot of risk when volatility goes from 18 to 26. When the VIX goes up like that. That's Vega risk. It's typically not so much when volatility drops. What they're worried about are concentrated short option positions where when the Vega spikes higher, the short options get creamed because they're short Vega, and the people need to scramble to take positions off or, hedge them in some way.
Correct. So let me ask you this then, TP. Well, I mean, I know this probably wasn't Fabio's question, but do you think that it's almost like a self-fulfilling prophecy, or it's kind of gravitational pull towards where there's lots of open interest?
It depends on the stock.
That is like an old wives' tale, right? So the big round numbers, or the where there is concentrated positions, that is the wives' tale that it's going to gravitate towards it.
Kind of, and for me, it depends on the stock. I remember years ago, I think it was Amazon that would always pin to a strike. Some stocks do. Do I think does this mean that CMG is going to go down to 27.5 in 69 days? That far out, I have no idea. Okay. But the point is, I think you can see some of this happen in SPX a little bit, where it might grab, especially like the 6 days or that's what they're looking at with these open interest numbers. And some of these numbers get big.
So
there's nothing huge here.
I get this pulled up already, and I want to show you this because we went into it, and you and I didn't talk about this, but I pulled up the SIBO's most active because you can see what's trading today, and this is just most of them are in SPX, but I mean you can do calls puts, you can do equity options, but let's just stick in the SPX real quick up here because to your point, these are all today's options, and there's a lot of volume going up today's for these 68.50, 68.80. So let's take a look at that and see, kind of assess that situation. So 68.50 is right here. So you can see 10,000 options traded.
Well, yeah, that's open interest. And open interest, by the way, updates overnight, I'm pretty sure. And the volume might be a little delayed. I would go with the CBOE numbers on that.
I would too.
Because the data.
I'm in the 6 day. That's what the problem is.
Right, because the data gets percolated around.
Yeah, here we go.
68.50s, 58,000. Yeah.
50,000 have traded with an open interest of only 8. So I watched this the other day when I was on last call with Tony Batista. It was the 6,800s, 195,000 of them traded.
Yeah.
Of the 6,800s. And at the end of the day, and once again, I'm putting a story after the fact onto it. So I don't really think that there's anything behind this. But at the end of the day, we watched it in the last 30 minutes gravitate right up to that strike.
Yeah. And that, by the way, is market awareness again. You put that in your mental database of market events. These big ass trades coming through. Somebody's placing big bets, and yeah, does it gravitate there? Sometimes. Would I bet the ranch on that? No, but what I might do is buy a butterfly up there. I might buy the 40, 50, 60 call butterfly.
So, and this is going to be pretty cheap, I think. It'll be $1. That's not a bad way to play it, especially in SPX, because you can see if it's going to go up there. Actually, I'm going to throw this in. All we can lose is $1.
Yeah. And so that's, and if it does, it might get up to like from $1.10 to $1.50 or $1.60. I'm not expecting to nail the butterfly, with the center strike and all, but that's how I would trade that sort of thing. And you know what? Okay. So that's when you talk about gamma risk and Vega risk, it's typically talking about institutions, big trader, not I don't say big traders, but big money places having concentrated short options at certain strikes.
Because you don't, and I'm just going to speak from my perspective because I know you're huge, but I don't worry about gamma risk or Vega risk. That's something that I haven't worried about as a retail trader for years. That is, and it's some of those Greeks that are important to know. You need to understand them, but I also don't ever really look at them in my small account with how I'm trading small and trading often.
Yeah, and partly because it's all spread out. I mean, look at all the symbols you have. I have about 65 symbols on. When I was trading bond and note options on the floor, all my positions it was in one product.
Yeah.
Okay, so I was looking at my gamma. How much do I have to hedge? Because I was, fighting to make $100 a day. And I was trading one lots, and I was teeny tiny, and I was lucky to get a fill so for the brokers to give me a one lot sometimes, it's because it's competitive and it's, they go with the people that can do size. I was small.
You were small, but that was a big contract. So I just want to give you a little bit of kudos there. You were small with a large contract.
Well, yeah, 30 years ago, it was cheap, but it was always a big product. It was always $1,000 a point. So you take a Phil Liz.
I know.
So that's how I would trade that open interest thing. I would do it cheap. And by the way, when volatility is high, it tends to depress the value or the price of the at the money butterflies. Not the far out of the monies, but like this one, the 40, 50, 60s, close enough. When volatility is higher, the market is saying, I don't know what the winning butterfly is going to be. It's a lot of uncertainty. So they're all going to be cheaper. It's like a roulette wheel. Where's the ball going to end up?
Well, they'll all almost be around the same price, right? Because nobody knows.
Right.
Yeah.
Exactly. So in other words, because they're not sure about which butterfly is going to be the winning butterfly, they all get cheaper. When volatility is lower and the SPX doesn't move very much, you're more confident about which is going to be the quote unquote winning butterfly. So those prices get elevated. So when volatility is higher, butterflies tend to be cheaper, or at the money butterflies tend to be cheaper.
So it's interesting because I'm glad you brought that up because it's almost a double-edged sword. People think of this as more selling premiums because you're selling the guts, but we all know because so when you've got a really low implied volatility, what were we looking at? Nvidia. I'm just going to go to that real quick. Nvidia that's got a 5 rank. Those butterflies should be more expensive because the implied volatility is telling you it's everything's kind of a circle, right? So when something has a high implied volatility for itself, it's saying it's priced to move. Whereas when it's got a low implied volatility for itself, it's saying it's priced not to move. So those butterflies will be more expensive.
Exactly. So that's, and by the way, and this is a choice between butterflies and calendar spreads. Both butterflies and calendar spreads maximize their profits when the stock or index is at the strike. Butterflies at the short strike and calendar spread at the strike. But going back and forth, which is better, which is a better trade? Well, when volatility is higher, because the calendar spreads have positive Vega, a lot of times those calendar spreads, the debits are elevated. The debits are a little bit higher. So I find those less attractive when VIX is, let's say, 25. Excuse me. That's when I lean towards butterflies. If I'm looking for a pinpoint trade, when volatility is higher, I lean towards butterflies. When volatility is lower, I lean towards calendars.
Yeah, I like it. And we have a saying on the show, I'm trying to get it to stick. With the butterfly and the calendar, you needed to go to it, not through it. You needed to go straight to that.
I like it. To it, not through it.
You need to go to the strike, not through it. To it, not through it. So that's where I'm trying to get it to stick. So if you can,
I like it. You know, Liz, I don't know if you're a trader or a poet. I think
That's right. That's right.
Just saying, Liz, that shows a certain level of creativity that most mere mortals do not possess.
That's right, TP. That is 100% correct. It's kind of like I was laughing at you the other day on the show when we were talking about, Fabio's coming in on Twitter, and I'll go to it in a second. But when you were talking about, hi, my name is TP, because I say it all the time. And Mikey on Twitter is always like, we're enthusiasts, not addicts. We're enthusiasts. I said, okay, all right, okay.
It's a little sad. Yeah, I was making a joke with Liz. I said, "Hi, my name is Liz. I am a trader." Like she was going to Traders Anonymous or something.
I would love to go to trade. I am addicted. I love it. I love everything about it. Okay, so I popped into Twitter real quick. Can we jump in so TP can see what we're looking at? Because we are almost out of time. We've got about 9 minutes left. So Fabio comes in, and that's the question you just answered. Happy Friday, listen, TP on fire. Would you verify and manage your ES position? Thanks a lot and have a great weekend. So this is something, I'm just gonna kind of go to it real quick because I did this with Fazia. So this was a downside skewed butterfly that we had in the 0 day. Now this is going to be pretty worthless here, but we financed it with a far out in time put spread. So all of my 0 days are going to roll off, and it will be a loss. But we do have the financing of the put spread coming in after the fact. Although, this position is up. It's down here.
Yeah, but you're up about $50 or so on that put spread.
Yeah,
on the put spread side, if I'm looking at it right, and the butterfly, it's pretty cheap because the index is way above there.
Yeah. Honestly, this is something I would probably let roll off. I don't know that I can close it for 35 cents. You see how the
butterfly? You can try. I don't.
Well, maybe I can say
give it a try. Give it a try. Try it at 35.
Hey, look at that.
Pick a fill, Liz. Nice. And
Fabio just saved us $35.
Thank you, Fabio. Fabio for the win. Liz has bills to pay.
It was so far down, and that's actually good because that's chipping away at the cost. This was something I did with Fazia. I loved it. It was a great concept. It was saying that we were going to pull back a little bit, but she didn't want to have to pay for it, so we wound up financing it. I thought it was a good trading strategy. The pullback didn't happen. We're going nothing but up, but that's okay.
Well, and talking about sort of just market bias, I know what we're looking at. I think inflation is going to be an issue going forward. The CPI numbers are going to come out, and they're going to be a lot higher, and that's why I'm bearish on bonds still. I know you and I disagree on that, but I'm bearish.
Let's take a look at that because all my bond positions came off this weekend. This week I watched them all kind of roll off. So you're bearish on ZB, ZN, or TLT?
I'm trading. Well, I'm trading ZN right now from the short side, only because the volatility is a little bit higher in there. So I'll go out to like 21 days or something like that. Sell a call spread.
So are you doing like the 12.50?
Yeah, something like that. Yes.
So your max profit here is $78. Your max loss is
$400.
Yeah, it's about a $5 wide. Do you think this is too low of a credit?
No, you can, if it is, drag it down to lower strikes.
Well, I was going to say, with one side, would you ever, because you're the expert in this, would you ever tick it up and let it come to you? And if you get filled, great. If you don't, no big deal.
Oh, yeah. I would not. Don't. Yeah. So to your point of if it's a directional trade, like not an iron condor, I would offer this at 6 and let him come in case it rallies back.
Yeah, I'm putting it in, and then if we get hit on this, great. Then we're in this together. But with the directional trades, I have a hard time following the price down.
Yeah, I would not do that. And so the point is, I am bearish on bonds. I'm actually kind of bullish on stocks because I do think a lot of the fear is already built in. We already know what $100 a barrel crude oil looks like.
We've seen it.
We already know what, and I don't mean to diminish the war, the conflict. I don't like people dying. I don't like stuff getting blown up. I think it's horrible all the way around. However, the market, I think, is seeing past it right now. And unfortunately, traders can be a little callous like that. It's like saying, "Hey, it's a risk. The market seems to be absorbing it. The stocks are up. Crude oil is up, and is crude oil up or down today?"
So you know what? It was kind of going between the two when I was looking this morning. But granted, my internet.
So CL is up and stocks are up. What?
Yeah. It is very bizarre.
And so, but that's it's I don't care about why that's happening. I just see what it is. Okay. And I think, yeah, I mean, eventually I think the market is going to absorb all this. The FOMC, the rates are probably going to be held steady for the next few FOMC meetings. The probability of a rate hike or cut are in single digits. And I think there's going to be a bias towards the upside as we emerge from whatever this Iran thing is. And no matter what the CPI numbers are, I think we're going to go higher. So I like that put spread that you have in the S&Ps.
I like it too, and you know what? I'm glad you gave your market bias because it is interesting, and everybody's trying to do the narrative after the fact. Being like, I'm glad you said you don't know why. It is what it is. You and I are doing the show. Maybe something happened during the show because I don't think oil was up as much. Maybe it did. Maybe it didn't. We don't know, and we couldn't have gotten ahead of that if we tried to. We're just looking at the numbers when we trade.
You know what, Liz, though, and I know you guys invented the whole crude oil is the new VIX. You and Jen were talking about that. Maybe that's over.
It could be over
because
if you've got oil up, the stocks, oil's up a lot more, and stocks SPOs are slightly down.
Yeah, but that's not the S&Ps. It's $6,800.
I know. They're talking 7,000 again.
Seriously, and crude oil's $100, $99 a barrel. Come on, folks. It's and we haven't, the S&Ps haven't crashed. We're down about 6% off their highs. It's like, I'm sorry, but I just think there's going to be an upward bias. That said, I am bearish on a lot of those Mag 7 stocks.
Which I think is an interesting way to be because I don't think that's wrong. Nothing you could say could be wrong, and I don't know either way. But you can be bearish on individual stocks and still bullish on the market. If you take a look at what's happening right now, there's been a lot of stocks that are down. You're looking at like your PLTR that can't get out of its own way when the market was up this morning. So yesterday the market was up about 50 points, can't get out of its own way. You can pick individual stocks to be bearish and still be bullish the market.
Right. And I kind of think that whole Mag 7 thing is, as I say, the bloom is off the rose. I think it was fun. I think, ring, ring, hello, 2025 is calling. They want their customized index back. I think the Mag 7 is maybe the 2025 story. 2026 is going to be something else.
It's going to be something else. And so the volatility will follow something else. Real quick while I've got you, and we probably have...
Goldman Sachs.
They have earnings on Monday morning before the open.
You want to tell a put spread in Goldman Sachs?
Sure, I'd love to. But you've got to do it in the 7-day because that's the earnings.
Liz, I have bills to pay this weekend.
Well, this would have to be on Monday.
All right, fine.
Look at this. You can't tell a put spread in it because there's going to be nothing. Oh, you can, I guess, in this. But there's nothing. There's nothing in the 0 day.
Maybe the 95, whatever. Okay, so here's what I would do just to spite Liz. I would go in those 0 DTEs and sell like the 95, 85s.
95
and buy the 85s and collect $92. And if I'm right, I make 10% on my money.
And if you are
I'm not saying you should do that trade. I'm not.
No, and if you're wrong, you should close it just like the CL spread, because otherwise you're going to come in and use $45,000.
All right, fine. All right, yeah, I get it. The margin requirements can be pretty big if you get hit, but so go in here and do the 60-55 or the 65-60.
Honestly, that's $1, or let me see, because sometimes you can get them all at the same price. $1.03 if we were getting out farther.
I like it.
I'm going to sell it.
Oh, the markets are wide, though.
Yeah, they are kind of wide. Is this the beginning? So this is the beginning of earnings season. So TP, when you have a high implied volatility everywhere, which it is relatively high still, even though VIX is only 19 and it's coming back down, you still have, even S&P's high volatility, a little higher than it used to be. Are you trading earnings? Or are you just sticking with the regular? I would rather stick with the regular ETFs and things of that nature if the implied volatility is high.
I'm sticking with the regular ETFs, indexes, futures products, things like that. Personally, in my own trading account, Earnings are a mixed bag. Yeah, I'm up a little, down a little, up a little, down a little. It's not my bread and butter P&L. It doesn't pay the bills. I like to trade earnings only because it keeps me current and knowledgeable about what's happening in the market. But I'm not seeking out earnings. And I know Bob on Fire sends a really cool tweets showing what the earnings numbers are coming up, and those are a great place to start. If you don't know what else to do, start there and take a look at some of them. But for me, earnings are not my go-to strategy.
They're not. They're just kind of a level of engagement to be like, hey, cocktail party conversation. Did you see what Goldman Sachs did on earnings this year? That's kind of how I look at them. But TP, we are cutting into the next show already. Now, what I need you to do is pop the collar for the close. And we're going to take
did it go down?
With a real greaser. All right, TP, thank you very much for all of your amazing information today, and thank you for joining me. Everybody out there, have a wonderful weekend, and remember to trade small, trade often, laugh with us, learn with us, and watch TP and the LV. Bye, everybody. Thank you, TP.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. It's a Freaky Friday, and the markets are flat yet again. We said yesterday 40-point implied move in SPX feels a little light, and apparently it was much more than what we're seeing today. At least on the open, if you had like a 1-day iron condor or a 0-day iron condor, you're looking good.
Yeah, man. Gosh, it's been a week, huh? I mean, another week with big moves. VIX is below 20. That's really fascinating. That makes me feel like the worst is behind us. And this is I like Fridays because this is what I do when it comes to Friday. I'm like, what the hell just happened this week? What did we experience? What did we witness? Every week I do that. And to me, this week we experienced the VIX back below 20. We experienced the S&P 500 back above 6,800. Although oil is down, it's not below 90, so that's fascinating. And inflation is a problem, according to the two things we got this week, PCE and CPI. And the market didn't really seem to bat an eye because all it was looking at is, hey, this war might be mostly coming to an end. So I don't know. The funny part about it, in reality, this thing is not over. There's a lot of discussions over the weekend I think is going to happen. I don't know what I think about weekend risk. So as I was saying to you right before we got on the show, I feel like over the last couple of days, I've done a lot of different position changes. I've done some de-risking here and there. I feel like I'm positioned well for a 100-point move in either direction, honestly. And I'm just going to kind of wait this out. I need to let some things cook, if you will.
Yeah. Only a 60-point implied move for Monday in SPX. And that is not too crazy considering the vol curve is pretty much flat. The J contract went out of backwardation into contango. We've got a slight contango in the K, M, N, and Q contracts, but they're all around 21, 22. So we'll call it flat into this big recovery move that we saw over the last few trading sessions. But yeah, I mean, oil's still elevated here. And what we're seeing, which I think is really interesting, is we saw the backwardation come out of the near-term K contract, but we're seeing a bid in the M contract and all these other contracts. Like when we had this huge backwardation in the K contract, we had like 115 here, 80 something here in the M contract, but these back months were at 70. And at a certain point, they were below 70, and now they're all at 72, 73, 74. So maybe sustained oil prices in the 70 range is something we should expect. At least the low end is the 70 range, and the high 80s, low 90s, mid 90s is on the higher end. Like the whole range has shifted for sure, but it's been crazy. It's been crazy for sure.
Yeah, I mean, what happens if the stock market is recovering? The stock market ends up being fine, and we're above 6,800, whatever, somewhere between 6,800 and 7,000, and oil is still in the 90s in the next couple of months. And inflation is still up, obviously, for that reason. But the job market is okay. Does that mean they're going to have to hike rates? I don't know. That's going to be the weird part, I think, going forward. I wonder if that's going to become a story sooner rather than later.
Yeah, it is something to behold for sure. And I'm just pulling up the CME FedWatch tool here. I expect that nothing has changed. Yeah. We are all the way through the end of the year. We have a massive probability that we stay at this 350, 375 rate. So yeah, I think we'll have continued, somewhat elevated interest rates. We've got the craziness overseas, and we've got earnings season coming around the corner here. And there's still lots of volatility, I think, that could be unwound here.
Yeah, no doubt, for sure. The other funny thing that started happening again, literally in the past 48 hours, the software sell-off is back. Like, what? The software sell-off is back. Next thing you know, they're going to be talking about private credit issues again, and then the financials are going to be falling. It's like all the things that we were talking about prior to the war being the biggest issue is starting to resurface.
Yeah. Something that is ripping to the moon, though, Amazon. Kind of crazy here. I just did an options math check on some analysts that raised their price target to 300. And it's looking pretty probable for the end of the year, but I think everything's going to rely on this earnings announcement priced into the 21-day cycle here. We're going to have to see a continuation, of course, to the upside after earnings if we want to see Amazon at 300. But, I mean, why not? It's at $2.25 trillion and at a $240 stock price. So, yeah, why not get to $3 trillion?
I think it was on Tuesday during the day when we were in the studio and somebody asked us a question about Amazon. Do you remember that? Somebody asked us like about a diagonal. And I remember looking at it and I was like, damn, that looks good. But I just had so many things. It was definitely Tuesday because I still had so many positions on that I didn't want to add anything. But I was like, damn, that looks good. And boom, the last couple of days is taken off, man.
Yeah, I actually had... it was maybe 2 or 3 weeks ago. I had this on March 26th. I bought the 210, 230 long-term diagonal spread. It was a 20-point wide that I bought for $10, and I sold out of it into the market recovery while the oil market was still ripping higher. I was like, I don't feel like this is really sustainable, so I'm just going to close this for $100 winner. But I'm sure it would be a much, much bigger winner now. But yeah, I think I'll hold off on this. I mean, the move that we've seen is crazy. I'll hold off and just wait for earnings. It's only a couple weeks away, and I'll probably place a bullish trade for earnings, but I want to see where the market goes before I get into that.
I feel you.
Yeah. Have you done anything today in terms of adjustments, new trades, what have you?
Yeah, I think just the 2 adjustments today. One, I did roll the year-long straddle, the year-long trade, the year-long M&Q trade. So I rolled it out, and I kept it as a straddle, and I rolled it out to June, was able to collect $272 worth of credit. So that's my story, and I'm sticking to it.
Nice. Yeah.
And then on Nvidia, obviously with this big move today, I've had on a diagonal for a minute. I had the 200. I was long. I'm long the 185 call in May, and I was short an 85. What was that? The 215 call in regular April. It was basically 5 cents. I mean, it was worthless. So I just rolled that and rolled the strike, changed the strike a little bit. So it's a 15-point wide diagonal now. And what is it? I forget how many expirations are apart. I have the I'm long regular May, and I'm short the May 1st cycle. And it's $15 wide diagonal. So, yeah, cool. That's it.
Love it. Yeah, I haven't done anything today, but we were talking about the super bear here, how we routed this for a credit, but really the bulk of this trade, the SPX super bear sold the 6850, 6860, and then bought the 6800, 6785 put spread. So 10-point wide credit spread to finance a 15-point wide debit spread. We routed it for a credit. If the market sells off, we will be able to sell out of it for another credit because it's basically a gamma shift here where the short call premium will translate or transform into long put spread premium that you can sell out of. So hoping for a little reversal here, at least in the short term for that trade, because that would be a really nice hedge. But yeah, I feel decent about where we're at. Closed a lot of trades that we were layering into that big rally to the upside. And now I feel like I'm just going to wait and see what happens this weekend because these things can all change very quickly.
Yeah, sure can. I know the other thing I did obviously this week with the big moves, it was I was short the dollar, and so now I'm probably going to try and find different ways to get long the dollar. I do have a couple already. I'm essentially long the dollar via trades in the pound dollar, euro dollar, Aussie dollar, New Zealand dollar. Aussie and New Zealand have been some of my favorites, man. Like those have been great. So that's probably the other thing that I'm going to do at some point.
Yeah.
Get long dollar.
Yeah, we got into some of those with Glenn on Tuesday. But yeah, I think a lot of these
Glenn's Day,
yes. What
you?
am I crazy? But yeah, I think same story. I'm ultimately very long the US dollar by way of the dollar franc here, but also short the Aussie dollar, and then I have a little bit of a hedge here with the New Zealand dollar over the US dollar. But yeah, just looking for some more movement here. If any of these turn green, I'll just close them. But I'm in the same boat as you. I would like to see a dollar rally here, at least a continuation of this rally that we've seen from the bottom.
Yeah.
If you want to join us on the YouTube channel, we're streaming live there. You can pop over to the Tasty Live channel and throw in your trade ideas questions along the right-hand side chat. And we can get to some questions right now.
Yeah. By the way, oil vol's coming in. I'm winning on my USO and my CL Iron Condors.
Yeah. Yeah, USO chopping around here. And a lot of this vol is just going to come in as long as it stays in like a 10-point range. You'll see that vol continue to come in just because of the craziness of the move from 75 to 150 almost. And then CL, similar story, just chopping around here. Narrow ranges, regardless of the direction, are going to create a vol crush after you have a big, massive range like you had the last couple of trading days here.
It's the best time to sell vol, really is. Same thing with GLD and SLV, so gold and silver as well. Vol coming in those.
All right, let's take a look at Adobe. Short Iron Condor, 210, 200, 250, 260, 36 days out.
It's getting small today. Yeah, a little bit.
Yeah.
Lows.
36 days, so May. 210, 200, 250, 260. Yeah, it's a classic setup, collecting 1/3 the width here. 200 to 10 would bring you to the bottom of this chart, which we haven't seen in quite some time. And then 250, 260 is above the range we've traded over the last couple of weeks here. So yeah, I think it's decent. I actually kind of like that it's in the 35-day cycle just because you have more near-term volatility collapse potential and theta decay. So you could close it sooner rather than later, especially if we just chop around here. So yeah, I don't mind it. You're leaning a little bit bullish, being inside the expected move on the downside and right at the expected move on the upside, picking up almost $400. So it's a little bit better than 1/3 the width. So yeah, I think it's a decent setup.
Yeah, I do too. And for those who are big swingers, you could actually even sell a strangle in here, whether you do it in May or whether you do it in June. This fall's a little inflated. It's spicy though, because given what's going on, but you know, if you have the capital.
Yeah. I'm probably just gonna wait for earnings here and see what comes out of that. But
wait, when is earnings? Did it already have it?
It'll be priced into this like later cycle in June.
June. Oh, okay. Sure.
But yeah, I've tried my best to get into some bullish Adobe positions. I have this April 290 call that's going to be worthless here. So I'm personally out on this, but I think if you like the trade, then the setup is fine.
Forget what I said about a June strangle. Yeah, you're right. Earnings will be like June 9th or something like that. 9th, 10th, somewhere in there. Based on history.
GLW looks juicy. 70% IV, 100 IV rank. Earnings in 18 days here. Yeah, I mean, it just depends on what you want to do, but it's mooning. I think this is another one where liquidity is probably not that great. It's not too bad, but I think if you're trying to trade this for earnings, I might just wait for earnings because putting on weekend risk for a product that has earnings just feels like a lot of risk versus the reward, at least right now.
This is another one where I get confused when I pull up the ticker and I'm like $170 because this name was $40-something a year ago.
Yeah. Everything's wild. It's like there was some other stock that had a similar valuation. I was like, when did this become a $200 stock?
Dude, that's the crazy. It's like getting older, and there's like people who were like little kids when you were like in your teens, and then you see them now, and you're like, wow, when did you grow up? Like that's what it feels like. And the longer you've been in the market, you see more and more of these, and you're like, oh my god, when did this stock get here? Or wow, the stock used to be up here, and look where it is now. It's like lower. It's like crazy.
It's nutty. TPL long stock at 360, rolled a 400. 500 covered calls to 98 days at 450, 500 for a credit. So you're in July. Yeah, just watch these markets. These are $5 wide markets, so just make sure you're putting your price at the mid or better and then working it for a little bit, because these are definite price discovery bid-ask spreads here, being $500 wide. But that's nice. Caught this rally and alleviated some pressure. That'd be nice if it moved back up.
Indeed.
100-point put butterfly in SPX May end of month. We just did that. We didn't do it for May. We did it for May 15th. So we did I think we did end of April. Yeah, end of April, the 67, 66, 65, 100, 100-point wide butterfly. Put that on for 570 yesterday. I like the idea. We've been using that pretty frequently for just downside hedges that are low cost relative to the max profit. And it's a good way to offset or create a downside hedge without risking too much. But yeah, end of May, we usually just set them up, right at the expected move. So in this case, maybe you look at short options at 6,500, 6,600, 6,400, somewhere in that range. We stick to the round numbers here because you can see there's way more open interest at 6,500, 6,600, 6,400 compared to strikes right next to it. This one's $3.50. So do not mind this at all. We already have our downside hedges in though, so I'm going to pass on this. But I think it's a great way to just get some cheap downside delta, and you can get lucky and time the move near expiration. This can turn into a pretty big winner if you do that.
I just realized I never got filled on mine yesterday, so thanks for reminding me.
There you go. EWZ. Love to see it. Yeah, up at 41. Getting long here. I would go the debit route if you were doing that, if you were playing for a continuation. Even though IV ranks at 66, the actual implied volatility at 34% is really low. So I don't think you need to sell premium here. I mean, you can look at it, just the eyeball test, selling at the money premium for $1. I'd rather just get into a diagonal spread where you can manipulate your risk reward a lot better. And these options are so cheap. Like you could do a December 40 and then sell something against it in May or June. And, do something like this. Or if you wanted to go really long term, you could buy, I just threw on December, but you could do like December, September, and go all the way up here at like 48, put on an 8-point wide diagonal spread for $4, something like that. But yeah, I think keeping on the debit side is what I do just for capital efficiency with a 30% IV. EQNR. What is this?
What is that?
Equinox? Equinor.
Oh, that's nice.
Like Equinox, the gym? 36, 35, 41, 42. Yeah. Iron Condor. Yeah, this is going to be too narrow for me.
Sure.
And I definitely would not do this in the May cycle with earnings coming up. But it looks like earnings will actually be in April. So April 29th. But yeah, this because this doesn't have weekly options, I'm not going to trade it. I don't trade anything with that doesn't have weekly options because it just tells you that there's not enough options activity for them to open up weekly options in here. In doing an Iron Condor in May in the earnings cycle or encompassing the earnings announcement just means this 60 cents you sell is not going to move at all unless it moves against you on a big move to the upside or downside. You're just not going to get this value until the earnings announcement happens. So if you want to trade an Iron Condor for earnings in this stock, I would just wait the day of the earnings announcement and then throw it on, because then you can get that nice premium collapse if you are correct and it doesn't move. I bought the SPX 1/2 back ratio as cheap insurance. Let's see what you did here. 67.75 twice and the 68.25 once. April 13th. 67.75 twice. Yeah, this is one of those wonky ones. 68.25.
Oh, got it. Looking for an
Yeah, so it's just a back. What is my risk? So this is why we don't do these. Your risk is $5,000 if you did this once. Even though you're paying a debit, you have an embedded put spread here with an extra put kicker for 3 days out. So is there better 3-day insurance? Yeah, I would do something like a butterfly, because this trade, you need like everything to happen. If we look at just this trade,
big move.
Yeah, you're going to lose 80 cents to the upside, and you need a more than 100-point move to the downside just to break even at expiration. So you can see here as I move this towards your expiration, you need SPX at 67.23 on Monday. And if that doesn't happen, you've got this valley of death here of $5,000 is your max pain point. So, and you're not putting up just 70 cents for this trade, even though it's a debit. You have $5,000 of risk here because you have the put spread. So if you're trying to have a downside hedge, I would just do like a butterfly. 6,800, 6,750, 6,700. And now your risk is $500. You put up $500. But if you get any downside move at all, you're golden. And from a theoretical standpoint, if you look at Monday, you really just need like a slight downside move here, 20 points to the downside, and you'll be okay. Like you'll have a scratch if you get a 20-point move to the downside. And if you get the 100-point move to the downside on Monday, you're looking at $1,200, $1,300 from a theoretical standpoint, and then a max expiration profit of $4,500. So I don't like the backwards back ratios where you have an embedded credit spread that you're routing for a small scratch or a small credit, because you have that embedded risk and you need a massive move for your 2 long options to offset that.
So I used to do those trades every so often. I think they can be cool. I don't know if you want to do that in this right now in S&P 500. I mean, given everything that has happened, given the de-risking that is happening, I would say the options market is not necessarily pricing a huge move to the downside, which you need. So that's why I don't think it's probably feasible for you right now. But those trades have a time and a place. I mean, it's probably better in like really volatile names. I mean, really volatile when you put them on, because then you're able to collect the credit and you possibly get an explosive move. I just don't think that works for this right now. Like Mike said, it's better to probably do a butterfly.
Yeah. How about airlines? I have a bullish position in UAL, I believe, unless I closed it. It's all a blur. But yeah, airlines bottomed out around 85, UAL specifically. Caught a bid. We're kind of chopping around here, but Yeah, I think the interesting thing about airlines, jets is another interesting one that encompasses a lot of them. But the interesting thing about airlines, and maybe the neutral to bearish outlook for airlines, is that there's definitely a delay in terms of increased jet fuel costs affecting ticket prices. But like we talked about in CL, you're seeing an elevated lift on these back month contracts, that these were in the low 70s, almost all of these. Now they're in the mid to high 70s, 160, 200 days out. So if this holds, I think you're going to see higher prices for the airlines, maybe lower demand, or at the very least, higher prices are just there to offset the increased fuel prices. So I don't know. It doesn't look as bullish as I was looking at it earlier, when we expected crude oil to come down and the back month contracts to come down too. What do you think?
Yeah, it doesn't. I mean, as far as like the airlines, I'm a little surprised that they've kind of held in there, given that the oil hasn't really like fallen a whole lot. But I mean, you've been all over more than I have. I really haven't traded them much since I only had the one trade, I think, a while back. I haven't done anything since.
Yeah. SPY bullish, $20 wide, broke wing butterfly, doesn't work for a credit. Why? Any other bullish strategies that can work? Well, implied volatility is back in the teens, so that doesn't help you.
That it is.
$20 wide. If you go out further in time, you can make it work, I would imagine. But $20 wide is also really wide for this product.
Mm-hmm.
So like 675, 665, 645. Yeah, you can do it for credit in May. Near term's going to be harder. But another reason why you might not be able to set this up is because these puts are still holding put skew. So like SPY is trading at 680. The 645 put is trading for $5 in May, which is 35 points out of the money. If you look at 35 points out of the money to the upside, you're looking at 715. These options are trading for $1. So because you're paying 3 times the amount on the upside, or sorry, the downside, that kills your credit received potential. But you can still do it for a credit if you go out to May or June. These near-term cycles are going to be harder to do. And that's the bottom of the chat. So earnings next week are going to be kind of crazy.
We talking about earnings?
Yeah.
It's back, huh?
JP Morgan, Citigroup, all these banks are going to be reporting on the 14th, so Tuesday before the market opens. I think it's going to be kind of crazy. I don't know. I don't even know what to expect from these executives and what they're going to say about inflation, prices of cost of goods going up. Maybe not the banks, but like Netflix and like all these other Mag 7 stocks. Like they're all reporting pretty soon here. Netflix will be reporting next week.
Really?
Mm-hmm.
Well, banks are going to, I wonder if they're going to address private credit concerns. I wonder what they're going to say about their bond trading portfolios. I'm sure that's been a crazy month and change. Should be interesting.
Yeah, for sure.
Netflix has been on a run, hasn't it? It's up to 102.
Yeah.
It's in the 90s last time I saw.
Look at that. 75 bottomed out at.
Yeah, how about that? Wow.
Big move. But yeah, they have earnings next week. 6-point implied move for next week, which is about 6% of the stock price. Not too crazy. It's on the lower end. But we'll still be trading it since it's a $100 stock and these markets are nice and narrow now. But yeah, I'm intrigued to hear what they have to say. But there's also some other products that are interesting. So like Johnson & Johnson, Morgan Stanley, Pepsi, Like these are the products that I think will be really interesting just hear what they have to say, or at least like read what they have to say from the
economy.
conference calls. Yeah. And how they're affected specifically.
Yeah. True
that. Thoughts on snow? Think it's bottoming out or has a way to go? 122. Ugh.
Yeah.
For
real.
Is Nancy in this one? Or did she exit?
No way. Nancy's not. If she is, she shorted. Nancy's all wins, baby.
That's true.
All wins.
100% track record. Love to see it.
I don't know what to think about this scenario, this situation. I try not to like get caught up in the stories that happen in the market. You know, the private credit. Oh my God, everything's going to die. What's going on right now with Anthropic and the destroy. I don't know, but I do know that it's taken a huge bite out of a lot of these stocks. I don't know if. I mean, I've gotten in a couple of them. I have a Super Bowl in a couple of them, CRM and Palantir. I don't know if that's the right trade, but I mean, I see these charts, I see these names, and I'm like, it's really interesting. And they're still really massive names, but I don't know, man. I don't know what to think. What do you think?
I'm way more interested in getting long Microsoft than Snowflake. Just from a sheer size. It's just like when COVID shut down and the mom and pop bars and restaurants, a lot of them couldn't survive. But the restaurant groups, all of them not only survived, they like renovated the interior of their places. So it's like, it's kind of the same situation where it's the survival of the longest leash in terms of capital. And I think if I were to pick one software name to invest in, it's absolutely Microsoft. Just because you have that implied public view where like once Microsoft, let's say it catches a bid like Amazon is, people start to notice and people want to buy back in. Snowflake, I feel like is more fringe. So it's tough. And especially with the move today and yesterday, like this thing is down 30 points in 2 days. It's a falling knife right now. So I wouldn't try and catch it in any kind of big way, but I think it's interesting if you want to keep risk small, or just wait for earnings and maybe they have a really good earnings announcement and you see a bid then, but it's not looking great right now.
Yeah, no, well said. That's exactly what I was trying to get at. You said it way more eloquently than I did. That's why I've chosen CRM. That's why I've chosen Palantir. And that's why I've chosen Microsoft. Those are the only three that I have long positions in.
Yep. Good question in SPX here. Would you guys do broken wing butterflies for hedges instead of regular butterflies? There's more risk up front and buying power, but a higher probability profit. Would you do different time frames rather than regular butterflies? If so, so we've done broken wing butterflies in SPX. I think if we're doing an SPX broken wing butterfly, let's just say like in the April cycle, if you're doing like 6,800, 67.75. And then 67.25, and you're doing it for a $4 credit. You're going to put up a lot more buying power. First of all, you're going to have $2,000 of risk instead of $500. You have way less max profit than if you did like a 100-point wide or a 50-point wide for a debit. But if the market goes up 50 points on Monday, I would immediately sell out of this 67.25, move it to the 67.50. Create a symmetrical butterfly. And if I can do that, if I pick up $4 here in credit and I can do that for a $3 debit, I would keep $115 and I would basically leg into a free butterfly. But that requires timing and you have to be right on that directional move before you can leg into a free butterfly. Otherwise, you're taking risk here to the downside, and that does not exist in a symmetrical butterfly that you're paying for a debit. So it's a long-winded way of saying, like, if you have a bigger account, I like the idea of entering into broken wing butterflies as a higher probability way to try and get the same hedge if you can leg into a free butterfly on a rally or a neutral move. But I'm still in the camp of just like risking $500 and having a butterfly that's 100 points wide. because if we do get the sell-off, another thing about this is broken wing butterflies, for them to work out and you to get this max profit in the middle here at 67.75. God, I have so much in here. For you to get this profit, like you got to be at expiration. And you can see this here. The expiration graph looks great. The Theo graph today, if you get a sell-off, you're going to see a loss on this trade, where our butterflies that we bought would appreciate in value. So there's a lot more timing involved with broken wing butterflies, but the trade-off is you have a higher probability trade, because if the market rallies, you just keep the credit received. So it's more of a bullish trade than a downside bearish hedge. I think that's the best way to put it. Instead of doing a year-long strangle in SPY, where the buying power is pretty high, would you do a 50-point wide synthetic strangle? No, I wouldn't. We just go to MES. So MES is where I'm at. You could do a synthetic iron condor, but if the markets really start flying around, now you have a credit spread you have to deal with, and buying those cheap wings doesn't play anymore, because now you have to buy an expensive wing to roll that spread out. So I'd rather just go to MES. It's half the size of SPY, and it uses way less buying power. So like my trade here, the one I have is using $2,000 in buying power, where SPY, you're putting up what, $8,000 in buying power, something like that. So yeah, we're using MES and MNQ to get around that buying power relief, or get into the buying power relief. But yeah, if you're using SPY, it's going to be tougher if you do synthetic 20-point wide iron condors, because you just don't have the same flexibility. Like what Jamal did today, moving the MNQ position from 2550 to 2600 and out for a credit, you're not going to be able to do that for nearly as much of a credit, if a credit at all, if you are buying wings to redefine your risk. Let's see. May 15th
in June already. Weird.
Yeah. May 15th, Iron Condor and SPY. 62, 62.10, 692, 702. Roll up the downside or leave it. So you already have this on. Let's see. I would leave it probably, but we'll see. You still have plenty of room on the upside here. And the downside, 620, 610.
I mean, it's a good question, because I have some iron condors in SPX that are kind of similar, and I have yet to roll down the downside.
Yeah, I mean, it's tough because you're if you make this move, if you move the 620, 610 put spread up to a 650, 640 put spread, you're only collecting 70 cents.
Exactly.
And you are dramatically increasing your downside risk, because you're moving your short put at 620 up to 650. So you're increasing it 30 points for only 70 cents. I don't like it, just because, the reason why that is because your put skew here is crazy still. So you're just, when you have a put skew environment and you're moving a put spread up, you're not picking up any credit at all. So I would just leave it. Or buy it back.
That's exactly the similar problem I got. And they're $15 wide to the downside, and they're like around 6,300 and 6,250 or something like that. And yeah, it dramatically increases risk. And it's only like $1.50 or something, or $1.75 that I collect more. It's like not, I don't know. I'd just rather wait to see if the market pulls back, and then maybe you do it then.
Yeah.
And you can get better strikes probably.
Yeah. And yeah, I think right now this 620, 610 put spread's only trading for 60 cents. So maybe you consider getting rid of that, buying that back. And then again, to the upside, you still have space. You could roll your credit spread out, your call credit spread out in time if you get tested up here. And you could roll from May to June and then just lean short. But yeah, it's a tough sell to roll that up for 60 cents and increase your risk by 30 points. The turning a broke wing butterfly to a butterfly is cool. I need to learn more about it. If you go to tastylive.com, you can find .com.
Yeah, right.
Let's see. I'm just gonna pull the search query for free butterfly. Yeah, there's plenty of segments here. There you go. Click the link and you'll see a bunch of videos. With MES, it gets hard to roll out in time if needed. Most volumes in the near contracts. Yeah, I mean, yes and no. If you stick with the end of month or quarterly contracts, you have a lot more liquidity there. So even the strikes that I'm in aren't that liquid, but I was able to roll for credit. Jamal did the same. Yes, you will have some liquidity issues in these wonky cycles, like the random ones that are May 1st, May 8th, but we always just stick with quarterly or end of month, and that's usually going to give us the most liquidity, unless we're forced to move into one of these other ones for whatever reason.
True.
Let's see. Market's selling off here a little bit. How are these hedges behaving? Butterfly is looking okay, up 35 cents. This super bear is up 70 cents. But I feel like I'm definitely going to wait on that, because if we get a 50, 60 point continuation, this will turn into $200, $300, $400 of a hedge profit, because you have the synergy of the short call spread losing value here and the long put spread appreciating in value at the same time, which is why even on a small move like this, we're up $100 almost.
Like it.
What else do you have your eye on for this weekend or into next week?
Me, like I said, I'm actively not trying to put on any new trades. I really not. I'm just trying to manage risk. Like you just mentioned, that Iron Condor issue. I just chose to close a put spread on one of mine, a $15 wide. It was really pretty far downside. It was in the April 30 strike, April 30 cycle. It was 6,300, 62.85 put spread that I was short. That thing's only 80 cents. I just closed that. Just try. I need to actively kind of find places to reduce risk and just clean up some things in case we have another big move coming in either direction soon. That's kind of how I'm feeling. I also have, I am positioned for moves to the downside. I'm positioned for, I think, moves to the upside. I might have to reevaluate that, because some of those names are, it's Microsoft, it's Super Bowl, which again, I'm not changing them. They are what they are. There's this software situation right now, but Microsoft, CRM, Palantir, and Nvidia, calendar, as I mentioned. So those are my upside plays. I got a couple of more. Obviously, the year-long straddle is upside play, if you will, since it's at 26K now. And then I got the super bear to the downside. I got a couple of other things. I think I mentioned earlier in the week, I got SPYs and Qs, short call spreads, basically at what would be back towards the highs around 7K and S&P, et cetera. And then I got short vol plays. I sold vol in CVX at Exxon. I'm short oil for sure, like vol. I'm short USO. I'm short CL. So man, I am positioned for anything, Mikey. I'm positioned for a lot of things. I just want some things to work.
I like it. I think selling premium in all those names. There's just so much premium that it's hard to ignore. Even silver, that's why we got into silver in the first place. And silver continuing to catch a bid here, which you'd love to see. But the vols kind of come out of this now. But we did what we needed to do and picked up a ton of premium. And even with my strikes so far in the money here at 87, this 87 straddle, my break even is at 67. So we're good in June as long as this thing stays afloat or continues to rally. UNH. In the money put spread on UNH, 310, 300, 36 days out.
Big move at the beginning of the week, didn't it? It's been a crazy week, man. I think it did, right?
Yeah, they announced some Medicare situation that's going to increase their profit margins. And this thing was a dog for so long. And seeing a nice pop from the lows, 260 to 300. Look at that. Fell from 600 last year. Craziness. But in the money put spread, so I would just look at these markets. So in the money put spread, as you can see, is just an out of the money call spread. Like if you were to move this in like a 320, 310, and in the money put spread it's the same risk profile as the call spread on the same strikes. Now, out of the money options typically have better bid ask spreads. So instead of selling an in the money put spread, I'm immediately going to look at buying the out of the money call spread. And let's see if we can exemplify this here. And sometimes it's similar. Sometimes it's the same bid ask spread, and it's totally fine. If you're dealing with really liquid names, it's likely going to be okay if you prefer to do that. But UNH, less liquid, maybe you check it out. But this is like a dollar wide bid ask spread for the in the money put spread at 300, 310. Same story here for the 300, 310. What is the out of the money call purchase? Okay, so it's actually a little worse. I stand corrected. So maybe you've already done this, but yeah, put spread here. I like it. I think it makes a lot of sense, but the deeper you go, if you were to sell an in the money put spread here, $3 wide bid ask spread, same risk profile if you just buy the out of the money call spread, where this is only 40 cents. So in this example specifically, I think it's fine either way because you're at the money.
Synthetics.
Can you explain how you manage your SLV with a short at 87, the one from a couple of months ago? Sure can. So here we are in the order chains panel, one of my favorite aspects of the Taste Trade platform. So yeah, January 29th started with an 87-210 strangle. What day was that, you might ask? It was this day. When it went to 100 or 110, got into the strangle, and then immediately this product went down 30% in one day. So that's not fun.
Basically said, marry me.
Yeah.
You're staying married to me.
Yeah. You can't leave. So 87-210, literally the next day, the 210 call that initially we sold that 210 call because it was the highest strike available and the premium was flat all the way across the board because that was into the huge rip in silver. So selling the 210 call made a lot of sense, but then the next day it was basically worthless. So I moved the 210 call down to 150, picked up $1.40, and then a couple weeks later, silver didn't move. The 150 call was then worthless, and I rolled it to a straddle at 87 for $1.40. So at that point, I'd already picked up $1,000 in premium, and then waited a couple weeks. The 87 straddle that I had, I moved it from March to April, and I widened the upside because I was like, I want to lean bullish here. So I'm going to get rid of the straddle, keep the short put the same, but move the call strike up to 100. There was also call skew when I rolled out. So I was like, I can sell this for a couple bucks and just give myself a lot more upside room. Picked up 360, and then that didn't happen. So I moved the 87-100 back down to the 87-97. So I moved the call down just a little bit, created a 10-point wide range going from April to May, picked up another $1.60. And then that 10-point wide strangle never came into play. So I was like, all right, silver's now at like 60 at that point. So I was like, I don't need the 97 call up here. Let's just go right back to the 87 straddle. We're still leaning very bullish here. And we picked up some more premium. So all that to say, started with 860, got it up to $2,000 in premium, and that's where we stand right now. So if we look at where I'm at, we can just load up a new position, change this to 2008, which is my total credit received, and then go to the expiration risk here, and you can see we are within the expiration risk graph right here. And there you go. So $2,000 in premium. Any rally is going to be beneficial. Even if we go through the strikes, it's still going to be fine. And we're positioned nicely here. And because I've got $2,000 in credit, if I really wanted to, I could go inverted. I could buy this back, roll it out in time. It's nice when you have a ton of credit to work with. You just have so much more flexibility. But that's where we're at.
Indeed. Around a whole lot.
Glaring gap on SPX chart. What are you looking at? What time frame are you looking at? Or are you just talking about this gap, which would be correct?
Yep.
Crazy move.
You can say you lived through it.
Yeah. But I mean, once you get down to these levels, like down 20%, down 30%, like that's when you really got to start considering, like, a year from now, this is probably going to be much higher. Or maybe a week from now, we're going to be much higher. Yeah. 1 minute left here. What is your prediction for Monday? SPX, 63 points in either direction. Do you have it inside or outside, up or down?
I would say up. This is nowhere anything like 2008, but it's still closest comparison I can think of. I feel like, they always talk about the bottom that happened in March 9th of 09, and you just didn't want to you just didn't believe it. You're like, oh, things are too bad. There's no way this is over. And it just kept drifting higher, and then you get an explosive move higher, and then a drift higher and a drift higher. And before you know it, the move was erased. And that's what this feels like. Similar deal in COVID. That's what this feels like. Again, those things were way worse than what we just went through, which is kind of crazy to say they were worse than a war. But that's what it feels like. It feels like we're continuing to make moves higher, and nobody believes that we should be going higher. And that's usually when we go higher.
True. I'm going to just hope that we go down because I want these hedges to play a role here. And even if we don't, though, I'll be okay. I've got plenty of bullish positions here. So yeah, I think we'll be down, but inside 60 points. I think there's got to be some kind of relief here from this big rally. And we're seeing it flutter out here today with a really narrow range relative to what we've seen. So I'm going to say down closer to 6,800 in the E-mini futures, and at or below SPX 6,800.
Banks next week, April expiration next week. Should be something else.
True. That's it for us, though. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Lots more to come, though, today. We're not done yet, so stay tuned on the YouTube channel as well as tastylive.com, and we'll see what happens this weekend. We'll see who wins the Masters. I'm hoping it's Tommy Fleetwood. But, yeah, have a great weekend, everyone, and we'll see you next time. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
On On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What is going on, everybody? Happy Friday. Welcome back to Risk and Reward. We got pretty much an unched market on the day. Not a whole lot going on. Semiconductor stocks continue to fly, and I'm joined as always by my wonderful co-host, Errol. Errol, how you feeling? What's going on?
Feeling good, feeling great. Yeah, not a whole lot going on today. I feel like it's a little bit quiet, and funny to kind of mention that on a CPI day, an hour before the bell today, got a little bit of a spike, and then the market was pretty choppy the first 30 minutes. We're trying to make some lows here today, but for the most part, not a lot of range. Let us know what you're looking at. Let us know what you're trading. But yeah, nothing popping off of the screens for me, at least. It's a good day, though. It's good. It's Friday. It's a little rainy, but it's a good day.
And we seem, I mean, barring some catastrophe, seems like we're going to hold these gains from the week to this point.
Yeah.
So
I was pretty surprised by that. That's crazy.
Yeah.
For the most part, we're holding about like 85 to 90% of its gains roughly. So craziness.
Hitting a little bit of a wall here. I mean, down 0.1 today so far in the broader market, but nothing too crazy happening. So I'm content with that. We were just off air having a phone case discussion. Everybody, let us know what your preferred phone case is. There's passionate opinions about this. I have this little clear plastic one. I couldn't tell you the brand, but I really love it. I've had these on my past few phones. But do you like some designs in your phone case? Are you a big rubber OtterBox person? You a no case? You a risk taker? Let us know. We can
this
dive.
Was clear.
It was?
It was clear. It's one of those where you got to get a new one like every 3 months because it turns to like this weird bronze color. So I'm going to probably need to grab a link from you to find the clear cases that stay clear and stay the same case.
That's funny, actually, because that one, that's gone so far. It's almost like a almost like it's meant to be that color. It's like a maroon almost. Yeah, this one has stayed pretty clear. Yeah. The last one got yellow, I don't know, like 18 months in. But thank you. Yes. Have my 1414 serial number dollar bill in the back of my phone here. That's those are the lucky numbers for me. Next time you find yourself on a roulette wheel, throw $1 on red 14. Yeah. Tell them Gus sent you.
It's 10% royalties. So if you hit 10% royalties.
Yeah, but anyway, we can dive straight into the Tasty platform here. Talk some of these positions. My short SanDisk, probably the most interesting among them. Maybe not anymore. Yes. Hurting me, but we are. Oh my gosh! Don't show me P Sky. Hurting me, but it does look like we might have caught this. It just took a gap up before the rundown started. Like this morning an open would have been better rather than yesterday in the middle of this show when I originally put this position on. But we do look like we're catching a little bit of bearish momentum in SanDisk here. So this is a scary spot. I was like 4 hours too early, but it was a big 4 hours because this is a what is that, like 2.5% candle to the upside, and then we've just gotten back to red on the day, but does seem like we might be hitting the top there. Similarly, I got short Intel. That's faring worse, but again, the momentum seems to be slowing here. A little bit of a doji-esque candle coming through here, not necessarily perfect, but starting to give some of those gains back. We've touched higher highs. Seems like we're testing those highs and maybe ready to reverse. So I might have been 4 to 8 market hours too early on both of these. Where's that Intel? Stupid right here. Might have been just a little too early on both of these, but the momentum does seem to be moving in the right direction for me. And recall, these are both 8 DTE, so I need them to do whatever they're going to do quickly. Rapido.
Yeah.
For our friends south of the border. No case, Greg. No case is scary. You're taking some risks with no case. I was this discussion started because I discovered a crack in my screen protector. I drop my phone all the time. I drop pretty much everything all the time. I gotta be I'm like a top 10% dropper of stuff in America. I bet. I didn't even know we had that soundbite. For real.
That was goated.
But yeah, top 3. I drop everything. I've broken many glasses in my life. I'm a clumsy guy. I get going too quick. Yeah. I'm trying to do too many things.
Parents didn't put a helmet on you as a kid, did they?
What?
The parents didn't put a helmet on you as a kid, did they? You weren't too rambunctious.
No, but I definitely hit my head a whole bunch.
Bumped your head.
Oh yeah.
What's going on, Brett?
Maybe that explains a lot.
You're smart. You're a smart guy, so maybe we need all.
Maybe there's you got to hit your head an odd number of times. So it switches back and forth every time.
Yeah.
I have a cheap Motorola. I see. Motorola. I haven't heard about anybody with a Motorola in some time. That's an OG phone. Hello Moto, right? I remember those commercials back in the day. Grumpy Mike, good day, bah humbug. Well, Mike, I know Resolute has to be paying you pretty well today. That's up at the top of my portfolio. Up. What is this? Oh, it just flipped back to down on the day. Never mind. Shoot. We were up like 7 cents at the beginning of the day. It was looking good.
All right, we got just a small gap to fill there.
Still green for me on the options, but the shares have flipped red on.
Just a small gap to fill there on Resolute.
Yeah, Resolute.
Nothing too serious.
Yeah, nothing too serious. Gaps have to get filled.
Nothing too obvious.
Gaps have to get filled. This is just a normal looking chart.
A little calm gap. Nothing too.
But I don't know. I mean, from where we added these shares though, I mean, $1.29. We're up. We're up testing 300% on these shares. This morning we had eclipsed 300% at that 390 level, and have since come back down. But the shares were well timed, and then the options fairly well timed as well. These are 10 calls, still 280 DTE, so some time to go. But we are literally playing for the gap fill with these calls. The $10 level is where this was before it initially sank. But the slow grind back and looks like we're testing these highs. But $4 has been the level here, and it looks like we might reject that here again.
Yeah.
Resolute is killing me. Poet is the big winner today. Poets. Oh yeah. Having a nice day. I don't know what this company is. I've heard of this ticker, but I've never actually done any research.
Very range bound company. Rivian vibes almost.
Yeah, SanDisk getting some weird expansion on the spreads there, pushing me up a little bit. Happy with that. Broadcom continues to chug. They've had a really good run here over the last week. This was another one where I have this 330, 340 short put vertical, and much like the Live Nation play that I exited yesterday, this one looked so dead, even more dead. I mean, we were down at this 290 level, and I was like, oh, this thing is cooked. And then just immediately from 290, blink and you'll miss it, we're at 372. So, good week for Broadcom. good week if you're an employee with a stock purchase plan, perhaps. Rivian long in a green day today as well, but just doing Rivian stuff. A triangle could be drawn here.
You could. I think you can make the base case for that. I know it's subjective, but
Rivian cares not for frivolous things like technical analysis.
Triangles.
Headline stock here. But yeah, we filled this upside gap, so just kind of waiting on the next move here, which will probably be another gap in itself. Really textbook gap fill right here too. Just barely. Look at that. Just wick to wick on this gap, the fill of this gap. But that's pretty much all the action I have going on today. Nothing new added for me today. Just those two, the Intel, the SanDisk that we put on yesterday. Still have one of these short VIXs looking to get out of this. I don't know, sometime. 2020 angel numbers, anybody? But 2017, good year. But yeah, looking for hopefully that 18 level on VIX. I got out of the first one yesterday at pretty much break even, just because as this expiration starts to creep up and I stay out of the money, theta really is starting to come into the picture. You can see here negative 3.4 theta on those. But would need a pretty decisive further collapse at this point, which doesn't seem likely. This is what I was looking for, and still being down after getting that and getting the volatility expansion on the put side is a little bit sketchy. But it's pretty much
might be
where I'm at.
It might be for the most part waiting on that next headline. We'll see where we kind of go from there. It kind of feels like we're in a state of limbo now that we have CPI out of the way. I know obviously we got to kind of wait for what's going to happen. Sunday night open, I think, is going to be the next hill to climb. But yeah, we'll see where volatility is sitting from there. It's been a fun ride so far, though.
Yeah, the headline risk is just as prevalent over the weekend. So
yeah,
lots of ways that things could go. Short side of things, I have these Target Shake Shack shorts going on. Not a whole lot to write home about there. Affirm obviously is also another short. These are the Target and Affirm are the more aggressive of the two. These are it's rare a naked put at like longer than 30, 40 DTE, something that you're planning to seriously hold. You got to have some serious conviction that things are gonna go south in the coming year, and I certainly do for both of these.
You sold that? Oh, you bought it?
Yeah.
That's pretty aggressive direction.
Target. But yeah, very aggressive directional play on both of these. Target, yeah, it's just.
I would agree over the sentiment of Target, though.
Yeah.
Just overall, like outside of the stock market, overall, I would actually agree with the sentiment of Target. It is going kind of downhill. I feel.
Yeah,
it was one of those growing up though. That's very nostalgic, but.
Yeah, and I don't like the managerial changes. I just don't think that it can sustain these levels. It's been much lower before. So yeah, I'm not really buying this run out of the lows. I think sub 100 could be imminent for Target. So sort of looking for that, and ideally in like the next 100 days before theta really starts to become a factor on these puts. But then Shake Shack, we are on the dance floor, as Errol likes to say so often. I got the 195 short call.
You got 1 foot in, 1 foot out.
Yes, exactly. So we are straddling the area that we need here. Need it below 95. We did get a gap up back to over 95, so perhaps that will fill on a good timeline for me. Got 69 days to expiration.
Great, amazing.
That's pretty much it on my end. What you've been slinging over there?
To be honest, really not too much today. We can jump over to the Tasty Trade platform over here before we shift gears, but for the most part, still legging in. Added another leg to the QQQs today, so we got 1, 2, 3, 4, 5, 6, 7, 8 legs on now. It's 8. Individual contracts. But no, earlier today we had purchased another put on QQQ, which is this 7 days till expiration put for April 17th. So that's helping hedge the other positions on QQQ right now. But for the most part, just managing this ball of trades. They're kind of all individual trades on their own that are, working together. So that out of the money cost spread.
Is that more legs since yesterday? You added
that's what. Yeah, I was saying. Yeah, so we added another one right here. I think we got 8 or 9 now. So that's helping hedge a little bit, but we got quite the family here. We got the uncles, we got the cousins, we got the whole crew. So we'll see how that one pans out. Micron getting a little bit more gains back from this today. We did make another high from the previous day's high, or we just rejected barely off of previous day's high on Micron, which is pretty impressive considering that Micron gapped up from about 377 all the way to about where is that? It opened up here at 414. The next day. So we had gotten short, especially after Micron had their earnings over here. We sent it to the downside at 313. So now that we're getting a little bit of a pop, hopefully SanDisk has negative earnings whenever they do have their earnings. And I think that might help pull down Micron a little bit with that. So we'll try to stay patient until then. We got 35 days till expiration. So I forget when SanDisk's earnings was. What is that, April 30th? 20 days away. So yeah, we'll still be in this trade. Potentially, maybe. We might have to manage at 21 days. We'll see how it plays out, but SanDisk earnings should help.
Alternating earnings on SanDisk and Micron got to be so frustrating if you're an executive at one of those companies.
It's got to be, right?
Yeah, like you're just focusing on you. You're staying in your lane, trying to give good earnings report to your shareholders, and then you have this other company that makes it like you have earnings every month and a half.
Right. It feels like
4 times a year, where it's just they move so tightly together.
And I'm curious about, even from like an outside investor standpoint, now that you bring it up, like I wonder which outside investors are looking between Micron and SanDisk and managing risk between the two, depending on their opinions. With that being said, yeah, nothing too, I'd say nothing too exciting. The most recent trade we put on was Micron, outside of the QQQ positions, but, we'll stay patient. I think the market still has a little bit more digesting to do because, even NASDAQ was pretty lackluster today. We haven't had too much range on NASDAQ today. First 30 minutes were pretty choppy. So you can see here, what is this, 7:30 when CPI came out today, that we pretty much just chopped around. We barely took the CPI high, and then we poked it like 3 more times before then selling back off to the day lows, hitting those pre-market lows and kind of just consolidating for the most part. So it's been a little bit quiet, a little bit more boring. But with that being said, we can jump over to the TradingView platform and then show a little bit of what we did today. But we took one opportunity that we saw over here at the value area low. Yesterday, we had shorted from the same level, so we were using this as the risk to take these opportunities today, just because it can be a little bit more, I guess, noisy or difficult to trade when CPI had just came out. So we were looking to get long at this value area low, and we just got chopped up in the sauce a little bit here. So you see we sold off, we got long a few contracts, stopped out as we made lower lows. And then we went to get short one last time, and then we just cut the trade, and then we end up ripping to the highs. So it was one of those where, honestly, in this situation, the short trade and the long trade made sense. Like at the same time, it's like, oh, duh, Errol, the market has to go up or down. But like, I'm more so saying from like a risk to reward standpoint, you could have found a decent risk to reward, whether you were getting short or long. So you can kind of see how both of them are playing out. And depending on whatever's going to give you your conviction, you can trade into that direction. But we were initially looking to get long, very difficult, very, very difficult trade to manage this morning. And then it kind of just left without us. So going to be patient now here. After the market rallied a little bit, we bought a put on QQQ that expires next week, so that we don't have to try and necessarily time the perfect top. Maybe we can just get in the vicinity or at least the area. Because once again, even if we look at QQQ, because we kind of base a lot of these trades right off the larger time frame on QQQ. We use NASDAQ as well, which QQQ is the ETF for NASDAQ. So when we consider those things, it'd be nice to get a little bit of a pullback on QQQ, which will help reposition us for a little bit, for next week. So if I go to this daily chart over here, if we just get a micro pullback, we just only need like 1 day pullback. I don't think we've gotten a pullback since we've put in that bottom just a few days ago. So once we just get one pullback, maybe we can fill a little bit of this gap, and we'll look to manage those short deltas in the portfolio. Tell them Gus sent you. Where did I miss that?
That was the roulette comment.
The roulette one.
Beginning.
I got you.
A little behind.
But yeah,
some exciting trades. How about Snow now? Zscaler,
Snow,
NW, CRM. Okay, well let's have a look. I'll tell you what, Zscaler. As I was just saying to Errol yesterday, is something we use here for our cybersecurity at Tasty, and I hate Zscaler. It is so frustrating to use a computer with Zscaler on it.
So he wants him to go bankrupt.
Yes, I do. I said my exact quote from yesterday was, "Hey man, Zscaler's down another 8%. Maybe they'll go to 0, and we'll have to switch to something else."
Do you know where their HQ is by chance?
What?
Do you know where their HQ is by chance?
Yeah,
do you know? Okay, cool.
I'm not that invested.
I know we got Salesforce over there. I just wanted the guys in there like, all right, guys, we need this stock to turn around. we got a board meeting here soon. So
yeah, no kidding. But yeah, Zscaler. I could not ever. You could not make me get long Zscaler. But that said, I'm not gonna get short at these levels either. A little bit sketchy.
Hey, everybody's got a price.
Yeah, I'm seriously trying to catch a falling knife on any of these if I am gonna get involved. I guess CrowdStrike is CrowdStrike. Seriously beaten down. That's sort of an interesting spot. Palantir, I ain't ever getting long Palantir. If Palantir has 0 haters, I am dead. CRM.
I don't know how I feel about Palantir. I can't tell about what's the CEO's name again? Alex Karp.
Alex Karp. Yeah.
I don't know how to feel about it. I don't know if he's bluffing on a lot of the way that he may come off in terms of his confidence levels and the way that he talks about how he has, such a high up seat to be able to influence all these things. And it might make you feel a little bit bullish on a company, especially if the CEO seems to have those type of connections and they're that confident. But I don't know how to feel about it either. So I'm gonna have to stay on the same side of you and Michael Burry for now.
Yeah, Salesforce is at 2023 lows here, over 3-year lows. That's sort of tempting. I mean, they're one of these companies that I like to attack when they find levels like this, like just giant, still well integrated everywhere, decidedly too big to fail. What else? What else was mentioned here? Snow and Now I don't really care about. Yeah, Zscaler I'm not going to do. I haven't looked at PANW. Palo Alto, this one, I don't know. This one's always a little freaky to me because I feel like this is a heavily trend influenced stock. It's driven by excitement, not necessarily driven by fundamentals. I understand the reasoning for the excitement, but I don't really like to get involved with things like that. So yeah, I think it comes down to Salesforce. I'll put on an exciting trade for you, Grumpy Mike. Let's see, Salesforce earnings on May 27th. Maybe we structure something around that. Play a how could it possibly get worse sort of situation into that earnings call. Yeah, looking to get long. May 27th. We can go May 29th, expiration cycle right after that. And then what if these standard deviations are tighter than I thought they would be with how much volatility this thing has had. Well, more premium for me, I guess, if I think the standard deviation should be different.
So I'll take it.
All right, let's kick back over to my platform here. Let's do something erratic. Okay, we're gonna go. This is Salesforce CRM, currently trading at 165. I'm thinking that this 200 level seemed to be a little bit of support here. Perhaps could be a resistance as well. I don't know if I want to necessarily attack that level directly, but what if we go around like this 195? The risk profile on these is so good. That's like 4-1, but there's no premium there, or there's no liquidity there rather. Yeah, man, screw it. We're gonna do a 200 190 short put vertical, 49 DTE centered around this earnings call. The idea here is that screw news, okay, screw fundamentals. What's gonna happen is the bottom's gonna be in here around 160. We're testing these 2023 lows. It looks like there's not a resistance, but there is. Okay, because all right. What more logic do you need than that? So I'm gonna think we're gonna get a little swoop down these 160 levels, and then we'll start to bounce. If we can just get to say 185-ish before this earnings report, all you need is them to say literally anything remotely positive. You're still at the 2023 lows, and then we go shooting back up. The 185 move up to 200. What's that? 8%. That's within the bounds of reality. Look at this thing here, right? That's all we need right there. Wham! Okay? So at this risk profile, this is actually, I mean, I'm sitting here kind of being facetious, but this is a very attractive risk profile. 125 of buying power for 875 in credit. That's north of a 5-to-1 risk profile the risk to reward that we're getting on this. So yeah, let's fire this off, and perhaps we don't actually even need the earnings call. Perhaps we just begin to close a little bit. Of course, it moves on me immediately. We'll go 850, a little below the mid. See if we can't get something in there.
I'd be able to catch a stray. There we go.
Yeah, ding, ding, ding. So yeah, we're gonna hope for a little bounce in Salesforce there. All these, and as I said, I was joking earlier, but I do like to get involved with companies that have strong fundamentals that aren't going anywhere anytime soon and are crazy beaten down like this. Things must turn over sometime. This is usually something that I would attack much longer dated, but Grumpy Mike says he wants excitement. Grumpy Mike gets what he wants. So we'll dive in on that. 125 buying power for 850 in credit. So my public school math tells me that's what 5-to-1 risk profile would be 625. So 6-to-1 is 750. So yeah, almost 7-to-1 risk profile we're getting there, plus 700 for my sports bettors out there. And that is a big move in a very short amount of time. But even if we just get to that 185 level or even the 180 level pre-earnings, even what if it happens in the next 2 weeks? I think that's very much in the realm of possibility. Mm-hmm. These might just be up 30%, and I can just go ahead and pull off there. But that's a big savings on something with really high potential upside at 850 of credit. So that's how we'll choose to attack that. There's an exciting trade.
Yeah, there we go. I see a little bit more volatility in there. Some of the metals. How are some of the metals doing today?
Yeah, we can pop over, have a look. We can do metals. We can do look at some Bitcoin as well. I haven't thought about the metals in a little while. My silver shorts have been fine, so that's sort of just my gauge. Yeah, not really a whole lot of action happening there. Just up narrowly. We're looking on crypto. Okay, just in that 73 level. We could
We broke yesterday's high on there. Yeah, we're getting close. Getting there.
Pretty much. I mean, we might have caught it just this morning, but yeah, that's basically 73,000 on the nose. Those highs. I guess it's a little more than that. Oh, well, there we go. Little $100 tick up right there.
Mm-hmm.
Yeah, I need these to move sometime. This IBIT position is pretty gross.
I mean, you got time on that though.
Yes. Yeah, plenty of time, but still sort of disgusting. I mean, it's just a gamma play, and yeah, I mean, 280 DTE is the shortest time horizon that I have. Like, there is plenty of time that cannot be overstated. But I need just the one $10,000 day, which Bitcoin loves to do, does so well. It certainly did it to the downside a number of times on this way back down here. So
you know what's funny? I actually kind of feel like Bitcoin has been the most rational asset out of the indices, out of oil, out of bonds, out of all these asset classes. I think crypto has actually been the most rational because over the last few weeks, we haven't made much progress. I mean, we've just gotten pauses and extensions, and the crypto market has just been moving sideways. And then the indices, right? We haven't made any ground. We haven't gone backwards. We haven't gone forward. We haven't made any ground. If anything, we might have gone back just a little bit, honestly, just maybe slightly. And if anything, we've been getting a lot of volatility in both directions. 1,000-point moves in less than an hour, less than 30 minutes. So if any asset class is acting rational right now, I might have to give it to Bitcoin and Ethereum.
Yeah, that's actually, I think that's a pretty astute observation. I mean, we're, we got this, we're flying, broader market obviously flying right now. We got this giant gap up earlier this
Lord.
week. Yeah,
I can't believe that's the industry.
Yeah, it's insane that this is the freaking S&P 500. The metals, we know what the metals have done over the past 6 months with this crazy run that we had in silver and all of this volatility. Oil, I will say, has been fairly rational as well. As insane as this chart looks, I mean, you get the giant squeeze as the strait closes, as supply is obviously going to restrict, and then we get news breaking that the strait's going to be open at least for 2 weeks. Then that all of a sudden looks a little more uncertain. They're keeping it closed, this and that. So we try to price in the potential for it opening. It looks like it might stay closed. We give it back a little bit. Like, the moves in oil have been fairly rational. But yeah, I mean, I think it's oil and Bitcoin. I mean, crypto has certainly, even in the last year, just been much more rational than traditional metals. I mean, it's been selling off, but it hasn't been.
It's normal though.
Yeah.
I mean, did we really think Bitcoin is going to go up to 150,000 just straight up? What market goes straight up? So I think these type of pullbacks are pretty healthy, actually.
Yeah, with Bitcoin, we became so accustomed to literal 1,000% years that it's like when it actually moves like a company for a little bit. And I mean, this is a big slide, to be fair. I mean, 125 down to 75 is like,
I will admittedly, so that's a slide. I'd be a little
like 40% we got going on there.
That's valid.
But at the same time, in the macro with Bitcoin, it is just a breathing period, because what's 40% on a stock that had 5 straight 10x years, in the last decade? So
yeah.
It's all, when you put it all in perspective, it's not really that crazy. And especially in the last month, has been moving fairly rationally.
Yeah.
I have the 280 DTE IBIT 45 call leaves, just hot garbage. I couldn't said it better myself, Brandon. Hot garbage. I have I'm 280 DTE 105. Again, just gamma play. I don't actually think any of these are going to wind up in the money by expiration. But if Bitcoin takes the leap, and then IBIT follows it up to say 60 or something, and it happens quickly. Like if we all of a sudden from right now, which this sounds crazy, but I mean, it is Bitcoin. Say something happens,
like,
and
I know this might sound crazy.
Yeah, and 14 days from now, we're all of a sudden at 60. That call skew would juice all of these way up. That's sort of the broader vision here. But the longer and longer that we go without that vision coming to fruition, even remotely, the taller and taller of an ask that becomes as these expirations creep in. Because this was like at a year when I put it on. These were over 2 years. I've been holding these for a little while, and I have scaled in, obviously, as you can see by the losses. This 135 I actually caught the bottom with pretty well. And then my ETHA, which is should be close by. Yeah. I just have one 30 call leap in ETHA. This is 433 DTE, but I pretty much did bottom tick this one. I mean, we are basically just unchanged on this position in ETH. It was, in fact, I'm surprised we're not up a little bit more. See, I think I grabbed this at like 15 spot, but that's like the only actually good, well-timed entry that I've had on these leaps. I bet. Hot garbage indeed. Well put. Take a look at the Forex. Oh man, we're at our time. I'm just yapping. Okay, we gotta.
We'll see what we get over the week. The market is inching lower to a new day's low, so I mean, we'll see what we get.
But working a little bit lower. Seems like we're just gonna kind of chill out into the weekend, and then pray for no further headline risk over the weekend, or at least in my case, I hope if we get a headline, it's a bullish one. But
thanks.
That'll be all we have for today. Everybody, thank you so much for watching. Do enjoy your weekend. Errol and I'll be right back here on Monday, same time, same place, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming up next. We'll see you guys next time.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still Friday, April 10th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, we're getting digestion here in this market as we've exhausted the catalyst of lower oil prices in the short term. We're getting indigestion in the charts as the session goes forward.
Yeah, not a clear picture. I mean, I'm a little, optimistic that we're not selling off into the weekend. So the second week that we haven't sold off into a weekend. So the pattern from before the 4 weeks prior, you saw pretty heavy selling on Fridays, and there's a flip in sentiment that's clearly happened now.
It's not horrible selling, right? Stocks are only a few points out of their open, but you are seeing a little bit more weakness in gold. Oil prices are stickier. Bond yields are creeping up as the day goes on. We do have our U.S. delegation en route to Islamabad, Pakistan right now. Iran seems to be adding new conditions. No matter what happens over the next few days, it feels like we're going to get to the charts on Sunday night for first call, and there is going to be a meaningful gap here. So, Josh, we can go right to the slides here. Let's talk about this indigestion on the charts, maybe because of the CPI release that came out today. Before we get to the CPI, though, spotlight here, the macro calendar for next week. We've been through non-farm payrolls. Now we've been through CPI, Thomas. Next week decidedly has very few things on it that raise my eyebrows. I don't see any central bank rate decisions from the US or elsewhere in the G7 world. I don't see any major labor market releases. There's a little bit of PPI there, which will help reinforce the inflation narrative around energy prices. But beyond that, what are you paying most attention to next week? Should we have just titled this slide oil like we've done in the past?
Yeah, it's still oil. And if, we'll get to the oil section, but if you're looking at the physical market, there's still a tremendous premium to futures prices. If you look at the physical market, it's still extremely tight. I mean, it's that's a signal, I think. So I'm still bullish, or at least not bearish on oil prices. That's the way I'm trading it.
So next week, Chinese data may be of interest for the market. Emerging markets have been, in a little bit of a rebound mode here as some of that pressure has come off. At least the hope that the strait's going to open sooner than later. Chinese retail figures, GDP, all of that I think comes to mind. Also the trade figures at the start of the week on Monday evening. So technically the Tuesday future session. I wouldn't look past those either, given what we're seeing in terms of supply disruption globally right now. Is China insulated? Seems to be a big question. Many people think it is. Thomas, we had that CPI come out this morning, 8:30 Eastern, 7:30 Central Time, and it yielded not much of a reaction one way or the other. How will we parse this data? For those that missed the 3 things to watch video that we put on our socials every morning, suggest you start tuning in and subscribe so you get it. We spoke to the fact that when you look at the difference in headline versus core inflation, there isn't much evidence yet of that energy spike spilling over into the core arena. The knock-on effect isn't there. It's not a broadening of inflation thanks to energy so far with what we've seen in March. It's a change in the constitution of what's driving inflation higher. Nevertheless, with what we saw with PCE, with what we saw with inflation this week, prior to the war and the effects making their way through the system, it's obvious, at least from my point of view, that we're still at the start of this cycle of digesting this uncomfortable data, these figures that may give the markets pause as they did in late 21 and going into 2022. Thomas, Michigan confidence report came out today. That was the worst reading on record ever, period. So this is the sentiment right now on one hand is really, it's down. It's really bad. But these are also not the kind of things that you see that are just going to end very quickly. So stocks here now on the other side of that CPI data, it's 68.50. There's been some conflicting Iran headlines. Volatility has been rising over the course of the session. We had 39 IVR earlier. We're now back up to 44. VIX is making its way back into 20. Thomas, I've said enough here. You mentioned the market not having a spook, really selling off aggressively going into the weekend, which I suppose is a good thing. But the market is getting weaker as the day goes on. Are you concerned that traders are going to look to the headlines that we've seen from Iran, from the United States, and maybe take a more cautious stance heading into these negotiations?
Yeah, I mean, I still expect some weakness into the end of the day. It's not as extreme as we've seen recently. So I guess you could kind of say that's bullish. You mentioned consumer sentiment. After COVID, I mean, consumers are just so sensitive to any kind of rise in inflation, right? Because as much as we heard that it's transitory last time, you just get punished for a while, and I think consumers are very weary that price increases are going to stay. And everyone knows this. You see prices at the gas pump, they go up really quick. They take, no matter what happens, they take a long time to come back down to the level they were at. They never go down as quick as they came up. So I think consumers are already seeing this. They're tightening their budgets. I mean, and that's kind of how you have to look at consumers also facing the stock market. Are you going to be taking a lot of risk right now with your investments? So I mean, you also have to consider, once we get out of this, we're back where we started, and the market already lost its top before this. We had this kind of rounding pattern in the S&P 500. So, what is the big catalyst once we come out of this? Of course, there's going to be an unwind of the geopolitical tensions. There's going to be some relief as oil prices come down a little bit. But what really drives us higher? My view is when we do cement some kind of a deal, it might be like a sell the news event. It might be like, we have to take a step back, and now we have to get a new picture of what we're facing in the future, and what's the catalyst there,
68.50 feels like a familiar price. Feels like we were near 68.50 for most of the fourth quarter last year and for a healthy chunk of the first 2 months of 2026, Thomas. In fact, I was looking this up last night thinking it was a fever dream. Nick Batista sent me 68.50 over Teams or text no less than a dozen times over the past 4 months in some sort of like hellish purgatory that we're never leaving 68.50. And so here we find ourselves again, 68.50. It's a comfortable place to be, but maybe a place because it's comfortable, we have now moved into the full pricing of the ceasefire actually working out. That's not to say the market can't rally further if we wake up on Sunday and we have positive headlines about how the negotiations transpired, and they're supposed to take place today, tomorrow, the next day in Pakistan. I think the gap risk for Monday is going to be exceptionally high, no matter what happens. Either way, a headline like agree for a second round of negotiations would be welcomed by this market, I think, a step further in the right direction. But Iran has been saying negotiations, they can't start until there is a full ceasefire in Lebanon. And that ceasefire talk is occurring in DC next week, not before the US and Iran negotiators are expected to meet. And they want a full release of Iran's blocked assets. Those feel like those are untenable starting points. So the news flow here, a little bit of weakness now. Your Dow Jones is up by 0.6%. Your Russell down by 0.4%. Volatility, VIX is back above 20. Given how far we've rallied, and as someone who has been thinking of when should I try to time selling this rally, do you think that this Friday is the right place to do it?
I mean, if it is, it's probably a better time than any. You have, the weekend headlines can generate. I see the most positive thing, and this is coming probably with, a positive spin from whatever side's reporting it, probably the U.S. side, but saying something like negotiations are moving forward. That they haven't broken down completely. That's probably the most bullish headline we're going to get this weekend. It's not going to be a ceasefire has been agreed to, the terms are agreed to, the war is over. It's way too quick for that to happen, right? So I think if you are trying to time a top, doing something like selling call spreads or something, giving yourself a little room, I think that's probably the thing to do if you're trying to call a top here.
The call spread to me seems like the best way to do this. And I'm thinking about the exposure that I currently have right now, particularly with respect to what's on here on the follow page. Thomas, I have short 7,200, 7,250 as part of an iron condor, short iron condor, where the downside is at 6,000, 60.50. Getting to 7,200 in the next 49 days is not impossible, certainly by how the market's pricing things. But that would also mean that we're punching up into new all-time highs right now. Could that occur? Yes, but what was one of those weights that was keeping the market dragged down in February, preventing it from running to the upside? And it was what was happening in software. And you and I highlighted this at the start of the show yesterday about how there was this interesting breakdown occurring in the market where when we get our relief headline the other day, the market treats it as exit liquidity in this battered down sector that people were bottom picking a few weeks back. And now it's broken to lows below where we were in April of 2025. Thematically, something interesting is happening with software, and it's not just related to AI. One of the reasons that the United States on a macro level has such a large service sector surplus in trade is because we have software that we export to the rest of the world. Now, I'm not saying that this is the beginning of a trend, but it's certainly to me one of those waypoints on the signs of why wouldn't we ever get back to peak valuations for the American software sector if AI is fundamentally changing the game. I saw a little announcement today that the French government is officially moving away from American interfaces for media planning and phone calls and meetings within the French government itself. It's going to be dropping the clients that it uses that produce American software and only going to buy from European, specifically French software makers now to host these types of meetings. So there are a few different things where if you think about the structure of our economy and what's driven software here, it's because American software companies have this gigantic edge over the rest of the world. And not only do you have Anthropic nipping at their heels, which, speaking of nipping at their heels, there was a Bloomberg story yesterday that Besant and Powell called a meeting with financial executives to talk about the risk that the new Anthropic Mythos model poses to the system. That feels like a headline we should be talking more about. It seems way of a bigger deal than whatever, hypothetical Citrini blog post transpired back at the end of February. So we have this still perfect storm where one of the hallmark sectors of the broader market, I know semis are still ripping, chips are still ripping. This is one of the reasons why we couldn't rally through 71, 7,200. So, Thomas, I feel like we have to keep this on our radar, even if we're not shorting it, even if we're not trying to call the bottom. It is something worth keeping in mind when we consider if this market rally loses steam, are those other factors that kept us from punching into new highs? How have they evolved? Have they been resolved? And I would say no, given what the charts are looking like.
Put spread, short put spread. I let go of that Wednesday because IGV, all the softwares were just not moving. You would expect them to in a bullish market. So quickly cut that out. And I'm not surprised to see IGV continuing to tank. This is going to be, something holding us back a little bit. If the war ends, if we keep trying to go up, definitely a concern going forward. We're going to have to shift from more of a software-based economy, perhaps. I mean, that could be a potential thing if this is how the chart's looking.
I'm thinking about the biggest holdings in a name like IGV, which is Microsoft. Then you also have Oracle, and Oracle and Microsoft, between the two of them, that's 16.87% of IGV's holding. So it's we want to think about a proxy play on ChatGPT and OpenAI. We frequently talk about those two companies being part of the flywheel. There's also Palantir, which got a nice shout out from the president of the United States today on Twitter, including the stock ticker, which is
with the ticker symbol.
Interesting. 127.06. And so this is also down. So you think about like the three heavyweights here, between Microsoft, Palantir, and Oracle, that's 25% of IGV. And then you get your Salesforce and your AppLovin and your CrowdStrike and your Adobe and your Intuit and your ServiceNow. And those are all the names that have been just sucking wind on the back of AI. Adobe's down another 2.2% today. Intuit, even though we're going into tax season, Thomas, down another 4.5%. I saw a wonderful thread on Reddit the other day where a guy had Claude look over all of his taxes, and then just for giggles, he put it into TurboTax, and Claude was way more accurate. So, as I'm getting ready to do my taxes this weekend, I'm like, should I just fire up Claude? File that way. Either way, though, Thomas, IGV still being in the tank, that's one of the problems. Is the Fed able to deliver cuts for us Today's data probably tells us they can't deliver cuts. They're probably not going to hike. And obviously, we're going to update these priors month to month. But if Fed rate cuts in June were one of the reasons why the market was holding up, that pillar has been kicked out for a little while. And I think given the inflation that we have coming through the pipeline, just this idea that the Fed has to think about hiking potentially could be a constraining factor. So selling the vol up here or getting directionally neutral to me seems like a better bet than trying to chase this to the upside. And I know I said that yesterday and the day before, but since then the market's only up like 30 points net from 68.20 to where we are now. I still can't find a reason to chase this higher.
Yeah, I did it a little too early. I sold a call spread on ES at 65.25, and obviously that didn't work out. I still have a short put spread in Microsoft. I feel a little better about that than I did in CRM, so keeping that on. But I'm thinking about trying a short call spread again. The last one didn't work. I do like it better here, especially going into the weekend. I may or may not put it on. I have to see how I feel, how the second half of the day looks here.
For all the jawboning, the Pakistani PM Sharif just came out on the U.S.-Iran talks. The leadership of both countries will start tomorrow in Islamabad. So he's trying to, get off of edge, ignore what Trump's saying about the military buildup and the Iranian delegation saying about all these extra people are showing up and we're talking. That's still scheduled. Everyone's just jawboning right now. 68.55, Thomas. If we head flat in the rest of the day and just chop around, people have made their commitments. We saw a lot of the hedging activity. The puts that were put on taken off. We're kind of back now to neutral where we were prior to the war starting. And those other problems haven't gone away. As for me, I still have short call spreads here in the Russell. I'm not changing them. I have plenty of time to expiration, even if they're a little bit underwater. The directionally neutral things in the S&P 500 are working just swimmingly right now. So there's no reason to take those off. I find myself thinking patience and, not happy that I missed the move higher. Never easy missing an 8% move to the upside in stocks in the span of 7 days. But that doesn't mean there's a reason to go about doing things differently because, hey, I wasn't short on the way down necessarily either. I was still doing directional neutral and it's working out still. So work with what you have that's working right now. And I think that's the best we can hope for.
Yeah. Easy to want to chase a move that goes this quick, but I agree, not changing what you're doing. I'm still a little hesitant. I'm not really using as much of my buying power as I usually do. So staying a little lighter just to, in a way, to protect against volatility.
This is a make or break moment to seek a permanent ceasefire, according to the Pakistani PM. Fun, exciting. Bond downtrend is still intact. Why do we say that? The move in ZB the past few days stalled up against the 1 month moving average. We had attempts to get through there, but you get these doji candles the past two sessions, and today we're just starting to lurch below it again. And with it, it brings in a negative rate of change for the 1 week, 1 month, and now 50-day moving averages altogether. You think about ZN, a very similar type setup where the past few days we get back to former support turn resistance, and it's a market that's struggling here with those doji candles right up against the 1 month moving average and us seeing a pullback in price. Thomas, with respect to that, there's something interesting here. You might call what happened on Wednesday a shooting star type of candlestick. Today, if we move below the low of 111 and a half a tick, then we have a bearish outside engulfing bar up here, or key reversal, if you will, up at a former support turn resistance zone. And given the role of treasuries throughout this U.S.-Iran war, we've seen that they have been plumbed as a source of liquidity for countries needing to raise capital. It wasn't necessarily the inflation expectations that did the heavy lifting for the treasury market in the month of March. It was the fact that term premium was expanding, uncertainty over policy and how it would impact the broader market. So gold going down, stocks going down, oil going up, and bonds going down. That's all very, one-way street. We've seen that before. We saw that in the early days of this crisis. And so a realignment of bonds going down with stocks while gold's going down it's a little discomforting, I should say, as we head into a weekend. The market clearly is not ready to extend the optimism further without some concrete, tangible proof. And that has not been afforded yet because there are still barely any ships transiting the Strait of Hormuz. Officially, AIS data has one oil tanker making its way through the Strait of Hormuz over the past 24 hours.
Yeah, not a lot, just one. Obviously the inflation data driving up yields on the long end. It's kind of putting, a pause on the upside in equities. You're getting more oil pressure. If I could see a scenario where if the talks are going good or decent and they're moving along, you get a little bit more upside in equities, but the bond market, gold, precious metals, gets a focus on inflation. Because no matter what, if the war ends soon, the inflation concerns are still going to linger for a little bit. So, you might get a scenario where equities could have a little bit more speculative upside, whereas bonds, precious metals are focused more on the inflation story. And then, the stock market has to turn back to inflation eventually if yields continue to rise.
One of the incidents or knock-on effects of what we saw today with the inflation data, and we talk about a market that's now shifting its headspace, right? The psychology of the market thinking about what the Fed can do next really is an important driver. There was a point, what was it, 2024, when the Fed came out, and I think we could actually show it on the chart, better to show than tell. It was May 1st, 2024, when the Fed had their meeting. Okay. And I bring this up because the market, I believe at the time, was in a state of panic, if I recall correctly, that the Fed was going to have to consider, yes, it was, that the Fed was going to have to consider hiking rates again. Okay. So we had gone through this period in April 24 after Iran and Israel exchanged missile fire for the first time, where maybe the Fed would have to hike rates. And then what do we get? We get the Fed telling us that, no, we're not going to have to hike rates again. And taking that off the table, that no rate hikes are coming, either we're going to cut or doing nothing, but you don't need to worry about the hikes. That was meaningful for the market. And so when I think about where we are right now, Thomas, and think about what's happened with our inflation data today, there has been a slight shift here. And it's slight enough to draw my attention because it's a market that was pulling in more rate cuts over the next year, with the first one expected by April, to now we're going back to starting to tilt in and bring a few more hike possibilities forward for over the summer. In particular, for that June contract expiry, we see that yesterday there was a 1% chance or so of a 25 basis point rate hike, 2%. With a 3.8% chance of a cut. Today, no chance of a cut, 3.6% chance of a hike. So it's these small shifts on the edges here, the way that the market's responding to the latest news, information, data, blah, 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 that when we think about bonds and notes and how they behaved through the 2022 episode and 23, it's hard seeing acceleration to the upside right now until this oil conundrum is resolved.
Yeah, I'm still not trading bonds. Just don't feel too great. If I did, I'd probably do a short call spread on ZN here. Think that looks decent. But I still think inflation's largely going to drive it. And the longer we go without a ceasefire agreement, I think more pressure is going to come in.
You mentioned ZN as opposed to ZB, which is generally speaking the more approachable product for retail traders in Treasury futures, in part because it's half the tick value, $15.62.5 compared to the $31.25 for your ZB. And then likewise, the overnight buying requirement for ZN is half of that of ZB. you get the added benefit that the IVR in ZN is higher here, closer to 30, whereas in ZB it's still in the 17.4 range. So if I'm doing anything, it's going to be in ZN, not ZB right now. You mentioned short call spread here. I hear you on that, but vol really did come in a whole bunch over the past few weeks. And if we get another oil spike, I could imagine that treasuries are the ones that get pushed to the downside again. Just thinking about the potential convexity here, and right, you could be right. We could both be right, but you could make money and I could lose money. That treasuries are going to go lower. If they don't go low enough, if you're long the put spread, you're not going to get anything out of it. At least if you're short the call spread, you'll make something. Short the call spread here, 113, 112.5. It's a 10-1 risk to reward right now. Playing for a move the other way. Let's just do a little swap there, bring you down here. Back. We're going to go 110, 1095. You're risking $62 instead of $46, but your profit potential is 10 times, effectively 9 times what it was previously. So just for the convexity of it, right? If I'm going to be wrong, I'd rather risk losing $62 with the max upside of 437 than the other way around. So I'm going to do this. It's 21 days to expiration. This is not a typical selling vol type of trade. This is actually a vol were to expand and these talks were to fail or deteriorate in some form or fashion. I'm going to see for today's low close, right? That's giving us the bearish engulfing bar below 111.5 a tick. We start to move down there the rest of today. We didn't clear it today so far, but if we move down there today before the close, I'm going to want to get some short deltas here because then this looks like a failure at the 1 month at former support turn resistance. It's giving us that nice engulfing bar. As a technician and a trend follower, that's the signal that we have to abide by the fact that the trend is still intact and it's to the downside.
Yeah, it makes sense. Yeah, not much premium for the short call spread. That's a good point. Yeah, I'll look at it. I'm not sure if I'm going to take it.
Yeah, right. Like I'd rather just leave my max loss potential at $60 or $62 rather than like $480 if I'm wrong here. So there are those considerations to make when you're expressing these views. If this was a 60 IVR, we may be having a different conversation, right? So, Thomas, we can move on to the metals here and go into metals, and then obviously we're going to talk some oil shortly. I think that's probably the place where most people are looking these days when they first check their trading platforms. Gold, silver are both coming off. I've had a lot of difficulty, as you know, we've talked yesterday about 24 hours ago about this. I have difficulty buying into gold right now because it's struggling to clear key levels. Still the uptrend from the October, November swing lows, the low that was clipped at the start of February here. We can't punch through the 1 month and the 50-day. If we get resolution, we probably do. But until we do, the fact that the dollar's starting to rebound and yields are going up, it just leaves me uneasy. So I'm waiting to trigger a new long trade here. I feel like if we get an opportunity where this thing sells off again, it's going to be, buy the dip. But I don't want to buy the dip right now, given how this is trading as a mirror to oil, and it's been trading as a mirror to oil for the better part of the past month.
Yeah, 50% retracement from the highs. It's consolidating here. There's not a long signal yet. I haven't touched gold really since this conflict started. Haven't touched silver, and I mean, at first it was weird. At first thought, not when you look into it, but at first you're like, gold selling off. There's a war going on. Inflation could rise. So gold typically a safe haven against these kind of things, but ultimately you needed liquidity, and that liquidity came out in gold for whoever was selling. Yeah, I think it has potential, like silver getting above 78, 79. Then I'd feel a lot more comfortable getting long there. The only metal I'm still long is copper. That's it.
Copper having a decent day of sorts, 587 here right now. up nearly 2%. Volatility has, over the course of the past several weeks, just like everything else, come in a little bit now that we've had a little, relief rally off the lows. You can always head over to the platform and use CPER. It's the copper fund. It's how you can get the corollary for your IVR. So going back to the chart here then, Thomas, 587. How are you structuring your exposure moving forward? Are you ready to roll? Do you think that we've had a nice enough rebound where you'd want to take profit?
So this is a position that I've been trading since mid-March. I've rolled up the short put spread several times, and I'm currently at 5.57, 5.6 for it. And honestly, a little bit more to the upside, and I'll roll up these strikes one more time. Probably the 46 day I'm in, so I might. Where are we at? I might push the duration out next time. I won't do this till next week, so I'll probably do the 76 once it comes in around 70 days. I'll probably roll up there, and I'm fine if it pulls back a little bit. As long as we're staying above 5.7, I think I'll keep doing this.
Yeah, we had that line in the sand over the past several months, 5.6, 5.7. It was a neckline, so to speak. We'll call it December through mid-March. So getting back through there, meaningful. And when we got back through there, what do we have to contend with? You could see how we chew through the 1 month and this supply that's built up. It took us several days. We finally get that burst through the 50. And then what do we do on the other side of the 50? Test it and hold. And we're holding the 1 week. This is really nice momentum expansion here, Thomas. And I think, as long as we could get a negative headline about Iran, because copper being so growth sensitive, if we get another surge in oil prices and it looks like the Strait of Hormuz is going to remain closed for much longer, as Kevin Hassett said today, up to 2 more months, maybe there are negative growth implications. But copper has been holding up better than most others, right? Gold has not returned to where it was at the start of the war. Copper almost is there. Copper was trading at what? The close prior to the war was 605. At the end of the first week of the war, it closed at 587. So now we're higher in copper than we were at the end of the first week of the war. Whereas with gold, that first week gave us a close of 51.97. So we're still a healthy $400. Copper being the China story that it is, next week we have all that Chinese data due out, the retail sales, the GDP, the export figures. Copper may have a catalyst unique to it that gold and silver do not have. But if we get a little bit of, if that data shows up strong and then you get some weakness on an Iran headline, copper to me is, just from the charting perspective, has the best footing right now for any long deltas. Whereas gold and silver, they're still chewing through resistance. And maybe this is an allegory to what happened with copper, Thomas. Copper bumped into its 1 month, its 50-day. It took a little while to get through there than it did. Maybe that's what gold's contending with right now. And ultimately, it's going to get that pop. But we don't know. Copper looks like more of a sure thing, if I had to look between the two.
Yeah, and I mean, there's one interesting story I'm starting to look into. It's China is starting to ban exports on industrial acids. And sulfuric acid, I think a couple other types of those industrial acids are used pretty heavily in copper smelting production. So there might be something there in changing how the smelters in China are operating.
Silver faces the same problem as gold. Volatility has come in a lot, and that hasn't been conducive to sustainable rallies in the metal like we had in gold, where former supports become resistance. You're seeing it here in silver, the bottom side of the range immediately after the war started, right around 77, going up to about 78.5. We haven't been able to crack on through the past few sessions. Is this a place where I'd want to sell silver vol? No. So short iron condor doesn't do it. Do I want to get long here into resistance? No. I really just don't like how the metals are situated still, except for copper. But I want to see a pullback first. I don't want to chase something that's at relative highs. Maybe the weekend's headlines will give us that. Oil's been staying sticky here. It's obviously a point of focus in the market today with that CPI report showing that fuel prices contributed more than 30% in the rise in headline inflation last month. We're still hoping and staying hopeful here with oil down to $98 in the CLK6 contract on some of these headlines. It does seem like the remarks from the Pakistani prime minister have allowed a little bit of relief here and pressure to come out of the market over the past hour or so. To that end, Thomas, this chart is obviously the most important thing to watch come Sunday. I guess we should point people to Weekend Oil over on IG.com. Little shout out for the parent company. There are ways to track this over the weekend through the CFDs or even through some of the crypto markets, which IG doesn't have a hand in, so I'm not going to name check them. But what we're looking at here, Thomas, with crude $98 and change, clearly we are on hope springs eternal type of mindset right now. How are you playing oil at this moment before we get into how I'm structuring and adjusting my trades as we think about a weekend of negotiations?
I'm bullish on oil. Let me see if my order filled yet. Hold on one second. So I have another short put spread I am trying to work right now, 34 days out at 80.79, and I already have a short put spread on oil I put on earlier this week at 75.76, 67 days out. That trade's doing good. I have an iron condor between 68 and 110. I'm keeping that on because it's doing well. So yeah, I'm just when you look at physical prices, so not even the nearest term futures price, actual delivery physical market prices, they haven't come down at all. They've actually continued to rise this week. And, that's just going to a lot of the geopolitical risk premium. Some of it, has allowed oil to come down a little bit. But as you said before, hardly any ships are moving through the Strait of Hormuz. There's still about 10 oil facilities and refineries in the Middle East that are severely damaged, a few dozen more that have light damage. So, this is still very well a supply shock from physical supply being damaged, from Strait of Hormuz still being closed. So the longer we go on in this ceasefire without a material deal being reached to allow traffic through the strait, oil is going to stay higher. I don't see it really coming down. Now, you could get the days where you get a positive headline, talks have progressed, they're going well. Yeah, oil could do 4 or 5% down move, something like that. But we're staying above 85. We're probably staying above 90 until there is, ink on the paper for these deals.
Just getting the headlines here. Oil volatility has stabilized after coming back in over the course of the session. We were looking at IVRs that were 61 or so earlier today, and they've since dropped to 56. Clearly, if the market was really worried about the negotiations over the weekend, we wouldn't be looking at oil vol subsiding here. For what it's worth, it looks like that the uptrend in oil is still very much intact. And one of the reasons why, as a trend person, thinking about how the market has traded since the war began, we are still in the throes of this uptrend. But if it were to break, there are signs that momentum is failing. And kind of like how gold was last year, oil has done well when volatility has been running higher. I like short put spreads as opposed to long call spreads right now, if we're going to express any bullish view. I still have a lot of directionally neutral things on that have been working that I could take off. I have a bunch of short put spreads down here at 6 days to expiration. I can go higher. There's one short call spread, 122, 124, which interestingly enough, now for the first time since I put that on, the first day of the war, it's actually able to be sold for a profit. That's wild to me. But that just goes to show how high volatility has run, that even though the market didn't get through 122, 124, this has been an unprofitable position just because of the vol component blowing up. I don't see a reason to change those things, even in the event that the negotiations go sideways. Are we going to jump right back up to 117, 118? We're going to have this back and forth, this jerkiness. I feel like short put spread is better. If I wanted to be long deltas right now, I'm not looking for the 120 call. Playing it down here where you can get some vol still in this market in the short term, 80, 78, as you said. That's going to be your play if you go beyond the short dated stuff. If you go out to 34, I think that's where you mentioned you were starting to dip your toes in the water. I have 79, 77 down here. This is still risking 2 to make 1. Now it's north of a 70% probability of profit when it was just a hair under that when these positions were initially put on. There is a dynamic here where you mentioned oil facilities being shut down. The time needed to repressurize the pipelines and get supply moving again, and ships moving through the Strait of Hormuz. But Thomas, if Iran says they're going to let 15 ships through a day, what are the odds that 10 of those ships are all VLCCs to make up for the 20 million barrels per day that have been lost from the Strait in totality? Odds are low. There's dry cargo that needs to make its way through. There's natural gas. There's a whole host of other things. So why on earth would we surmise at any point in time over the next week or 2 or 3 that oil is going to get anywhere close to where it was at the pre-war lows? That feels like that's a much surer bet than trying to punch a lotto ticket of, $105, $110, $115 oil again. Although it's the hell of a lot more exciting thing to do, it may not be the prudent thing to do.
Yeah, I mean, staying long or at least neutral oil is my only high confidence trade pretty much right now that I have. So that's why I'm getting a little more leveraged, portfolio wise. I'm not, up there in leverage to how I usually trade. On crude oil, I am.
Yeah, so right now, in terms of making adjustments, the 77, 79, happy to have sold that. Looking at it 6 days, right? No reason to touch these. No reason to look at the short call spread over here, side of this. 0 today, right? Short put spreads that are down 80.43. These things have worked out, understanding that there's a certain, physics to all of this. It's a molecules crisis. I think that's the way to go. So now that I have some exposure rolling off here today, let's continue to go out and do this. CLM6 is where most of the juice is going to be moving forward, just because we're at the end of the expiration cycle for CLK6. $80 has been a line in the sand here in recent weeks. You can go out further in time. You can see how the market is actually holding. Go to like CLZ6. You can see how this is moving up today. So you have a floor down under 70. Yes, some of the supply pressure comes out of the market and tilts the front end of the curve down, but at the long end of the curve, it means there's less likelihood of demand destruction. Less likelihood of demand destruction in a market where supplies will still be tight. So those contracts could be underpriced. I'm going to take a crack at 34. Still feels pretty good, Thomas. Got to say. 34 days to expiration still feels pretty good. What if we want to go a little bit further out? We could go 72, 74 here. 72, 74 is going to give you about a 4-to-1 at a 50% probability of profit. And this is why I have the strikes I chose. I really like 72, 70, or 77, 79 still. I really like that still. I'm going to stick with this. There's no reason to make an adjustment, in fact. Maybe we'll get our pop. Maybe we should punch a lotto ticket. Do you want to do that? Is that what we should be doing, just in case we're wrong about volatility staying in here? 3 days to expiration. Oh, well, this is also why. 95, 96 call spread 3 days out is a 1-to-1 with a 3% probability of profit. Are you really doing that type of trade here for a 3% probability of profit? I don't think so.
No, yeah.
Short put spreads a little bit longer. Don't punch lotto tickets. That's worked out well. Keep doing it.
Yeah, I mean, the short put spread, you're not going to get, because we're likely not going to get a 10, 20% move higher in oil. So it's something you're going to have to wait a little bit to get paid on. But I think it's the trade that works out a lot better. You look at the numbers.
Do you want to play anything underneath the market right now? 89, 90 short Call spread in the CLK6. There's just playing it short dated to me. It just doesn't have the juice if you want to be a vol seller. Also, short out and condor can keep working. Get that really nice sweet spot where the market can't rally because there's a ceasefire in place, but because of the supply problems, you can't fall too far. And then all you get is a big volatility drain with downward drift. So if you're optimistic, right, you're playing for inside and lower. If you're pessimistic, you're playing for outside and higher. I like the broader view. Natural gas, Thomas, we touched on yesterday. It continues to fall here, 260.47. You and I surmised that with a 20-something IVR, lower than what we're seeing in stocks, this is not worth looking at right now. Typically, you look to natural gas because it has a huge volatility premium edge compared to the other asset classes. Now it does not. Can we spend some time on the grains, which we haven't looked at this week?
The WASDE report did come out yesterday. So the April WASDE, it's like the last WASDE that's a little low impact. Once you get into the May, June, and further WASDEs, it's a little more impactful because the USDA is measuring more tangible things. Things are actually in the field. You're looking at crop price reports, acre yield estimates, things like that. But the big thing in the WASDE this week is it was kind of bearish for wheat, and that's because India is going to consume less. So that ends up raising global ending stocks, and I think the number for WASDE was around 6 million metric tons higher for wheat. Corn, soybeans, they didn't really change at all in this report, so it was pretty much a non-report for those products, but for wheat it was a bearish report. Soybeans, corn, there's a biofuel component to them. There's component for soybeans. Those are really being driven a little bit more on things like oil and stuff. The ceasefire kind of hurt corn, and we're just seeing some liquidation in corn actually. Even though the prospective planning report released at the end of last month said there's going to be less corn planting this year, which means less supply at the end of the season, but still prices have come down. I don't hate a short put spread in corn around 430, 425. I think there's some resistance there you could look at and potentially take advantage of the slightly elevated volatility. And corn does give you the highest IVR of the three products. Wheat, the lowest, soybeans in the middle in the 40s. Corn really giving you the IV to play with of the three products.
I was under the impression, and I just had a conversation today that's going to be up on the Trading Trends channel. Jim Welsh of Macrotides noted that he's keeping an eye on fertilizer prices and how that impacts the grains, because if you don't have the urea you need to fertilize your corn, then those farmers can switch over to soybeans, which doesn't need any of that type of fertilizer. So it feels like the prevailing narrative is that this thing gets worse. You're going to have this switch in how farmers actually sow their crop. Let's just entertain a scenario where we walk away from the negotiations with no ceasefire coming into play. Do you think that there's a tangible play that traders could be looking at in grains, which is not an area where most people are looking, just generally speaking, when they talk about trading?
So I'm sorry, Chris, what exactly is the question?
Corn's been crushed on the other side of the ceasefire announcement. Is this a buy the dip opportunity, right? Right? Wouldn't corn supplies be limited moving forward, much more limited because the farmers can't plant them?
Yeah, and the farmers that do plant corn, if these prices stay high for fertilizer, you're not going to be able to get as high of yields, because the less fertilizer you use, your corn's already in the ground, but perhaps you say, you use a little less fertilizer, try to control your costs a little bit. That's going to reduce the yields per acre for corn. And, the longer this goes on, the more impact it's going to have, because corn, as far as from what I know, you can still lay nitrogen. You still have to lay it throughout the growing season in several phases. So you have to apply it at the beginning, the middle, and the end pretty much in varying amounts. So if this is still high, where it's the middle of the season, farmers are potentially going to say, I have to use a little less fertilizer. I just have to, that's what I have to do because I don't have the funding to, pay for all this fertilizer that I need right now. So that could potentially, support corn prices going through this season. Of course, the longer this goes on, the more of an impact it could have.
We'll keep an eye on it, Thomas. I'm looking at the lows here, recent lows on the charts and corn prices. I see around 420. I see around 425. The market has come in, $20 or so in the past week. What would a trade down there look like? Is it tantalizing to play around those lows if we want to get some long delta exposure? I'm just not seeing the trade here that lines up that makes it worth the buying power. So at a single leg of a short put spread around 420, 430, right? So you're bracketing those lows that we've had in recent months. You're looking at $640 worth of buying power to make a max profit of 75. Making a max profit of 75 against a max loss of 425, right? So just already you're in this 5-to-1 territory. And then, it's a 64% probability of profit. But weren't we just looking at an oil trade in a short put spread in oil, 77, 79 at 30 odd days to expiration, which was giving you a 2-to-1 risk to reward? So why would we take a lower probability of profit with a worse risk to reward? It's just not, it doesn't feel like a prudent use of capital, but there may be an opportunity there. So watching how this plays out, the way to do it then, if we're going to get any VIG out of this market, would have to be something like a long call spread, something that's a little out of the money. Ultimately, that's a headline. U.S. authorized the release of $6 billion in frozen Iranian funds, with Qatari and South Korean representatives said to be arranging the transfer within days. The ceasefire may be proceeding, Thomas. That's one of those little things that you want to. Iran wanted that. Iran's getting it. Wonder if it's going to show up on the pallets of cash.
Good faith, perhaps. Is oil reacting to this?
I see stocks bouncing a little bit here. 68.58 in the S&P 500. It's up, 8-9 points. Oil down there, 96.5. That's why I keep an eye on these headlines. That seems meaningful. Iran said Lebanon ceasefire. Trump got Netanyahu to stop bombing southern Lebanon. They said, we also want money. Trump said, here's your money. Let's talk. Good news. Gold prices reacting positively as well, only down, right? Seen them rally up about $15 the past 15 minutes. Silver prices have turned into positive territory. Notes and bonds starting to get a little bit off the lows there. You see how, 111.5 ticks, Thomas. Can't quite get through there to give us that bearish engulfing bar. So why being patient, watching the charts. So crude here is pulling back in a little bit on this headline. We're getting this move right now as we come to the end of Futures Power Hour. I suppose it's a good time as ever to just flip over to the dollar, where the dollar, if everything is moving according to plan, then you see a little bit of weakness here over the past 15 minutes in the US dollar, which dollar down has been part of the good news for stocks narrative because it means the liquidity reach is over. We did have some Canadian jobs data today that was, call it mixed. Unemployment rate 6.7%, which isn't fantastic, but it's been following the broader risk trends, just like the euro and the pound and the Aussie. Thomas, ultimately, I think the big deal here is whether or not there's any vol in the market to work with, which for the Aussie, you got a 64 IVR. So if you're one of those people who traded natural gas because of high vol, you can look to the currency market right now and find some meaningful things to trade around. Momentum is building here. If we wanted to be positive and optimistic about this, we could go to 56 days, 69 and 68.5. Short put spread risking 4 to make 1. That means we're not going to break back below the 50-day. The worst of the war is over. Given the headline that we just saw here, Thomas, I don't mind that at all. Let's fire off one thing here in the FX market before we head into the landing, which, as the producers are saying, we need to land the show. Thomas, we were talking about what's on the calendar next Sunday. You're going to get some Chinese, or Monday, you're going to get some Chinese trade data. There are a few speakers in the central bank world coming out. Otherwise, it's going to be all eyes on the ceasefire negotiations. Thomas, this is the end of Futures Power Hour for today and this week. Thanks for jumping on for Ilya. I'll be back later on for last call. See you in about an hour's time, folks, as we wind down the trading day and the trading week. Until then, up next, Dr. Jim Schultz with From Theory to Practice.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade. When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do. Welcome to a post-CPI, post-apocalyptic world. Man, I don't know what's going to happen next, but we are here together. So thank you guys for being a part of the show, being a part of the network, my show, all the shows. Man, we could not do what we do without you guys. So thank you guys so much. If you are watching over on the Tasty Live network, then I would actually bounce on over to YouTube right now in real time. You can communicate with your brethren who are also watching the show. Man, I have no idea if you can celebrate or commiserate, but again, we are all together, and that is the only thing that matters. If you have a question for me, today is a great day to drop it into the chat box, because I'm actually going to get to the questions a bit earlier today because there's just nothing going on. Like nothing at all is going on. The market is barely moving. You know, CPI was a nothing burger. I'm actually quite shocked that we did indeed make it through to the other side. But there's literally nothing going on. So I want to hear from you guys. We could get an autumn phone call midway through the show, but we will see where the wind blows us over the next 40 to 42 minutes. So Josh, bring us into the market. Let's see. Is there anything going on? Nah, man, there is absolutely nothing going on. EMI S&P is down 8. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product. If you're a brand new to trading, that is a very, very risky product, but it sure feels risk-free a lot of the time. NASDAQ up 8 on the day. You got the boomers down 260. The Russell 2000 futures index down 6. Man, you got bonds down 9. You got notes down 4.5. Got oil down $1.40. Got UB40 pretty much unched. You got the shifties. Gold is down 26. And then you've got silver. Where are my Hunt brothers at? Silver, silver unchanged. Man, everything is just unched, man. Everything is unched. Nothing is moving. The euro's up a little bit, but pretty much unched. You got the British pound what's the British pound doing? Where is the British pound at? Oh, British pound, pretty much unched. Euro, pretty much unched. Volatility up slightly today. Volatility futures up 32 cents. VIX is up 43 cents. So it's up to, man, the VIX is up 40 cents, up to 1990. It's been a minute. It's been a minute since we've said VIX up 40 cents to 1990. I mean, I feel like we've been living in the VIX, 24, 25, 26, 27 range for quite some time. If I bring up a chart here of the VIX, is that a daily deal? No, it's a 15-minute deal. Let's look at a daily chart. Let's go back we'll go back 6 months. That's fine. Yeah, so you can see right there, I mean, that is a volatility cluster. Right? I mean, there's a few characteristics about volatility. If you could allow me to wax poetic for, 1, 3, maybe 17 minutes. Volatility has some characteristics that we want to be well aware of as volatility traders. What do we know? Number one, we know that volatility has a tendency to mean revert. So we know that volatility, when it is high, it likes to come back down. That's essentially what we're banking on as premium sellers. When it's low, then it has a greater propensity or a greater tendency to want to expand back a little bit higher. Okay, we know that. We also know that volatility, it loves to live on the lower end of its range. Like it just naturally finds its home, in the 13, 14, 15, 16, 17 range. Those are all relatively low numbers. Obviously, 16 and 17 is a lot different than 12 or 13. But volatility likes to live on the lower end of the range, and it can stay there for a very, very, very long time. Okay. But another characteristic of volatility is it does have a tendency to cluster. And this is something, man, it's been a minute. We've done this, though. We've done this on the skinny on options abstract applications. We've done ARCH modeling, auto-regressive conditional heteroscedasticity. We've done GARCH modeling, generalized auto-regressive conditional heteroscedasticity. We've done that on that show. We've done those on that show. And that shows you kind of where these volatility clusters can come from. And so a lot of times you have these characteristics and these forces, if you will, that are somewhat contradictory. They're kind of pulling and pushing in different directions where it's like, all right, on the one hand, volatility wants to live on the lower end of the range. And it also can oftentimes contract back very quickly after an expansion. But then on the other hand, it also likes to cluster at times. It also kind of likes to, kind of group together, in these, day by day or week by week clusters, even on the higher end of its range, which is exactly what's happened. I mean, look at that magenta circle, man. That's, what is that, like a month worth? Maybe a month and a half worth of trading activity. I mean, here's 20 right here. If I just grab a horizontal line, that's 20, right? Look at all the data points, all the daily observations we have above 20. It's a pretty significant amount. And so again, you see this ARCH modeling actually happening in the marketplace, which, how can we use this practically? Sometimes it's hard. Sometimes it's hard to take these abstract theoretical applications and turn them into practical things that we can do. It's almost like we need someone to guide us from theory to practice. So here's something that we can do. What I've been waiting all week to say that. When volatility expands, which, oh, by the way, I talked to Autumn yesterday. So let me digress off of a tangent here. So I talked to Autumn yesterday when she got home, and she actually didn't believe that she was on air. She was like, were you really on air? I said, of course I was on air. What did you think I was doing? She's like, I thought your show got over at 2:45. And I'm like, no, my show is at 2:30 to 3:15. It's been this way for 3 years. Now, she was remembering, when I used to be 2 to 2:30, then 2 to 2:45. And so that's what she was remembering. But it's been 3, maybe 4 years now that we've been 2:30 to 3:15. And so it's very funny to me. We had that conversation and she was like, so I was on air. I was like, yeah. I was like, but I failed everybody because I forgot to crank up the volume. Like I had the speakerphone, I had this, but I didn't crank up the volume so they couldn't hear what you said. And she said, oh, well, that's good. That makes me feel better. But don't worry, she'll be calling again in the next couple of weeks. She'll forget. Don't worry about that. But anyway, like when you think about, ARCH modeling, you think about volatility clusters, how can we use this in a practical way? here is the most practical application of all of this. When volatility expands for the first time, like it's been living around, let's say 14, 15, 16, and then all of a sudden something happens, domestically, abroad, whatever. Volatility spikes to 20. Volatility spikes to 22. Sell your premium, like get your capital working for you, but don't go hog wild and just do everything. Don't go hog wild bazooka blast, like put all the capital out there. So now you're kind of at max position size and max capital allocation on the first increase in volatility. I think that is the most practical way to take this information and use it in a very actionable way for, what you're doing in your portfolios and what have you. And so anyway, seeing volatility down here, it's like, man, we were all kind of whining and crying about, that it's up too much today, it's down too much yesterday, it's this, that, and the other thing. But man, we are going to be in just full tears if we see volatility right back here pretty soon. And so this is obviously where it's headed, right? It's going to do one of these jobs. Well, it's actually probably going to do one of these jobs and then land right back down there. But either way, that kind of looks like a little Bart Simpson there on the show. But either way, a little Bart Simpson reference for you guys on a Friday from Theory to Practice. And so I was never a Simpsons guy. So if I could digress off of a digression, off of a tangent. When I was in college, I know the Simpsons, I don't know when they started. It was in the 90s, I think, right? Something like that. I was never really a Simpsons guy as a kid. For some reason, I didn't get into it. But then when I was in college, my roommate, Anthony, was the best man at my wedding, just a great guy. It's an awesome guy. He actually does baseball radio out in St. Louis. And so Anthony Stalter, he's the host of, I think, the Fast Lane there. It's like the primetime sports talk radio out there in St. Louis. And so great guy. And anyway, we were roommates for 4 years in college. He loved The Simpsons. And he always had it on, like in the apartment or whatever. And I would be walking by the TV and I would see it and I would always laugh. Like every time I saw it, I would laugh, but I never really got into it. I think maybe I missed an opportunity to have a lot of joy in my life. But nevertheless, I digress. So, all right, so there is... all right, let's get this thing buttoned up. This thing's off the rails. Josh, how much time we got left? 40 minutes? Wow, this is not good. All right, so there's your VIX commentary, there's your market commentary, there's your Simpsons commentary. It's all there. So there's nothing going on in the portfolio. There's literally nothing going on. There's nothing for me to do. We could talk about things. We could just, kind of belabor different points here and there and, every which way from Sunday. But it's all the same stuff you guys have seen. The only things I want to comment on are, number one, look at Dell down $1. That's what I'm saying. Look at GDX. So this was the ratio spread that we did yesterday. And the ratio spread, when we analyzed this guy just yesterday, this is a great example of why it's important to have something economically significant in terms of credit collected on entry, because that just puts you in a more favorable position to make easier decisions later on down the road. Case in point, GDX today is rallying. I'm already up almost 60 cents on the trade. Now, I'm not going to take it off yet, but again, imagine if I put this guy on for 35 or 40 cents on order entry. I get a day like today, now it's marking at 30 cents. I'm kind of like, all right, I can already kind of feel the indecisiveness. I can already kind of feel, all right, this is actually going to be a difficult decision later on. If this thing keeps rallying, am I going to take it off for like an 18-cent winner? Am I going to take this thing off for like a 25-cent winner? I mean, you've got to factor in the transaction costs. You've got to factor in the commissions. You've got to factor in, all of the, the mental capital that you had to allocate towards this position. And so all of those things, it's like, man, I need something economically significant. Like I need a little something to just kind of get me excited to be in the trade in the first place. And so for GDX, the fact that we collected $3 on entry is pretty good, because now, we're up 55, 60 cents today. We get another day like this on Monday, another day like this on Tuesday, and all of a sudden we're going to be up $1.50. We're going to be up $1.75 on the trade. And now we have something economically significant. It's easier to make the decision to close the trade early should that seem like the move that we want to make. Whereas if we didn't collect enough on entry, that would be much, much harder to do, because it just wouldn't have the oomph behind it. It just wouldn't have that. It's just got to have that bite. Like that tuna fish and applesauce, it's got a bite. It's got a very memorable bite. Like we need something that's memorable, kind of like a little tuna and applesauce. And so there you go. There's some GDX commentary for you. And then the other thing is just our GLD butterfly. So, gold is rallying back a little bit now. When I was getting ready for the show earlier, this thing was only marking for like 70 or 80 cents, but that was a couple hours ago. And so I was pretty happy with the fact that, I could go ahead and close it now. We only lose 80 cents on the trade. I think that's the move. Like, I think that's what I want to do here, because, we've only got a little over an hour to go. This is not a cash settle product. So if I let this guy go, I'm going to be assigned on this long call, which again, it's not that big of a deal. It's not the end of the world. We'll be long 100 shares of gold going into Monday. Not the biggest deal in the world, unless of course we get a huge move in gold. You've got the weekend risk, and I think Trump is meeting, and people, it's all made up. It's all 100% made up. And so I don't really. Well, I'm trying not to put as much stock in this as I have over the last couple of weeks, but I'm kind of like, man, I can't keep up. Like it's too much to keep up with. It's all made up. It's all make believe. And so I'm not going to really put any stock in what's happening this weekend or not happening this weekend, because it's all going to change 17 times before the bell rings on Monday morning anyway. But either way, I don't necessarily want to be long 100 shares of gold or GLD, but if I was, it's only a couple clicks of the mouse on Monday and it's all cleaned up. Like it's not that big of a deal. We've even unwound some assignments live on the show when they've happened to us, because I know that can be a very jarring experience if you've never actually done that. Like if that's never actually happened to you before, that can be kind of an eye-opening deal that you have to kind of, navigate through. And the first couple times you do it, it's kind of like, man, I'm not really sure what's going on here. And so I'd like to avoid that this time, but don't worry. If you're waiting to see an assignment live on the show, it will find me. I promise you, I will not have to go out of my way. It will absolutely find us at some point in the next 3 to 17 months. So just stay tuned, and we'll see some live unwinds of assignments on the program. And so for GLD, I kind of think let's just close it, and we'll lose our 80 cents. But man, I'm really glad we didn't do SPX, because we almost did SPX for CPI. Like we almost did SPX like we normally would for a binary event, but I just had this sneaking suspicion that I'm like, I don't know, man. I have a feeling we're not gonna get this one right, simply because we haven't gotten any of the last 10 right. And so if that momentum were to continue, let's try to pare down the losses a little bit. Let's be a little more mindful of how much we're putting at risk on a binary event play here. And so that's what we did with GLD, and it worked out okay. And so for GLD, we're going to lose 80 cents, 85 cents, whatever. And that's okay. Let's close this guy down. And I'm just going to close the whole thing. I mean, you could make the case that I should just leave the call spread on, leave the short call spread on, but I'm just going to close the whole thing. Because it is zero commissions to close on Tasty Trade anyway, so it doesn't really matter from a closing commission standpoint. Like, yeah, we're going to pay a couple chippies in fees, I guess. A little extra in fees. I mean, you can see it right down there. The commissions are nothing. The fees are, 52 cents. I guess if we only closed 1 or 2 legs, it would only be 26 cents instead of 52 cents. But these are like actual cents. These are not option cents that are actually actual dollars. These are actual cents that are actual cents. And so it's like, it's not really that big of a deal. But if you're a stickler about it, you're like, hey, I'm just going to close the long call, or I'm just going to close the long call spread, I don't have a problem with that necessarily. Just from a cleanliness standpoint, it would kind of irk me and bug me on the show if I have like short calls just dangling out there, because I don't know if you know this or if you've seen this in the last, I don't know, any day in the last 3.5 weeks. But every once in a while, there's a tweet that comes out that changes everything. Like there was a little tweet coming out from the administration that's like, all right, some things are moving all of a sudden, and everything totally changes course. And so I don't really want to have like quite literally only risk on with nothing to gain for it. That doesn't really make a lot of sense to me. So let's go ahead and let's try and close this guy down, and we'll see what happens. All right, so we can't get filled at $1.18. Let's try. I'm not going to give up too much on this though. Like if they're going to make me give up a bunch on this, I'm not going to do that either. But so the mid price is $1.12. Let's try $1.16. Okay, hold on. Let's do some more investigating, and then I want to get to you guys. I see you guys, man. Look at you guys in the house, man. I appreciate you guys. Thank you there, Josh. I see the hand delivered Amazon primed surprise and delight from my man Joel James. And so I'm gonna get to that here in just a second. But let me look at this. If I go to, yeah, okay, so it's marking at $1.12, and the long call is only worth $1.12. That makes sense. I'm expecting the rest of all this to cancel out, essentially. Well, actually, no, it's not essentially. It's very non-essentially, because I am going to have to. I got to buy back. Yeah, actually, you know what? Wait a second. Forget the feng shui. It's Friday. Forget the feng shui. I'm just closing the long call spread. I'm going to leave the short call spread on. Man, I'm going to risk it for the biscuit. I'm not even getting the biscuit. We're literally just risking it here. Let's go ahead and just close the long call spread. Hold on. Let me close this guy down. And let's go in here, because I'm looking at it and I'm like, I don't know, man. Maybe we just close the long call spread. So if I close it, I close the, I want to close this guy. It looks like the mid price on the long call spread is 95 cents. And so, I think that should be fine. So we'll end up losing a little bit over $1 on the trade. Let's see if we can do that. All right, so we got filled at 95 cents. All right, so now we still have on our short call spread, which you can see right here is literally selling for nothing. It doesn't really make a lot of sense to me. In fact, it makes no sense to me to keep this on. So I'm going to close this guy too, because I'm thinking about it. And I just remember that, the after hours market also factors in when it comes to assignments. So this is something that a lot of traders don't know. They think that it's the 4 o'clock close that determines the assignments. It's not. It's the after hours market too. Now, I'm actually not sure if it's the full after hours market or if it's only like a couple of hours or an hour into the after hours market. But I don't know if you guys know this either. But Trump has a tendency to come out on Friday nights at about 4:30, pretty much like clockwork, and drop some crazy stuff on all of us. And like none of us can do anything about it because the futures are closed or they're about to be closed. They're oftentimes already closed. The regular trading is closed. So now, man, we're closing this call spread. I should have done all this in one fell swoop, but I didn't. And so we have to go back in and close this guy too. A 1 penny credit. I don't think they're going to give us a penny? Nah, they rejected it. Well, look at that. Rejected. Why is this getting rejected? A vertical debit credit check. Okay. All right. Let's try it again, I guess. I don't know. It's marking at a penny. This is so interesting. Do I have to pay a little bit for it? I guess it would make sense. Let me think. This is a short call spread. Yeah, it would make sense I'd have to buy it back. It doesn't really make... So this is probably why we got the error. Let's go in with a debit. I don't mind paying a penny for this. That's fine. But let's go in with a 1 penny. A 1 penny net debit. So hold on. Let me check all this. 1 penny. Because now I'm all discombobulated. Net debit, right? We are doing GLD, right? It is April 10th. Right? We're just checking all the boxes here. Right? We've got a stock at about 430, right? This is the gold index. And the day in force is today. Okay, beautiful. Everything checks out. Let's go ahead and let's pay a penny debit. I don't know. All right. So we didn't get it kicked back to us. I guess that's good. That's progress. Let's pay 2 pennies. I'm not letting Trump get me. Nah, there's no way. All right. So we got filled for 2 pennies. Okay. So there you go. That's fine. Whatever. So now we're out of gold. I feel much better about that. That's a regular trade. I'm not going to do anything with that, of course. But that looks fine. All right. Let's get to you guys, man. I wanted to get to you guys a lot sooner, but the wind blew us in a different direction. And so let's go ahead. Where are we at? I see you guys, man. First of all, I see you guys in the house, man. Look at Superstar is here. 0703 is here. Ranch is here. Bread Mun is here. Man, look at PB Krista is here. Man, I appreciate you guys. PB Krista, you've got a really good question. I'm going to get to you in a second. Let me get to Joel James first. Thank you, Josh, for bringing this to my attention. We got a little surprise and delight from Joel James. Joel James says, hold on. Joel James says, does a stock making a hard move change where you put your strikes? Like Avgo or CrowdStrike both have run hard, one up and one down. Do you think about strikes differently in these scenarios? Do you go at the money? Great question. So if a stock is running hard in one direction or the other, does it change my strike selection? Not necessarily the actual running of the stock itself, but that's going to show up in the implied volatility. So that's going to show up in the IV. That's going to show up in the IV rank. That's going to show up in the IV percentile if you prefer to use that. It's very similar to IV rank. There are some subtle, maybe not super insignificant differences between the two, but they give you some idea of where volatility sits in the distribution right now. Some people like to use one, some people like to use the other. I don't know that it's going to matter too much in the end, but people that are very staunchly in one camp, they think it absolutely matters. So, hey man, you do you, boo. Like that's totally fine. IVR, IVP, 100% up to you. But when it comes to the running of the actual stock, I just let the IV or the IVR or the IVP speak to me. So when that speaks to me and the IV is high or the IVR is high, then that's going to tell me that there's an opportunity here to sell, volatility. When volatility is super high, so I'm going to take your specific question and just zoom out a little bit because this will help with, Avgo, CrowdStrike. It'll help with, any other scenario that's going to be very similar to this one. When volatility is high, you essentially have to make a decision. Because volatility is high, option premiums have increased, right? They're going to follow each other directly, not one for one, but they're going to move in the same direction because of the option pricing models, right? Volatility goes up, option prices go up. Volatility goes down, option prices go down. So when volatility is high in an individual stock or in the overall market, you have to decide, do you want to widen out your strikes and collect about the same credit that you would normally collect? So this means instead of doing, like, just take a short put, for example, instead of doing a 30 delta short put, maybe you're doing 25 or 22 delta short puts now, and you're collecting similar credits to what you're used to collecting in that stock, in that index, fill in the blank, whatever. Or do you want to stay at the same delta and now collect a lot more? So you can clearly see that's a big difference, right? That can be a very, very significant, decision to make in terms of, do I go for the higher probability and collect the same amount of credit, or do I kind of keep my probabilities the same, keep my strike selection the same, and increase, the credit collected? For me personally, I probably tend to err on the side of keeping the strikes the same and collecting a little bit more. But there are traders out there that might be more risk averse, or even myself, if I'm just feeling a bit more risk averse and I really want to lean into, higher probabilities, moving the strikes out and collecting the same credit, but increasing your probability, that's a favorable outcome too. And so, Joel, just kind of zooming out from your specific question and talking more about kind of the gimmies and gotchas between, do I want higher probability or do I want higher credit collected? When volatility is increased, I don't really think there's a right and wrong answer here. I don't really think it's a better or worse scenario. I think it's going to vary quite a bit from one trader to the next. And even for the same trader in different seasons or at different times, or maybe relative to what the rest of your portfolio looks like, you might prefer to be higher probability on this one trade or this one position, so you push the strikes way out. Or you might be thinking, man, I don't mind being closer to the money on this because, I like the stock, I don't mind owning it, like things like that. That also factors in, of course. And so all of those things, I think, factor into that question. It's a very good question. And hopefully I gave you a couple of things to chew on, even though I didn't necessarily address Avgo or CrowdStrike specifically. And so, but very, very good question there, my friend. And so where was, hold on a second, where was my man? Because I found, let me see if I can find him again. Let me see, where was, is Krista maybe? No, not Krista. Hold on. We'll get it. I think we'll get it. Yeah, PB Krista. What's going on there, PB Krista? I appreciate you, my friend. Dr. J, you mentioned that you don't like selling call spreads and prefer put spreads. Can you explain why? Well, did I say that? It sounds like something I might have said. But so a couple of things. So I don't like selling calls. I much prefer to sell puts for the simple reason that, when it comes to positive drift and it comes to, just playing the market higher over time, selling a put is a much easier trade, in my humble opinion, because if it doesn't work, you can inventory the stock. It's always an option. Some people may not like that option, but I think it's always an option that's on the table. You can quickly discard it if you see fit, but I think it's always something you can consider. Like, hey, I'm just going to hold the stock, trade this thing for the long term, sell calls against it or don't. Right. And, collect my dividends or don't, if it pays dividends or not. Of course, that's not necessarily your decision. But these are all things that you can consider. And so that's why I like selling puts as opposed to selling calls. Now, if I am going to sell a call, I'll get to the spread thing here in a second. If I am going to sell a call, then I much prefer to sell calls in the indexes as opposed to individual stocks. Now, if you've seen the show, you've seen me cheat death a couple of times, selling calls in Amazon, selling calls in Disney. I remember these. We've done these in just the last 6 to 12 months or whatever. And I think they worked out okay. But when you're selling calls in individual stocks, it's kind of like a tier system, in my opinion. If I'm going to sell a call, indexes are kind of, I don't love it. I don't love it basically as a blanket statement. But if I'm going to do it, because no strategy should be off limits, in my opinion. If I'm going to do it, I'm looking at the indexes first because the rides are going to be smoother. The outlier risks are going to be less frequent just because you have, a basket of 500 stocks, a basket of 2,000 stocks, whatever. The chances that you get hurt on a runaway train in a given day are much lower than an individual stock. So selling calls, I'll be looking at indexes first. The second tier is going to be, kind of like your blue chip your bellwether companies, so like General Electric or like IBM or like McDonald's, companies like that, right? I'm not necessarily, going to be super tickled pink about selling calls on like AMD or Nvidia or whatever, these companies that can move, significantly, one day to the next, like 10, 20, 30, 40%. Selling calls in Tesla, let's say. I'll still do those from time to time, but it's going to be my least favorite of the bunch. That's kind of how I think about selling calls, just generally as kind of an overall strategy. But what about the spread? So this is a very good question because the spreads are completely different. Selling puts is more favorable than selling calls because not only do you have the positive drift, you can inventory it, all that kind of stuff. You also have the volatility skew on the put side of the market that you typically don't have on the call side of the market when it comes to just standard equities, especially in the indexes. Like, yes, if you're talking about oil and you're talking about AMD and whatever, you might have some upside skew, so that would not apply to those situations, of course. But for overall indexes, the put skew in the markets is going to make puts sell pretty expensive relative to an equidistant call. In fact, here, I'll even show you there, PB. This is such a good question, and I haven't talked about this in a while. Let's, like if I go to SPY, well, let's go to IWM just to show something that would be a bit more like SPY. I can't sell a put in SPY anyway, so it's good for illustration, but this is something I could actually do, right? So you got IWM at 261. So let's say I went down $10 to the 251. Right, I can sell that guy for 388. So I can sell that guy for about 390, going 10 points out of the money on the put side. If I do the same thing on the call side, if I go to the 270, the 271, you can see that's only selling for 330. So again, I'm going equidistant. You could go delta for delta too. I typically go equidistant, just a little simpler to apply. You can see you're getting lower premium on the call side. So just from a purely, forget about positive drift and forget about, perma bulls and all that kind of stuff, all that rigmarole. Just from a purely option pricing standpoint alone, the puts are going to be a more favorable trade than the calls. But when you spread it off, PB, the opposite happens because now you're bringing in the long options that muddy the waters quite a bit. So if I were to go into IWM and sell a put spread, like here, I'll even show you. We'll just go with a straight at the money spread for both of these guys. Well, I'll go like one strike out of the money to make it really clean. If I sell a 260 put and I buy a 255 put, that would be $1.63. Not a bad trade. It's okay. It's definitely, worth considering. But look at what happens if I do the same thing on the call side. So a 260, 255 short put spread is $1.64. What if I do the same thing on the call side? Let me go ahead and let me clear that away. Now, let's say I do a 263 to make it as equal as I can, 268. I'm collecting 248. I'm getting like half the width of the strikes with a probability of profit that's greater than 58%. Now, you might be looking at that thinking, Jim, we beat the system. Don't tell anybody about this. Like, this can be our little secret. Well, yeah, the pricing is really favorable, but again, you're battling against the positive drift. You are battling against kind of the natural forces of the market to want to go higher. And so you may look at that and say, that's fine. I love the pricing here. I'm getting basically 50-50 pricing on a greater than 50-50 shot. Why doesn't everyone do this? Well, this is why I kind of was, I stopped in my tracks a bit by your question, because I generally do like call spreads more than put spreads for this very reason. But puts and calls are different for hopefully the reasons that we outlined earlier and are somewhat clear to you. So thank you for that question though, PB. That was some really, really good stuff. And man, let's see, where are we at? Let's go all the way to the beginning, man. I'll tell you what, for a day when I was going to spend a lot more time on the questions, we sure have not got to too many questions, and we've only got 11 minutes left. That's crazy stuff. And so Ordenu's in the house. What's going on there, Ordenu? I appreciate you, my friend. Thank you, Mari. Thank you very much for being here. The 45-minute show that takes away the fear of naked positions. Man, I don't know if it does that, but hopefully it gets your mind off of them maybe for a couple of minutes, and then you kind of get back to the reality check that is, oh yeah, I've still got that, that deep in the money short put or short call or whatever it might be. And so, but thank you for being here there, Org Daniel. I appreciate you. Daniel Perkins in the house. I'm looking forward to some B- humor and the Dr. Jim power 3/4 of an hour on this fantastic Friday, man. Thank you for being here. It is indeed a fantastic Friday. It is a good day to be alive for sure. So thank you there, Daniel Perkins. A. Will's in the house. What's going on there, A. Wills? Dr. Jim, it feels hard to put on positions now that volatility has come down. I know. We're all whining and crying now. It's so funny. We are whining and crying from the big moves that went against us, last week and the week before, and yesterday. And now we're all going to be whining and crying because the VIX is 18, right? And so it's just funny that we're just never satisfied. But A. Will says, I'm long-term bullish, but don't want to sell puts into this rally. Any tips for staying patient in this market? Yeah, I mean, you could take first of all, you could do nothing, right? Go hang out with Mrs. A. Wills, right? Go take Mrs. A. Wills to a nice restaurant, buy her some dinner, take her out for a really nice night. I know this really, really quaint, quiet, cute spot, little place called Bonefish, right? Take out Mrs. A. Wills, and just the market will be here, man. It'll be here tomorrow. Well, maybe not tomorrow, but it'll be here next week. It'll be here whenever. Don't worry about it. But if you do feel like you need to do something, buy some call spreads, man. Like, take some shots. Hey, earnings are right around the corner. And so if you want to do some small things, take some shots with your butterflies, your verticals, whatever. Like, earnings are a couple of weeks away. In fact, when do the heavy hitters start? The heavy hitters are probably a couple of weeks, but do we have anybody exciting next week? Let me take Tasty to follow and sort by watch list. Wait, is Netflix? Netflix is next week. Look at that. So Netflix is next week. Citigroup is next week. Goldman Sachs is Monday? A Monday earnings call for Goldman Sachs? Man, that's really, it can't be before the bell. It's got to be after the bell. Wow. So there you go, A. Wills. You just got to take out, enjoy some time with Mrs. A. Wills this weekend. And then Monday, you got Goldman Sachs earnings and you're back, baby. You're 100% back. So Sam L's in the house. What's going on there, Sam L? Doc, just want to say we appreciate all the value that you bring. At home, it might be underappreciated. Miss August. Yeah, her name's Autumn, but she gets August, she gets April. She's gotten some Adrians back in the day and doesn't realize she's living with a whole edge. Yeah, I don't know that she sees it that way. In fact, I'm pretty sure she doesn't. But I appreciate you, my friend, for being here and being a part of it. And thank you there, Samuel. Samuel goes on to say, Doc, new segment unlocked. Wife calls during the show. Real-time risk management from home. Already waiting for the next episode. Me too. Except next time I'm cranking the volume. So that was the mistake that I made. But I caved. I buckled under pressure, man. Like, it was all happening. It was all happening so fast. Like, I felt like, the opening scenes to Any Given Sunday when Willie Beeman gets in the game. Like, that's exactly what it felt like. And so I wasn't ready to crank up the volume on the speakerphone. But next time we'll get them. And so SC Golfer's in the house. What's going on there, SC Golfer? Dr. Jim, have a great weekend. See you in a week. Man, I appreciate you. That's right. You're going on a vacation. Going on a cruise in Mexico. You're in charge of the markets. Be kind. I'll do what I can, man. I will do what I can. We will try to asymptotically keep them above zero, but they may todically get there by the time you get back. And so we'll do what we can. But I'm only one man with an intern. And so I appreciate you. Grumpy Mike is here. What's going on there, Grumpy Mike? CRM and now are definitely different. They could be replaced, but again, this is a previous thing. And so I'm going to skip over you, the Grumpy Mike, but I appreciate you. I know that you know that I do. And so Sergio is here. What's going on there, my friend? Samuel, Doc tried ordering a banana natty at a cafe in Paris. There you go. Waiter is still processing the order. He's processing a lot of things, I think. You go with a banana natty order and then explain it to him in Paris? Man, they're not ready for that type of palate. And so Brian is in the house. What's up there, Brian Rackin? Appreciate you. There we go. Yeah. Samuel, Miss Autumn made a call initiating respectfully second guest protocol. Yes, that's correct. I still can't believe she did it. And I'm even more surprised that we actually answered. And so, yes, Ashfin is in the house. What's going on there, Ashfin? I'm excited for after the market. It's going to be awesome. I'm doing a little deal for Ashfin and his trading group. And so it's going to be fun. And I don't have anything prepared, guys. So you guys are going to have to carry it. You guys are going to have to, carry the show. And we'll just chat and just shoot the breeze about the markets. And so Joel James is here. There's Joel James. There's with the surprise and delight there. Thank you there. Thank you again there, Joel James and Josh. Let's see. AJ's is in the house. Good afternoon, Dr. Jim. What's going on there, AJ's? I appreciate you, my friend. Joel James said, did you put the scooter away? I did. I went out and it was very clear. It was very obvious. Like, she didn't even have to call. Like, I would have figured that out on my own. Like a 40 Delta, I would have figured that out on my own. But it was very obvious. Like, it was very clear, like, what needed to be done. And so I just executed, man. Like, that's it. It's just all about execution, right? You just get it done, no excuses, and you put the scooter in the garage. So there you go. RML is in the house. Dr. J, hope your trades are going well. Yeah, they're doing okay. They're doing about how they do. And so, Finance Account is in the house. What's up there, Finance Account? Just seeking insights on how you would typically manage this. All right, let's go. I have a Broadcom 3, that's Avgo, I think, right? Yeah, 340, 380 strangle. How would you manage this trade if you had it on right now? Now that the call side is getting tested. Let's take a look at it. Avgo. Oh, yeah, I wouldn't touch it. I wouldn't touch it. I mean, it's not tested yet, right? And I'm pretty technical about this. I'm kind of a stickler about this. I understand that it's only a matter of minutes, seconds, and this thing's gonna be tested. Maybe, right? Personally, I would not do anything. Now, I understand that some of my own brethren on the network, like your Pony Babistas, right, and your Nick Batistas. I don't have a fun little off name for him. I'll have to think about what that should be. But your Batista families might be a little bit more aggressive with their adjustments, and they might be a little bit more active with kind of neutralizing the deltas and balancing things out, whatever. I think that's totally fine. And my own lived experience is kind of like there's a lot of value in doing nothing. There's a lot of value in just like saying, hey, I already have a really good strategy on that's already doing all the heavy lifting for me. Like I've already got my negative Vega exposure. I've already got my positive theta exposure. I don't know that I necessarily need to go in and usurp the process and kind of override the natural elements that are already working in my favor. That's how I see it, at least. And so right now, finance account, I would do nothing. I would do absolutely nothing. And, if it goes through 380 come time Monday, then maybe you make an adjustment. But right now, I wouldn't do anything. And so hopefully that helps. Too late, Jake in the house. From theory to practice, the 70s muscle car of shows. Man, my man. Man, Dr. J got 4 on the floor with overhead cams. Overhead cams. Yeah, well, I couldn't do I've heard that before. I think you're talking about an exercise, I think, right? I'm thinking of a Turkish get-up, which that's a Turkish get-down in every sense of the word. Whenever I don't even know that I've tried one. I've tried one in my mind, and that's where I was like, yeah, we're going to shut this guy down. But an overhead cam, man. What is that exactly, Too Late, Jake? If you've got a link or something, drop it in the chat. I'll check it after the show. And I'm curious what that is. It's ringing a bell, but it's a pretty faint bell in the distance. Brian Dowdy, hello, Dr. J. Watching my 310 UNH short put just stew in the bathtub of filth. Been one of the longest trades of my life. Yeah, where's that at now? Is it back down? 304. Nah, you're right there, man. I know. But think of all, don't think of how hard it's been, right? Think of all the friends you've made along the way. Right? Think of all the memories that you've created. Right? It's like we only get one life. We only get one kind of trip around the is that what that one trip around the sun? That doesn't make any sense. We get a lot of trips around the sun. Yeah, I gotta polish that one up. But anyway, you only get one shot at this guy, Eminem style. And so you've made a lot of memories. And so that's what it's all about. And so Miko's in the house. What's going on there, Miko's? Dr. Jim, it's a beautiful day, and Masters Friday. Could life be any better? Yeah, I'm not a golf guy. You probably could have figured that out on your own. But yeah, I know everybody's excited. I don't know what happened yesterday. I don't know who's in the lead or who's behind or whatever. And so, yeah, but enjoy the day there, Mikos, and have a great weekend there, my friend. Joe YQ in the house. What's up there, Joe YQ? Appreciate you, my friend. Griffin Jones, I got out of my 0 DTE CL short, 97 put with 2 minutes left. Collected 35 cents for 48 hours of the trade being on. That's how you do it, man. Like, that's how you know that you are a real trader. When you take an infinite amount of risk, literally the infinity sign for 35 cents. Like, that's how you do it, Griffin Jones. Nice job. Emmett Morrison, best time of the day is Dr. Jim time. Here for the trading lessons, but more importantly, the B- humor. Yeah, I think we're more like C+ today, but we're right there in the range. Like, no surprises to the upside, no surprises to the downside. It's right there in the expected move. And so there you go. Emmett Morrison getting in there for the algo. Man, there it is. I appreciate you guys so much. Samuel, have a great weekend, Doc. Enjoy some well-deserved time with the family. Appreciate everything that you do. You too, my friend. Thank you for being here and being a part of the core position, because it really is only you guys that we can do what we do. And I'm blown away. I'm still blown away that on a daily basis, 500 of you guys or however many of you guys show up to watch my show and all the other shows on the network. It's really some incredible stuff. And so let's see. Brian Dowdy says, good job, Griffin. I echo that 100%. Ash Finn says, hit that thumbs up, boys. That's correct. Right? Hit the thumbs up. That helps. But you know what helps even more? If you're subscribed, unsubscribe and then resubscribe on my show, because then I get that counted towards my little tally at the end of the month and the quarter and stuff like that. I don't know if that's true, but it sounds like it should be true. So go for it. Ordenu, Doc, with the MES M26 position, I applied the DNS and it worked out beautifully. I know, man. Like, you don't have to tell me. Like, I know. And by I know, I mean, it's like 60-40 that it's going to work out okay in the end. But the DNS, I mean, it's the default setting for a reason. Like, it's the default setting for a reason. And that's really awesome stuff, man. I'm really glad to hear that. And let's see. My long stock and pawn, CrowdStrike and Costco are getting torched today. Yeah, that's how it goes, though, man. Right? I mean, you've been around the block. Griffin Jones, right? You've been around the sun more than once, right? And so, yeah, you know what to do. It's do nothing, right? Just sit tight, sell some calls or don't. Hold a long stock or just, or maybe kind of whittle away some premium on that guy, but you're in a good spot. And so let's see. N1C is in the house. What's up there, N1C? Grumpy Mike says, I'm long some pawn. I may have to pawn everything. Ooh, that doesn't sound good. And so Ashford says, no, last summer it was a different time. What are we talking about? That was from way before. I can't remember. But Pander is in the house. What's going on there, Pander? I appreciate you. Dr. J, ideas on adjusting a short call spread. 6,800 short, 6,850 long, May 15th. Yes. Pander, thank you for joining the show. I appreciate you very much. This is a fairly easy one. I wouldn't do anything. Because it's defined risk and it's a vertical spread, any adjustments you might make are going to make it potentially, you're going to either add risk or turn it into something that's maybe potentially confusing to follow. And you're not even really going to be sure, what's going on, what you need to have happen, what you want to have happen. So with vertical spreads, they're really all defined risk. You want to make sure that you're sized small enough on entry to where if it doesn't work out, it doesn't work out. You don't need to go in and be super creative or innovative with different adjustments along the way that can oftentimes lead to some very unexpected results that are usually not so favorable. So as long as you're small enough there, Pander, I wouldn't do anything. If you're not small enough, then maybe you close the trade and kind of rethink your position sizing strategy. So that's how I would handle it. But man, I can't believe it's over. I can't believe it's over. It's unbelievable how fast it goes. But I got to go, guys. I got to run. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys on Monday.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade.
Hello. Well, Tim Knight here. We're going to look at charts. It's the end of a crazy week. I guess the past 2 weeks could be characterized as the recovery weeks. Last week was kind of the easy lift, which was things were so deeply oversold that any buyers out there had the power to lift things through all that slippery slope it had cut through. And then this week, particularly after Tuesday, of course, was capitulation rally week. And it kind of in two halves. So we bounced about half last week and we bounced the second half this week. And we seem kind of tired at this point. I mean, at this very moment, the ES, the RTY, the YM, gold, all down just a little bit, nothing dramatic. You're just tired. All the easy part has been done, and the supposition now is that things are gonna be fine. The weird and kind of exciting part for me personally has been both yesterday and today have been good, profitable days, even though the market, broadly speaking, just keeps kind of tromping higher, which tells me these are good picks. These are good shorts. And it also tells me if the market re-weakens, and it is completely dependent on everything going gloriously well for it not to re-weaken, then they'll fall that much faster. So, a lot of emotional ups and downs this week. Tuesday evening / Wednesday morning were hard psychologically for any bear out there, but the past 2 days have been very curative, even though the market is still sky high, and we're either just below lifetime highs or we're at lifetime highs. Dow Transport lifetime high, Semiconductor's lifetime high. It's like none of this ever happened. I've kind of mentioned in the past, I would rather sell into optimism and strength and dewy-eyed glory than I would everything falling to pieces. Because when everything falls to pieces, they tend to do something about it, which they did. Having said all of that, I've got some charts ready for you, and let's bang through them and wrap this week up. We're going to start with the diamonds here, which kind of neatly illustrates the long-term, short-term. The long-term ain't nothing changed. The uptrend is broken. We've got a topping pattern, and we had a nice big tumble. The shorter term is that we had a furious multi-thousand on the Dow point recovery, up like so. And so there's kind of two lines in the sand now. This blue one, to me, defines the top, and should, for whatever reason, things just keep sailing higher, the kind of final line of the sand is this gap right up here. So the diamond's still pretty nice and neat in that respect. The NQ futures have pierced deeply, deeply into enemy territory here. We're way into the pattern, about 60% into the pattern. A kind of important level right here I've marked like so, which was the prior lower high. So we had lifetime high, lower high, and then barely lower high right here. I think this is the as of right now, eight days in a row. I think if we end now, if we closed right this second, it would be 8 days in a row of tech stocks climbing. And that's pretty extraordinary. It is just solid green. Look at this. Green, 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 just all the way up. Relentless. Even though certain sectors are really weak. So that's kind of amazing. Now, for myself, on the ETF side, I believe I only have positions in 2 ETFs, which are practically the same thing. I'm short EEM, the emerging markets. I'm short EFA. I want to get outside the US on these guys. And so I'm short those fellows. Let's just look at them real quick. Here's EEM, and there's a nice price gap right there. And there are these huge gaps, of course, this week between Tuesday and Wednesday. That really messed up a lot of charts and a lot of indicators and so forth. Everything was just pretty as a picture as of Tuesday night. And then this, the white flag being hoisted, changed everything. So things are muddier than they were, they're uglier than they were, but there's still opportunities out there. So short EEM, and also short, as I said, EFA, which is equities outside North America. And a couple of clean gaps on this one. We've got one here, and then a higher one like so. And this long wedge, of course, was broken, and we are in the neighborhood of the underbelly of that wedge, that is to say, resistance. So there's still pretty charts out there. And like I say, I apply kind of classic Edwards and McGee charting. I'm all about simple, simple, simple. Patterns, trend lines, support, resistance. If I'm feeling saucy, maybe a Fibonacci here and there. Simple stuff. Things I could explain to a second grader. And they seem to be working. So that's good. Over in precious metals, and I did a post earlier today about this. This world we're in right now, all assets move the same direction, except for crude oil. Crude oil is the odd man out. So you don't have to overthink this. Like, if war break out, then gold is a safe haven and da-da-da-da. No. Gold, silver, tech stocks, industrial stocks, kitty litter, two-ply toilet paper, they'll all move the same direction, up or down. And crude oil's over there in the corner doing his own thing. Usually is the inverse of whatever everything else is doing. And so if you look over in precious metals land, you don't have to think about safe haven, et cetera. No, Gold might as well be Nvidia. Silver might as well be Qualcomm. They're all one and the same. So silver is just below this price gap, and it's looking pretty tired too. And gold, GLD, is also just below a price gap. And I usually don't monkey around with precious metals on the bear side, but I did today. I've gone ahead and bought some July puts, $445, I think was the strike. July puts against GLD based upon this price gap, because it's a pretty appealing chart. Miners also, I think, are just as prone to weakness. Here's GDX, which itself has two price gaps, here and here. And yeah, so long as we stay beneath this one, this looks like a pretty good risk-reward ratio on the bearish trade. And even XME, which is a different flavor, it's kind of precious, but also other stuff, other more base metals. XME is also bearish looking, broken trend line some weeks ago, and we're beneath this resistance level. And I won't show it here, well, I can't in this, but you've seen before the ratio chart I've done of GDX and XME, which shows over the long term that we're definitely in the market now where XME will vastly underperform GDX. So if metals fall, XME should fall worse than GDX does. The one, as cheerful as I am about yesterday and today, the one kind of frustrating point for me has been Bitcoin. Luckily, haven't gotten burned by it. I've been able to, sometimes I get afraid and I close a position, I'm furious with myself. It hasn't happened this week. I've been very pleased with myself because I've gotten out just in the nick of time, and I've been really kind of avoiding Bitcoin, with one exception, which I'll mention in a sec. But it's been quite strong. The Bitcoin futures now are up not quite $1,000 a run, in the mid 70,000 still. I mean, we're still over $50,000 below where we peaked last October, I think it was. But I'm not interested in where we were last October. I'm interested in like falling and getting into the mid 60s and even below. But if we look at IBIT, we can see here there are, as with a lot of other items, two gaps to actually two price levels to watch. This isn't a gap, but this is the first one I'm watching. The only position I have is I have some puts against this IBIT, September puts, trying to give it plenty of time. If we cross above this level, throw my hands up, I'm out. So I'll have 0 positions in crypto. Right now I've just got that one. And I'll wait to see how close we can get to this much more important price level, this gap right here. But in terms of individual stocks, because there's not a lot of ETFs I want to point to as great opportunities. They've been kind of frustrating. They are, after what happened on Tuesday night, they're kind of in a no man's land. They're neither clearly bullish nor clearly bearish. They're just kind of a big fat mess. So I'm really focused more on individual stuff. And I've actually, for both yesterday and today, and the day before, I don't usually do this, I went through all my charts, which is way over 1,000. It takes some time. It's tiring. I just want to just troll through them and just with a fine-tooth comb and separate the wheat from the chaff, try to find out where the opportunities are. And like I said, the work's been worth it thus far because they've been underperforming, so to speak, which is good on the bear side. Here's a few. And you've seen a lot of these because they just keep doing what they're supposed to do. Dynatrace, DT. This one's down today, 4.2%. Infosys, this is almost a replica of yesterday. They just keep falling. They're down 3.38%. IoT, also featured yesterday, down almost 5%. Net, Cloudflare, this is also down again, nice and hard, 13%. A lot of droopage going on here. I want to just pause for a moment at Palantir. Palantir is down a couple of percent. A couple of things to say. One, I would note there is a kind of a hammer going on right here, so this might be a short-term reversal on this. I would also point out that our dear president tweeted out high words of praise for Palantir and named their ticker symbol. He's Jim Cramer now. He put their ticker symbol in his tweet to promote Palantir. I don't know if he's got calls on it or something, but now the president has been reduced to like putting out investment notes. So he sent out a tweet about Palantir and how great they are, but PLTR just in case you wanted to be sure what to tell your broker. That may be why it's not getting super clobbered, but it's down only a couple of percent today. But I maintain my short on this one. CRWD, CrowdStrike, down again, over $17, which is great, about 4.5%. A lot of weakness going on. Another one, I don't think I've mentioned this one, unlike the others, Victoria's Secret, VSCO. This one I've been waiting for, and I got into yesterday on the short side. Let's just bang out here a little zone of resistance there. So that I perceived as an important reversal zone. So I shorted it yesterday, and so far so good. We're down over 2% on Victoria's Secret, and yay, negligee. CRM, this is Salesforce, and I have puts on this. I sold a portion of it yesterday. Shame on me. It just keeps falling. Why did I sell it? Well, the dumbest reason possible. It just seems to have gone down a lot. Well, brilliant. It just keeps falling, though. So that is a beautiful, beautiful pattern, and it's getting clobberoonied. And the puts I buy, I have all the less reason to be nervous about getting out of them, because these days I'm getting Septembers. Lots of time. I've trimmed away from many Junes and so forth, so it's way out in September for the expiration. And it's, like I said, a terrific looking pattern. I also did a little post earlier today. I don't trade Intuit, although I wish I had been short, because it's amazing. Intuit, unlike a lot of these other things I talk about, everybody's heard of Intuit. You've heard of TurboTax, you've heard of Quicken and QuickBooks. This is a household name. They've been public since the early 90s. It's like Adobe, and it's just an old timer. And I say all of that to mention that this is not some obscure little weird startup. This is a huge company, and they've lost about 60% of their value, 60, in a matter of months, a very short amount of time. That's amazing to me. I mean, imagine Nvidia losing $2 trillion worth of their value. That's kind of what this is like, although the market cap is obviously a lot smaller. Why? Does nobody use TurboTax anymore? Does nobody use Quicken anymore? I think it's got a lot to do with AI, because there's a lot of almost free products out there, new platforms, very inexpensive to run, that replicate the kinds of features and functions that a company like this creates. I'm not basing, I mean, first of all, I'm a chartist, so who cares about all the speculation? Who cares what the reason is? I'm just kind of thinking out loud about why on earth would such a huge company lose most of their value? Just an idea. Let's wrap up. A couple of other odds and ends. I mentioned not having any good ETFs. You know what? No, that's wrong. I did find one. XLB, I like this one. Look at that gap. Very clean. I like XLB. That's materials. I shorted that earlier today with a stop just above that gap. XLC, I have no position in, but it does have a cute little gap there. And I think based upon its biggest component, Meta, going absolutely ape this week, but finally pooping out. I bought puts on Meta yesterday, and again, September puts. I want to give a lot of time on it, but I think this explosive move in value is completely wrong-headed and will get reversed soon enough. Okay, a few moments left. We'll just end on the ES and say goodbye. There's the ES. Big fat mess. Fibonacci's of no aid to the upside, but plenty of aid to the downside. You can see the bounce right there. And I guess there's negotiations this weekend. They better go well for the bull's sake, because basically this is priced for perfection at this point. So as I end the week here, I've bumped up my commitment. I've got 30 different short positions, a commitment level of about 120%. Not super aggressive, but definitely kind of like bolder than a few days ago. So have a good weekend, and we'll see you on Monday and see what's cooking then. Bye-bye.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
They wanna buy me, baby, I'm too pricey. Yeah, I'm cherry, I'm nice things. I'm ice cream, I'm melting. Well, I'm high speed on a bed. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see?
Hey, we're back. We're going to hit the ground running. This is Last Call. You're watching Tasty Live. I'm your host, Chris Vecchio. He's your co-host. Astounding. We're here for the final 21 minutes of the trading day as we wind down another incredible week for the stock markets, where we're now on working on number 8 in a row, Gus? Up over 8% from the March 30th low in the S&P 500. It's been a day of meandering. We had CPI this morning. The market tried to look through it. Some conflicting headlines out of the Middle East as negotiations between Iran and the U.S. get ready to take place. Overall, stocks marginally weaker. S&P down by 0.1%. The NASDAQ up by about 0.1%. Your Russell and your Dow Jones are off by about 0.5% each. All eyes are, of course, on oil still, which, for what it's worth, with some of the headlines we've seen come out over the past hour or two, has fallen a bit from the high 90s, closer to 96 at this juncture. We've seen Treasury yields come back in as ultimately bond prices are down and trading weaker on this session. Same thing for gold, too, though. So you have stocks weaker, bonds and gold weaker, which is kind of reminiscent of those early days. Gus, when we take a look at the top options volume on the platform, the watch list here, much of it is about SPY, which 10 million contracts, option contracts traded today, which our pal in the booth, Frankie's telling us that's not that much for a Friday. Other than that, we still find that the market is holding a quite large short position, about $30 billion worth of S&P 500 shorts held by CTAs, getting ready to be covered next week. All right, Gus, I can take a step back now. How are you? How's this market treating you? What do you make of this action here as we wind down this day and week?
Oh, I'm doing good. I'm a happy camper. I'm always a happy camper on Masters Week. Got my green on today to commemorate the occasion. And yeah, I mean, the market's been treating me really well. I was getting long pretty much the entire time into the Iran slide. Individual names, broader market, all of it, perhaps to an irresponsible extent. So been able to catch some nice gamma on the big upswing that we've gotten here recently. Moving out of some of those positions, trying to get back to a little closer to neutral delta and just rein in some of the buying power, because in this environment, never want to find yourself overexposed. So yeah,
can we work on that for a second here? Because I feel like position management is a conversation that people like listening about, and quite frankly, given as someone who has missed the move, I've been directionally neutral this entire time, and we're continuing to chop between my short strikes, so I have nothing really to complain about. But I was not someone who caught the up move here over the past week. You mentioned that you're beginning to go a little bit more delta neutral now that we've seen this 8% move off the lows. Is it because it's too much too quickly? What incentivized you to change your approach as opposed to just staying long through it?
Yeah, I suppose it's a little bit of both. I don't know that I think the highs are necessarily in, but it is a lot very quickly. And I had a lot of positions going on where I had started to get into them as in a sort of buy the rumor, sell the news context, thinking that the Iran stuff wasn't really going to come to fruition at the beginning. Wound up caught holding the bag on some of those, so it was taking some averages down, and wound up with 75 to 80% of my buying power out at the peak there, at the very bottom, as I continued to load things, knowing that this is all only temporary. Most of the positions that I were taking were very long dated, 180 DTE or longer, just giving this all some time to cool, and keeping in mind that whenever we finally got a resolution here, the rip to the upside would be giant, which is what we've seen this week, and things aren't even officially over yet. So yeah, just with all of that buying power out, the delta was very high. I had portfolio delta up in the 70s at the peak there. So yeah, began to liquidate some of that now that there's some winners coming through, and just trying to get closer to 50 or 60% cash on hand as we approach these highs. It's a very headline-driven market. I don't know that we're going to hold these gains, but I'm not convicted enough that we're not to get short right now. As we start to approach all-time highs, especially if we start to test that 7,000 level again while this conflict is still going on, while we're still on this 2-week pause, that's when I'll be looking to really fire on some shorts and maybe try to flip the portfolio delta back to the short side. But yeah, I'm a directional guy, so just trying to take off some of that directional bias and make sure I'm protected on both sides of the equation right now.
You're one of our guys who covers thematic things around here. I'm doom scrolling at night on YouTube, and then I get a Tasty Live short that pops up into my feed between John Boy Media clips of umpires arguing with managers.
Love John Boy.
And loved him. Recent weeks, I know that on the way down, you had covered software. And so thinking about this from a thematic perspective, some of the things that were in place prior to the Iran war starting are still sitting around. Software is getting crushed again. Semis are continuing to surge up at new all-time highs. When you're thinking about these divergences in the market right now, what matters more? Is this an AI story? Is this a supply chain story for chips? Is there a legitimate reason to be optimistic beyond this headline market that you're calling it?
I don't know that I would say so. I don't know. This whole AI space is beginning to scare me again. We were sort of entering a breathing period with the semis, and I felt that was very warranted. We got this huge upswing, for 3 years for the most part, where these things are just going to the upside. There is no infinite growth. At some point we must let these things breathe. We must stop trying to price in 15 and 20 years into the future and let the valuations catch up a little bit to the levels that we're trading at. And so now that we're testing these highs in the semi space again in SMH, it's all a little bit sketchy to me. I have gotten short some individual names contained within SMH, Intel chief among them. I also added, I'm short some SanDisk. I don't believe that that's contained within SMH as well, but getting short a little bit of the chip space, a little bit of the memory stocks, and just feeling like we could see another little breathing period after this headline-driven run.
Yeah, S&P is up over 8% from the March 30th low. SanDisk has gone from just below 600 to north of 850 here in that same time span. You mentioned, and this is one of as working backwards. We said this a few days ago, but I think it's a good time to bring it up now. You just mentioned the PE ratios here. All right, corrections in the market can occur through price and time. Right, if a market goes up and stays there for a number of months, and then you have these earnings reports that are good that come down. Prices don't move, but the denominator moving up, you're going to bring in your valuations. And to a large extent, that is what we have seen here, where even with this market rebound over the past few days, as of the close on April 9th, the S&P 500 had a forward PE ratio of 19.6. That is right in between the 5-year and the 10-year averages of 18.8 and 19.9. So this is not a market that is looking at what the Mag 7 at a point last year had a forward PE ratio sitting near 32, 31. And right now it's back down to 23.7. So that excess buildup that we had seen in some of these names, you can really make the argument if you're a bull and talking about this on a longer term perspective, the market it was effectively as cheap as it was since last April. And last April was as cheap as it was since the lows in 2023. If you have a long enough time horizon, you're patient enough, it's a good time to start accumulating. So maybe a break of 7,000 comes, but I'm still leaning against that right now. I'm finding going into the weekend, we have this negotiation set to take place over the next few days. I like the short iron condors, if only because of where I started to operate when the volatility was a little bit wider. Sticking with them, 6,100, 6,200 on the short strikes at the bottom, and on the top for the call spread side, 71, 7,200. 28 days to expiration. I think I can wait another week here. I would be personally very surprised to see the S&P 500 up at new all-time highs in the next week before I roll out for the next expiration cycle. So not happy with myself that I missed the most recent move higher. 8% and not being on for the ride isn't fun. But the way that I was situated going into it and afterwards, it still is working. So can't be too upset with myself, Gus. Talk to me about oil, though. You're deleveraging in stocks, and that's been like a mirror image to what's happened in oil over the course of the past month. Do you find this as an opportunity then maybe to pick up some oil down here in some form or fashion, long call, short puts, or you trying to stay away from the energies?
Well, I sure hope not. I am actually quite short oil still, less short than I was, a week ago. Amid the whole run up, as I was getting long the individual names and the indices, thinking that a rebound was imminent, I was expressing that same sentiment, but against oil. USO is as the preferred vehicle, but just levering up on some essentially just gamma plays there as well. Naked puts that I do not think are going long naked puts that I do not think are going to wind up in the money, but just looking for the big crash that we have now gotten to a certain extent. Obviously, we are nowhere near the levels that we were before this whole situation transpired. But just looking for continued fall off. I had 6 of these contracts. I have them layered all the way out in dates and strike prices. From May 15th being the closest that I currently have on to March 19th of next year being the longest of them. But that was 6 at one point. It is now down to 4. If we could get another leg down in oil, I would be looking to take it down to 2, starting to take some risk off the board with those, as it is in a tumultuous spot right now. But I just am riding the long dated oil, and again, just expressing that same sentiment, whether this 2-week pause actually turns into a resolution or the negotiations this weekend actually turn into a resolution or not. I just know that oil can only stay so high for so long, and barring this turning into a, years long Afghanistan-esque situation, which I don't think is
Don't put that evil on us, Ricky Bobby.
Exactly.
Don't put that evil on us.
I don't think that's really in the equation at this time. I think that sometime in the next 180 days we see oil take the giant swing down to 70 or whatever, and I'm able to get out of all of these at a handsome profit. The May 15th, the 35 DTE are the only ones that are really scaring me right now. But I put those on far too early, to be candid, and they are down so far that it's pretty much a lotto ticket at this point.
It's so funny that you mentioned May 15th, because right now all of my exposure that's been sitting on the long side that I've accumulated over the past month ends on May 14th. And that I'm not confident about oil staying up thereafter, given what we know at present time. And I haven't necessarily been keeping it on through the long calls. It's been through short put spreads. It's been the short iron condors. There's just, I have a difficult time believing, given the amount of destruction and how oil actually moves through the global economy, that we would see oil crash back down into the 70s, even if there was a ceasefire. The market is still going to be paying for the oil based on what it can get its hands on physically right now in the short run, not promises of oil that may come down the line if all the parties hold true to the ceasefire agreement, which is a big part of this question, because there are a number of parties involved here. It's the US, it's Iran, it's Israel, it's the Houthis, right? So we'll see how this evolves. But the end of the week here, we're ending with a little bit of calmness, I could say. It's not a great day for stocks, but we also have had an incredible 2-week run where we've got back to 6850 in the S&P 500. Have you been looking at the shape of the vol curve here over the course of this past week, how it's moved from this janky backwardation type of situation to a little bit more of a normalized contango when you go further out into time? Is that giving you confidence to, look for a dip perhaps to buy and add some long exposure?
I would say so. I have had my eyes on vol, and yeah, obviously this contraction that we've had here is more than welcome for me with the long bias that I've had going on. As far as looking to buy some dips, I don't know. These levels are very scary to me in the broader market. This 6850 level, I really hate it to be quite frank, and it's why I'm trying to get a little more reined in, bring everything back a little closer to neutral, because it's just, I don't know. I think that 2 weeks from now we could just as easily be at over 7,000 as we could back at 6,500. There's so much uncertainty. There's so much headline risk. And in a situation where we're back at 6,500, suddenly VIX is back at 35, and we're back in this strange, weird backwardation situation. So I don't know if confidence is the word that I would use, but it has crossed my mind for sure.
Yeah, you mentioned where we could be over the next week or so. Over the next 7 days, the April 17th expiration plus minus 112, 113 points. So getting a run back towards 7K wouldn't be out of the equation. Also, the other hand, getting a more significant drop back into the low 6,700s wouldn't be either. One standard deviation move, as indicated on the platform, 66 up to 71. So the world is our oyster right now. Two-way action is, for the foreseeable future, because it's such a headline-driven 5-minute macro market. I'm taking it day by day and not being married to any sort of long-term view, except for my concern about inflation, because I was alive in 2022 and watched what happened when the supply chains got all screwed up post-COVID. So I'm buying lots of rice and beans and keep them in the basement. But beyond that, we can't trade those here on the platform. So, hey, by the way, we're at the halfway mark. Josh, can you toss the commission rebate up on the screen? If you've been thinking about making the switch, now's the time. For the next 30 days, you get double your commission back just for trading the options. The way that you do, it's not a deposit bonus. It's a trading bonus. The value scales with your activity, which means serious traders get serious value back. Tastytrade.com. We're going for the commission rebate here. Double 2026. Double 2026 is the promo code. Be sure to use it. Gus, what's your favorite trade going into next week that you're still keeping on the book? Have you been neutralizing your portfolio delta over the past days, taking off the longs as we've scaled into a pretty sharp rally? What is your most confident position going into next week, knowing that you're raising cash here?
That's a good question. I keep everything fairly equally sized to express the equal amounts of confidence. I do like these SanDisk shorts, I must say. I was very aggressive with these, looking for a dip below 750 ideally, which sounds insane talking about a stock that's trading at 850, but the last few times we've seen this approach the 800 level, it's down $120 in 4 days. So I just feel that at these hyper elevated levels, this thing has ran upwards against all market conditions over the past few weeks. And it's just, you see this price action consistently with SanDisk. When I'm on Risk and Reward with Errol, I refer to it as Rivian price action, because this is what Rivian loves to do, these giant spikes into dramatic fall-offs. And if you can catch those channels, there's a lot of money to be made. So I'm high on the SanDisk shorts. I also picked up some CRM, some Salesforce longs earlier today, a very disproportionate risk profile. Not sure how confident I am into next week specifically, but into the next month, I do think that this is a little bit oversold, and I'm looking for a little bit of a dead cat bounce to take advantage of here.
Yeah, I mean, we were talking about the software stocks a lot at the end of February when we got that Citrini research note, future headlines from 2028. What does the AI revolution look like, assuming that we get that far down the line? If it works out as well as people are saying it would, could that mean mass unemployment? And software took a beating. Had this weird counter trend rally, but then we got this. I don't know if you saw this story last night on Bloomberg. It actually popped up in my Reddit feed. But Bessent and Powell called a meeting of Wall Street executives to talk about the risks that Anthropic's new Claude Mythos model poses to the financial system.
I didn't see the Bloomberg article, but I am very plugged into Mythos right now, and all of the risks that it could present from, yes, the financial sector all the way to cybersecurity and everything else. And there's all this stuff they're keeping it contained, and it's breaking out and emailing Google employees while they're eating lunch and saying, "Hey, I broke out." And this Mythos thing is there's been no shortage of iRobot jokes thrown around over the last 3 years, but Mythos is really making me feel like we're pushing that envelope.
And it's like the one with like a name that sounds very sci-fi. Like Grok doesn't sound sci-fi. ChatGPT, but Mythos, the AI name Mythos. Yeah, I don't know. That kind of tracks. The simulation kind of sucks right now, Gus. So you're buying the dip here. And I'm looking at the software and they're talking about Mythos in the world. So much of the software ETF is Microsoft, it's Oracle. It's CRM, it's Intuit. What makes you confident about playing a counter trend bounce here in some of these names that have just been destroyed this year? It feels like that's a little not very Gus from what I know about you.
No, I like to try to catch a falling knife on occasion. It just it's really just it becomes I like to find situations where there are companies that have been continually selling off that I strongly believe are too big, too well integrated to really fail. And I think that those oversold spots are somewhat easy to identify. I have some successful long meta going on in the portfolio right now that I put on in sort of the same context. I think that Microsoft is absolutely nearing a buy as well. I've done this as I sit here looking at this. I did this exact same thing with Netflix as well, as Netflix began to come down and test the 80, 85 level. Just these companies that are, really well established, are entrenched in culture, and especially in the case of a Salesforce, a company that is very hard for its customers to switch away from. Once a large corporation is on Salesforce, it is quite the arduous task to make a move away from it. So I just feel that we're nearing a point. Salesforce is at 3-year lows, like March of 2023 lows. It just feels like a little bit too much to me. Even if the recovery, the larger, broader recovery for Salesforce is not imminent, I just think that we're at a level where, with the time horizon I have on these contracts of 49 DTE, somewhere in the next 30 days, the dead cat bounce to 175, 180 comes through, and that'll present a favorable exit for me.
It's crazy that this is now worth half of what it was back at the start of 2025. And there were points this time last year where it was doubled. And it's the case for a lot of these companies right now, but I see the appeal, 63.9 IBR. We were in this interesting environment for the past few weeks, even in February, where when you look at individual equity names and their level of realized volatility compared to the top line of the index was experiencing a heck of a lot more vol. The dispersion environment, if you will, where you get a lot of chop in the S&P and the NASDAQ, but beneath the surface, you're getting a lot of significant movement depending upon what name and idiosyncratic risk you're examining. So it's very much the case like that right now in some of these cases where, Nvidia, for example, Nvidia IVR is 2.7 right now. That's nothing.
That is nothing.
It's absolutely. That's nothing.
I hadn't looked at that. That's hilarious. 2.7 on Nvidia. This is Nvidia we're talking about.
The Strait of Hormuz is closed. Global chip supply may come to a halt. Nvidia has a 2.7 IVR.
To the end.
Yeah, go ahead.
No, go ahead.
I insist.
Well, I was sort of going to derail the topic. I was going to say, to the end of tech stocks, I did notice earlier today that House Democrat Josh Gottheimer just filed earlier today. He has loaded $750,000 of Microsoft calls, in the money Microsoft calls. Very rare to see the members of Congress start slinging options. So that always kind of raises some alarm bells when I see that happen. But there is sentiment within the government, our honorable government, who only cares about the well-being of their constituents, that perhaps good things could be imminent for Microsoft.
Yeah, I think the market may have looked at his unusual whales track record and been like, this isn't one of the guys who beats the market. This means nothing.
It's possible. He's a volume trader for sure.
Yeah, well, that's our close, and we're here at a market with a close that is a meander. The S&P 500 barely down 0.1%. We have 68.54 here on the screen. Volatility, VIX below 20. Oil prices come back down towards 96. It's been a great week and a half for the stock market, up over 8% from the lows that we had on March 30th. But a big weekend coming up, which is why on Sunday at 5:55 Eastern, 4:55 Central, we'll be back on air. First call resumes. Gus, I won't see you there, but I'll see everyone else there. Hope everyone has a nice weekend and good luck trading.